Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. One teacher, a million destinies. MV Sir, live at NDTV Yuva. New year, new power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. Brent is still at 106. One ceasefire has been extended 3 weeks. That's one between Lebanon and Israel. But nothing's passing through the Strait of Hormuz, and emphasis has disappointed.
Yeah.
That's a quick recap, right?
Should we end the show?
No. So much more to go. Yeah.
Frankly, just that, but just wondering, just the actions that are happening from Donald Trump, it almost seems that the end game of this has to be a ceasefire and not another conflict. We hope for that, but it also seems logical, right? That it will be a negotiation.
You know what's happening in the strait on ground, this naval standoff is turning out to be more problematic, because here is where it's at, what the actual fight is. If I put it very simply, Iran is saying anyone crossing the strait has to take my permission. And the US is saying anyone crossing the strait has to take my permission. So suddenly, that's what it has boiled down to. And I suppose when there is some kind of an understanding, perhaps between the two, that's when it ends.
Yeah. So again, but effectively a negotiated understanding, hopefully not more human casualties.
I think
so it might not escalate is what you're saying.
Yes.
If anything, the statement that he made on nuclear is the most sensible statement I've heard from Donald Trump over the last 4 weeks, at least.
Which is?
Which is that, by you asking me that stupid question, nobody should use nuclear weapons.
Yeah. So I suppose that he has reiterated right from the start, so that is good. But having said that, global cues are not looking positive, I would say, in any way. US markets closed with losses as the naval standoff on the Strait of Hormuz has worsened. Indices were off their highs during the trading day in the US and ended with losses. S&P 500 about 0.5% down. The Nasdaq was about 200 points down. Futures are also showing a similar kind of a trend, and I would say mixed at the most. Intel stocks zoomed 15% after Q1 results beat expectations. So some news coming in there. Job cuts is the other one. Meta is set to cut 10% jobs as AI adoption ramps up. 8,000 jobs will be impacted, and they're not the only ones. Bond yields, meanwhile, moved higher as inflation fears emerged with oil prices rising. 10-year at 4.33%, and oil prices spiked as US-Iran are now tussling over control of the Strait of Hormuz. Brent, when I saw it last, was 106. Yeah, there you have 106.22 for a barrel. It's actually worrisome, and that's what you're going to see play out on your screens today as well. Asian markets, let's pull up Asian markets, and there the Nikkei is doing okay, about 0.5% up, but Hang Seng in Shanghai seeing a bit of pressure. India implied is showing you another cut at open today. So let's just pull up the India implied. Okay, now, so there you have 83 points up in the green. So maybe you're going to have a bit of a relief over there, perhaps. But here's what Donald Trump is saying. Donald Trump is saying lots of things, okay? So, but speaking to reporters at the White House, we've picked out the part where he's talking about control over the Strait of Hormuz.
I gave them a break, and remember this, I want to make the best deal. I could make a deal right now. Do you know that if I left right now, we had a tremendous success. It would take them 20 years to rebuild, but I don't want to do that. I want to have it everlasting. I want to have it where they never have a chance to get it. I mean, the way you asked that question, yeah, I did say it. I thought it would take 4 to 6 weeks, and I was right, because at the end of 6 weeks, at the end of 4 weeks, their military was decimated. So are you saying? But now what I'm doing, I can't tell you that. I don't want to put that kind of a timetable on it, but it'll go pretty quickly, and we'll have the strait opened up. Now, right now, we have it closed. We have total control of the strait.
Yeah, that's what it comes down to, isn't it? Control over the Strait of Hormuz. Peter McGuire, CEO of Trading.com, joining us on the show this morning. Peter, very good morning to you. Is that becoming the big factor to really watch out for from an emerging markets perspective, at least? When does the strait open?
Yeah, exactly right, Tamara. Good morning and greetings from Sydney. I tell you what, that's the unknown and how it rolls from here. I mean, you've got crude, as you mentioned on your prelim, 106 for Brent. You've got the WTI, what's that, nearly 97. So it seems to be edging further up, and it's been a big week, moves to the upside. And I think the prolonged issue, how long is this going to run for? Is it going to be over? We thought it might be by end of month, but it doesn't look even close at the moment. So, yeah, it's very much a work in progress, and we're all observing as far as the dynamics at play.
Morning, Peter. What happens to the rest of the commodity basket as well? because there has been focus on the metal pack as well, and supply chains to a certain extent for other gases also getting impacted. You watch the space very closely, and also the currency pairings. What are the trends that you're seeing in these asset classes?
Well, good morning, Alex. A couple of things. First off, you got US dollar under 99, so there's the first point. But it was under 98 for a little short blip during the week, so it's moved up and it's had a little bit of further, strength to the upside. First off, if you're looking at copper, you're sitting there at that 13,355 sort of number, which is relatively okay. I mean, it's quite strong, and when you start to approach 13.5. You've got aluminium at 3,600 plus. And then if you're looking at currencies, well, they're very flatlined. I mean, we've seen nothing happen really with the yen, still at that 159 handle. It seems to be running out of steam. It's just in a very tight channel, no impact as far as BOJ. Aussie dollars at 71, and you've got a pound languishing at 134 and a euro at 117. So I think the focus is very much, where is gold playing under 4,800? Is there a trade there? And certainly silver at consolidating at about $76.
Yeah. Peter, there's also this rush towards AI plays yet again, and it's showing its impact in the way job losses and Microsoft, Meta, each of these giving some large number of pink slips, if I can use that term loosely. Do you reckon the force of the US markets will dwarf some of the others if the conflict were to drag on and oil prices were to stay higher?
Yeah, I mean, this is a major concern both domestically and internationally, Niraj, good morning. I mean, as we know, you've got jobs starting to be created from AI, the impact that's going to have across the whole economy, whether you're going to start to see a big transition to manufacturing jobs, where do those jobs find new opportunities? And then if you're looking as far as where we go with crude, the uncertainty is, does it edge higher? And if things do edge higher, and you've got to say there's every possibility, you're looking at that 110 to 115 sort of handle in the short to medium term, unless you see something happen dramatically from both sides. And that doesn't seem to be it seems to be very much, a mismatch of strategies at the moment.
It's a fair point. Peter, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you, Alex.
Let's talk about what happened in trade yesterday, and perhaps the reason why you're seeing the possibility of an uptick today, because you've seen 2 days in a row of selling. Foreign institutional selling intensified in trade yesterday. Equities dropped, of course, and you had FI net sell number of 3,255 crore thereabouts. Domestic institutions buying to the extent of 940 crore rupees. The Nifty 50 dropping as much as 200 points, ended below 24,200, actually at 24,173, below 24,200. Broader markets falling less than the benchmark. You had the Nifty Bank that dropped about 1.4%. That was led for once by PSU banks, and after that Union Bank result, which was a bit of a disappointment to say the least, it dropped as much as 8% in trade yesterday, and the rest of the pack also bore the brunt of selling, or 7.4%. The Nifty IT also dropped about 1.2% ahead of Infosys results. And I guess to a certain extent, the street was pricing some of that disappointment that you eventually saw for Infosys, and we're going to talk about in more detail in. The Nifty Pharma was the bright spot, gained as much as 2.4%. We were speaking about this on the closing show. The fact that there seems to be a little bit of a sector rotation at play, and also the defensive demand for pharmaceutical companies coming through. For Dr. Reddy's Laboratories, of course, there's the added element of the GLP-1 angle in Canada. So that was the reason why this was the best performing stock on the Nifty 50 yesterday. Earnings continues to dominate individual moves, and that is likely to be the case today as well, Neeraj.
Yeah, I mean, and you would probably expect that when the markets are trying to trade with some bit of normalcy, you would probably pay heed to earnings. Let's see. I mean, our start doesn't quite seem to show that earnings are going to take center stage, or maybe earnings are not having too much of an impact on the start. Let's wait and watch if that is how it turns out to be. But global markets, it seems from the activity in the global markets that they are pricing in some sense a worst case scenario already, and a potential off-ramp, because that's the behavior, the texture of the global market seems to tell you that. But I must tell you that smart money, at least in the last couple of days, are talking of hedging the long positions in India at least with some option strategies as well, because while there may be an off-ramp 1 week, 2 week, 3 weeks down the line, if oil prices were to stay higher and therefore the averages for even the current quarter stay higher, then that is not a positive for India. Already we're seeing earnings cuts becoming the norm, right? Amongst the most bullish names also, JP Morgan has also come off a little bit from their prices and in the EPS estimates, so keep that in mind. And we're going to talk about this in details. I won't dwell too much on it, but every day we are having one accident. In today's case, it's very likely going to be solar stocks. So keep an eye out.
Yeah, I mean, you know, the trade of hope on solar stocks is just very, I think it's unfortunate, because you talk to these companies and they'll invariably come and say, no, our business is fine, and you know, we're adding more capacities in the United States, our tariffs are not going to really hit, and then there's another round of tariffs. Even in this round, it's India, Indonesia, and I think China, Laos. The highest tariffs are on India.
Yeah.
So this is when trade talks have just wrapped up in the United States yesterday.
Yeah.
So
yeah, one would have hoped, right? I mean, so effectively notification of the earlier ruling, one would have hoped it gets pushed, but no, US is right out there doing this over and over, and definitely impacts the solar stocks today.
Yeah, so that I think it's there in the backdrop. The whole trade deal, which was a pain point, which we thought we'd sort of wrapped up a few months ago and neatly tied in a bow.
Simmering, right?
It's not. It's there in the backdrop.
Both of these things, both the trade deal as well as AI, because look at IT earnings, ultimately it is that deflation playing out.
Yeah.
So those concerns remain in the backdrop of this war.
You know, AI is like the chronic backache,
Yeah.
and the trade deal is like the virus the cold you're about to get.
That's a good way to describe
And
it.
the Strait of Hormuz problem is the headache you have right now.
It's the migraine.
The migraine.
The migraine you have right now. If I had to look at all of these ailments from a market's perspective. No, but in terms of factors to watch out for today, the Nifty 50 is currently fighting to hold the psychological 24,000 mark. Technical indicators shift from bullish momentum to cautious consolidation with a cautious sell on rise vibe. The Friday factor, you have to look at that. Traders usually don't want to carry long positions into a weekend where a war could escalate. Having said that, the Friday factor was not being seen last Friday. So let's look at what happens this time around. Wall Street's record close provides a positive global tailwind. The domestic IT hangover from Infosys guidance and $100+ oil remain a significant drag. The Nifty has slipped below its 50-day EMA, which signals a weakening medium-term structure. Support band at 23,900 to 24,100. This zone is critical. If the Nifty closes below 23,900, the near-term trend officially turns bearish, and resistance ceiling 24,500 to 24,600. This range is now a fortress for sellers. The 200-day EMA, that's 24,800, remains the ultimate target for bulls, but is currently out of reach until geopolitical tensions settle. For the Bank Nifty, it's showing signs of momentum softening as it slips below its 100 and 200-day EMA. Resistance at 56,700 to 57,000. Support at 55,800 to 56,000. A breach of 56,000 could lower long unwinding move towards 55,000. So those are some of the factors, but Puneet joining in with the FNO setup this morning.
Well, thank you for that. Definitely the implied open indicates a start in the green. 24,200 could be yet again conquered, but we need some historical evidence on a consistent basis to form that trend. So 24,000, as you rightly said, continues to be one of those levels that the market continues to watch. And the Bank Nifty also, you might see the market moves replicated on the benchmark on this index as well, but largely earnings from Axis Bank tomorrow, and they would be hopeful for the same, because we've seen ICICI earnings being decent as well, and this will be something to watch at least in the near term for the banking index. So 56,300, we've consistently highlighted that the next 800 to 900 points isn't a support. So 57,200 and 400 continue to be the long-term ones, and the earnings will be the key deciding factor here for the index. For investors, yet again, in the cash market, but they have maintained their positions in index long between that 20 to 22% mark that we've been highlighting consistently, at least till the second week of earnings as we go through it. The put call ratio also decelerated from the highs, so it's now down to almost a neutral position there. The longs have been built, the puts have been cut at this point of time, so at 1.08, very close to a neutral position as well. And open interest distribution throughout this week has been very, very consistent. 24,800 for the calls here, and 24,000 is the other one that we've seen consistent put being built up as well. And for the open interest losers also, there's been a massive change in a bunch of stocks yesterday as well. As we went through the market positioning, Glenmark Pharma, Hyundai Motors yet again saw covering of shorts with a 43% change in open interest. Longs being unwinded for Tata Elxsi post week results, and Avenue Supermarts post results has started to see that build up, but yesterday was a day where longs were unwinded in this position. So 4,500 continues to be a level that we watch in the near term yet again for this index. But as you guys rightly highlighted, IT will be one of the indexes which might be under pressure yet again. So a washout quarter essentially for the top 5 to 6 players.
Yeah, absolutely. But talking about that, let's start with Infosys. Top stock on my watch list. It's a disappointment. There is no surprise there, but I think you're going to see a negative reaction, or maybe some of that baked in yesterday. The stock was already 2.5% down yesterday. So here's how the numbers paired out. Revenue was up 2% at 46,402 crores. EBIT was up 2.8% at 9,743 crores. EBIT margin was up 20 basis points at 21%, and net profit was up 27.8% at 8,501 crores. So on the face of it, numbers look okay, right? But look at what happened with the Infosys ADR overnight, down 7%. Here's what's not working. In constant currency, the revenues have actually dropped minus 1.3%. That's Q on Q, quarter on quarter, and which is below estimates and the weakest in 4 quarters. The FY27 guidance at 1.5 to 3.5% is also below what was expected. A 2 to 4% growth guidance was expected. At the lower end is also below the Q3 upgrade band, which is 3 to 3.5%. March end delays have been flagged. Headcount for the year is down about 8,440, and execution spillover risks into Q1 remain. There's also no fresh AI revenue disclosure despite high expectations. Earlier they were talking about AI revenue disclosures. It's not happened this year. And in terms of FY26 constant currency growth at minus 3.1% versus FY25 at 4.2%. Shows the deceleration trend. In fact, let's listen into Infosys CEO Salil Parikh's remark on the guidance growth.
As we look ahead to the financial year 2027, we see large opportunities in AI services. We also see continued competitive intensity, and we see an AI productivity impact, a combination of these things. With a clear AI strategic roadmap and a real-world toolkit of Topaz Fabric, we are well positioned to support our clients' transformation, technology, and operations objectives. Our revenue growth guidance for the financial year 2027 is 1.5% to 3.5% growth year on year in constant currency terms. We expect acceleration of growth in financial services and in energy, utility, resources, and services vertical. Our operating margin guidance for financial year 27 is 20% to 22%.
Okay, so that was the Infosys story. It's a thumbs down. IEX are inline results, but I've given it a thumbs up. Revenue growth is led by 24% YOY growth in trading volumes. So 71.71 lakh RECs have been traded during the fourth quarter, which is an increase of 6.1%. What's REC? It's renewable energy certificates. That's what trades on this exchange. The impact on PAT is due to lower other income, and coupling overhang continues. So that is always there. That's one problem for the company, which has which is going to constantly be there in the backdrop. But having said that, the numbers were decent. Revenue was up 22.5% at 174 crores versus 142 crores. EBITDA was up 23%. EBITDA margins were up 41 basis points at 85.68%. Net profit up 10.8%. Solar stocks are the other one. So here's what's happened. Anti-dumping duty has been imposed. US has imposed preliminary duties on solar cells and panels from 3 nations, India, Indonesia, and Laos. For India, the duty rate is at 123.04%. It's 35.17% for Indonesia and 22.46% for Laos. So look at the stark difference there. India, Indonesia and Laos supply 57% of US's solar module imports, at least in the first half of 2025. And India's solar exports to US in 2024 were 792.6 million. So it's already jumped 9 times versus 2022. Which are the companies that will be impacted today? Waaree Energies is the largest Indian solar module exporter to the US, has major US exposure. It gets 20% of its revenue from the US. Vikram Solar is another one. It was a key opportunity market and contributes 16% to overall revenues. Premier Energy's growing export-focused player. US demand slowdown could impact growth plans, and there may be a smattering of others as well. But the fact that you have such a high tariff compared to the other nations in that list is also a bit of question mark. There's no confusion that the US is wanting to discourage solar imports.
Yeah, it seems more like a policy thing than anything else. I've got
just a follow up there. So they've consistently maintained that all of these nations import some of the pieces from China and then re-export, and therefore, in some sense, egging companies on to, how do I say, manufacture in the US. So some companies are making that start, but I think it's some time away.
Localization
No,
is key.
that's what Waaree, for example, always comes and says, that we're beginning to do that and we're not taking stuff from China anymore. But before you get that message across and actually get those tariffs down, the fact is that there is an intent to discourage, which has been reiterated time and again from the US.
In Waaree's case, now they can't use their own cells because of this, which they would ideally like to for better margins. So therefore, they also get impacted, not as badly as some of the others, but everybody gets impacted.
Perhaps it's also a good move from the perspective of getting localization done in a very critical area for us here in India as well.
No, but these companies want to export, right? That export market.
But then to Neeraj's point about Chinese imports to fit into some of these modules, maybe the localization in India increasing will be beneficial.
Yeah, the government is trying to do that, and just, sorry, not extending too much on this, but we did a fabulous conversation which will come up on NDTV Profit with the Value Quest team, where they've explained beautifully how the government is moving piece after piece up the value chain to try and protect and encourage production back home in India. It's actually something that the government is doing very correct.
And last point from my side.
Why not?
Which is that
it's important.
Solar is one part, but this is actually not just solar. It's every piece of critical equipment. Even if you talk about semiconductors, 3-4 years back, the argument was, why will India start manufacturing semiconductors? We're too late. But the government started at a very low point in the value chain and started building up. And you're going to see the fruits now.
The final fruits will be a while away. We're still at baby steps, but there's no choice. Right now, it's not a debate anymore.
I've got 3 stocks on my list, all of them earnings, and Bluestone stood out to me. Solid set of numbers. You can call this a turnaround quarter for the company. Inventory gain is also seen of 52 crore, but you had same-store sales growth as high as 34%. Repeat revenue ratio at 56%. The average order value also rose, understandably, because of the underlying commodity, but that stood at 53%. Remember that a large part of that revenue growth is on account of the aggressive store expansion that has been taken since IPO. But take a look at these numbers. They look pretty robust. Revenue increase of as much as 48%. You have EBITDA that's standing at 126 crore rupees compared to 27 crore rupees in the comparable quarter. And the margin stands at 18.4% compared with 5.9%. As a result, they posted a net profit versus a loss of 51 crore rupees, net profit standing at 32 crore rupees in the quarter gone by. There are a couple of notes that have come through that are positive as well, and they're marking this improvement in same-store sales growth, which is actually critical, and also the mix that has been fixed. It's up as much as 5.8 since listing, but you should watch out for this at the start today. Mahindra Logistics has continued with an improved performance for a second quarter in a row, and more than anything else, this should be taken positively by the street because it's reported a second consecutive quarterly profit. The margins have expanded further and stand at 6.27%. The PAT has actually doubled on a sequential basis, so there's an important improvement in the bottom line performance on a sequential basis as well. The gross margin has also seen an improvement. Very quickly, that snapshot, 14% uptick in revenue. EBITDA is up as much as 45%, and the margins are also up. I mentioned that, and the PAT number stands at 20 crore rupees. UTI AMC is the one thumbs down on my list, and their earnings have gotten impacted by treasury losses, which ballooned quite substantially to 176 crore rupees compared with 10 crore rupees in the comparable quarter. They've actually reported a net loss in the quarter of over 60 crore rupees, if I'm not mistaken. 67 crore rupees is what I saw it at. There you go. Compared with a net profit of 121 crore rupees. And the total income is down as much as 22.4%. More than anything else, the core revenue falling, or the revenue growth, which is standing at just 4%, is not very good. Of course, it was a challenging environment, but you've seen other AMC companies post better numbers.
Yeah, or at least steady. This was far from it. And in fact, sorry, the bad news continue here as well. So Cyient, the first one on, and you know, and not that LTI had a really rah run, but look at Cyient. Revenues are up 4.2%, which is okay, but the EBIT margin down about 95 basis points at 8.08 versus 9.03%. Most companies are defending margins, so in some sense that's a bit of a disappointment at Cyient, and PAT down 40.3% at 54.8 versus 91.8. I think the Morgan Stanley note summed it up well, so I'm gonna use that. They maintain an underweight, which is fine, the target of 1050, but they say that the Q4 was lower than expectations. The decline in strategic units was much sharper than estimates. They think while the outlook is encouraging, but they see that as a tall task in a volatile and a challenging macro environment, and the buyback may lend some support and the stock trades cheap. The question that I only have is, it may not be prudent to buy cheap, it may be prudent to buy growth, and therefore people may not come in and buy something necessarily that is cheap because it could get cheaper. So that in mind, don't expect fireworks in Cyient. Himadri specialty chemicals, and the reason I chose this because we spoke about how chemical companies selectively are starting to see some green shoots. Look at these numbers here. Revenues were up 13.5%, and while operating profit margin was down 180 basis points, the profit after tax was up 29% at 201 versus 156 crores. I think the margin hit will hit it, but the end product prices might come to save. They've commenced a new anode material production facility in West Bengal, which has an installed capacity of 200 MTPA. Maybe that also helps the stock's outlook in Q1 and Q2, or maybe FY27. So keep that in mind. And well, we should end with a slightly bullish note. So ending with cement, the JP Morgan note on cement, they note that cement prices have increased about 10 to 25 rupees per bag in the month of April. They believe further price hikes appear very likely, and they say non-trade segment continues to do better. So keep an eye out for that. Just one last thing, because yesterday we had OFSS do very well, right? And not OFSS, sorry, the global G Vernova do really well because of what happened to the global parent. Now what's happened is that Siemens Energy has raised the full year outlook, and in the preliminary results released for Q2 FY26, I wonder if therefore Siemens India also sees some bit of a collateral move there. So just keep an eye out. I haven't studied it really, so don't quite know, but just read this flash, so I thought just mention that. Keep an eye out for Siemens as well.
OFSS also did well yesterday.
OFSS also, but not because of the global parent.
OFSS did do well as well. The only worrying thing is the downgrades on India as an equity market which have come. So there was HSBC and there's JP Morgan now as well, and we'll talk a bit about it. We'll take a very short break. We're coming back and telling you why JP Morgan has downgraded India a day after HSBC has. Meanwhile, going into that break, the implied is showing you maybe some pullback after 2 days of profit booking. Is the market going to be in buying mode? Well, even that gap up is quickly narrowing. So we come back with all the latest and of course an exclusive story. Don't go away. I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and me.
Welcome back. We told you about the second downgrade of Indian equity markets after HSBC, and this time it's JP Morgan Asia. This is a note by Rajiv Batra. Says lower allocation in Indian equities to neutral from overweight. Structural story is intact, but tactical headwinds warrant patience. Valuation gap is narrowing but still stretched. Energy supply disruptions are likely to pressure earnings through multiple channels. Sector analysts have cut FY27 estimates by 2 to 10% across key sectors is what he's saying. They've also lowered the calendar year 26 estimates and 27 estimates. MSCI India EPS growth by 2% for 26, 1% for calendar year 27 to 11 and 13% respectively. Fundraising wave faces near-term hurdles but is likely to resume once conditions normalize. Such dilution caps upside. India's large cap index has minimal AI, data center and semiconductor representation relative to the US, Korea, China and Taiwan. That's really, I think that one line sums up what the main pain point is. Couple that with monsoon risks. They say it's threatening rural incomes and food inflation. They see better opportunities elsewhere in emerging markets until valuations derate further or earning visibility improves. They're overweight on financials, materials, consumer discretionary, hospitals, defense and power. Underweight sectors are IT and pharma. And they're talking about their bull, base and bear case targets for the Nifty. So the bull case is 30,000, base case is 27,000 and bear case is 20,500. The drop from where it was earlier is also astonishing. So the bear case, I'm just going to pick that one up. The bear case earlier was 24,000, it's dropped to 20,500 because you're already actually at the bear case. I'm going to take a quick word on this from Parag Thakkar and Kush Bora, who are there with us in our studios right now before we get to a deeper look at what's happening with IT. Parag bhai, so JP Morgan, you may agree, may disagree, but the fact is it's the second global brokerage who is looking at India in a less favorable light. And some of the pain points are similar.
Yeah. So the pain points are very clear, right? First of all, the duration of this crisis, and so energy prices remaining higher, and energy availability also, because if the longer it stays, it will become more problematic in terms of availability of energy also, LPG, and so that is one. Second is of course monsoon predictions are not that great, and third of course we don't have AI plays enough. So all these factors.
You don't have AI, you don't have data center, you don't have semiconductor representation in the Nifty at all. Absolutely. You have outsized IT representation.
So and that is also coming down significantly, right? The IT weight has come down in the Nifty. So I would say that yes, India is a typical conventional good macro story. That macro is now getting challenged due to these higher energy prices. But what I would say is that if the duration of this crisis is not that long, I mean not say more than 1 month from here on also, if we don't have this crisis, if we don't have oil above 100, then I think many things will change, and then this bear case scenario will not play out.
Yes, but there's also a base case and there's a bull case. You saw some of those levels, Kush. Any commentary there?
The bull case at least ties exactly with mine, right? I mean, 30,000 is something I've been talking about. He says 27,000 as a base case scenario, mine is slightly higher, 28,500. This is a bit of a concern.
The bear case?
No, not the bear case. The number of voices turning a little cautious is definitely. But if I may look at it just a little positively, right? I mean, when everyone starts to turn bearish, perhaps, any kind of positive news, any kind of positive trigger, will be good enough to push those levels higher and, even perhaps to slightly higher levels of about 28,500. So I remain optimistic. For now, the stock specific action is galore as indicated by this mid segment. But like I said, when everyone turns bearish, perhaps it's the time to buy.
Yeah, but technically, they're not bearish because they are not saying that from 24,000 we will see 21,000. They have trimmed their upside targets because they are reducing their earnings estimates. So technically not bearish, technically less bullish.
Fair. Yeah, I should have used the word caution, not bearish. Yeah,
they've dropped their bear case target also, no?
Yeah, but that is the bear case target. Their base case, which is what you work with, is not a bearish outlook. It is a less bullish outlook than what was previous.
I mean,
27,000.
Potato, aloo, however you want to say it. But
frankly, a bearish note is somebody saying that I'm going a sell on Indian equities.
No, and I think they've not gone sell, but they have downgraded, and they're the second one to do so. So that's
no,
where.
But I take that point. The base case is still 27,000, which is okay.
Which is lesser than their earlier base case.
Agree.
So whichever way you want to look at it.
One quick point on that. 33,000 was an ultra bullish case from anyone I had heard. Even my bullish outlook, 33,000 was an ultra bullish case even at a normal scenario, right? So from that perspective, I think this is perhaps rationalizing expectations more
but
than...
then depends on when they had a 33,000 bull case in the first place. All right. So one of the reasons why Indian markets, at least IT sector, may see a bit of pain could be Infosys. And there's now enough data to understand what IT has done this quarter. India's IT majors delivered a weak set of Q4 earnings, with most companies reporting largely flattish numbers and maintaining a cautious outlook. Puneet is giving us a recap of how IT heavyweights behaved.
Well, thank you for that. We've discussed, of course, Infosys as well. Just a roundup of what's happened, just 5 key aspects that we are looking at. One has been that, the numbers have been flattish and the commentary has remained weak. That's one. Of course, Q4 was weak as well, but the guidance has now started to turn negative also for the likes of Wipro, which is guiding from -2 to 0% of revenue growth in Q1, and they give guidance on a quarterly basis. While for TCS, reported the first ever decline in dollar revenue for the first time since the listing back in 2004. Also, Tech Mahindra, they reported strong results, so that's the only one where essentially the TCV has been very strong. The order book and the deal wins have been very strong for this year specifically. So it's the only one where the deal wins is far higher compared to the others, and in its 3-year transformation program. Now, when you look at the CC revenue growth, which is the dollar revenue growth that we see across economies and currencies, you've seen this is comparison of estimates versus the actual. You've seen Wipro show a decent performance, but that's also been quite weak. So, and Infosys is actually reporting a negative 1.3% number in Q4. Rupee revenue also, there has been some benefit because of rupee depreciation. Hence, you're seeing TCS outperforming this metric. So is Wipro and Tech Mahindra. But largely for a year, it's been very dismal in that sense. When you look at the EBIT growth, now this also is quarter-on-quarter for Q4. This will show a higher growth for the likes of Wipro because last quarter you saw that major impact coming in on the labor code, and hence this number does put in some benefit of doubt on that. Barring that one-off, you're seeing a flattish performance as well. Finally, in terms of deal wins, we spoke about that deal wins for certain companies like Tech Mahindra has been very strong at 1.07. While for HCL Tech, it was a horror quarter, as we mentioned a couple of days ago, and hence you saw that 10% correction on the stock. Finally, in terms of AI revenue, we only have a couple of companies that reported now. Infosys has refused to give that even after they've given the number in December. So TCS reported, of course, AI revenue of almost $2.3 billion, so that HCL Tech has given here. But finally, to wrap it up, the outlook. Tech Mahindra seems to be the one where out of the 5 companies, there was a lot of positives, but largely the experts have been highlighting a lot of it has already been priced in. In terms of HCL Tech, remain the most cautious, the most bearish at this point of time, and the most with target price cuts post Q4 as well. Wipro continues to be the cheapest IT stocks amongst the 5. But given the guidance, it could be here for some more time, and the buyback has not enthused the street as well. And Infosys and TCS also, for Infosys, the guidance being a key trigger as discussed. So overall, this is the key takeaways from the 5 results, but the question largely being, back in February when we started questioning, is 15 times for large cap IT the valuation that could come back to it, is something to watch out for as we go into FY27.
It's an important point. Thanks so much for that, Puneet. We were talking to Parag Bhai yesterday, and he said that he would wait for the outlook and the commentary from Infosys to take a call on the space as a whole. Seemingly, the 3 key takeaways are that deal wins are okay for most, apart from HCL Tech, but the conversion is not great. CC growth is just not there, and the outlook is worse. So the sector, rightly so, is getting pummeled.
Yeah, correct. So I would say that the Infosys guidance was very muted, 1.5 to 3.5%. And that too, including the acquisition. So, excluding acquisition, it was 1.25 to 3.25. Plus, this quarter result also minus 1.2. So, I would say that clearly the AI thing is playing out on them, and it is causing a deflationary impact from the client side. So, deal wins are great, absolutely great, but they themselves are also not penciling in that this deal wins will get converted into increased revenue traction. So yeah, the sector outlook remains weak. Yesterday we saw a big, I would say 5 to 7% fall in ADRs of say Cognizant, Infosys, Wipro, most importantly Accenture. So I would say that yeah, the sector remains in. So it is a sector for somebody who can be very contrarian and patient enough.
Is that you? Because yesterday you were saying that I'm waiting for Infosys.
So I am underweight. I took advantage. Luckily, I was not aware that this kind of thing will play out. But I would say that luckily, when in March when IT was outperforming Nifty, we reduced our weight. And
is it a negative surprise? Because this is a space you track closely.
I am disappointed. I'm disappointed. Yeah.
You're disappointed with what Infosys and the entire IT package.
Yeah, except for Tech Mahindra, but Tech Mahindra has pointed out that the 15% EBIT margin guidance and so the EPS increase that is already priced in the stock.
Yeah, there is only one difference though, which is that while the large cap 5-6 names have been cautious, save for one maybe, on the commentary and not being able to show that growth, the broader end of the spectrum, which is the non-Nifty names, their promise of growth is a lot better than the large caps. So, as in the Nifty 50, LTTS has guided to 12 to 15% CAGR for the next 5 years. Persistent in their commentary has spoken about growth looking good for FY27, maybe not mirroring the exact 16-17%, but in that range. We are yet to hear from Infosys, of course, and it'll be interesting to see what that one does too. So selectively, some names are doing well, but the tide is going lower because there's pricing pressure coming up ahead, and therefore doubt that anybody will enjoy premium multiples here. Very, very unlikely.
What would you do with an Infosys, Kush?
So in a way, thankfully, going into the result, the position was very light, in fact, bearish. So, the recent lows of about 1200, 1214, if those are broken, then the structure will weaken even further. If that is held, best case scenario is a sideways move and a consolidation. So, again, nothing to write home about. OFSS is clearly a standout winner, but here too overheating. So, you might want to take money off the table. And this is an exception in the entire space. Even the names that, Neeraj mentioned, Emphasis, Persistent,
LTTS.
You are seeing selling pressures in some of those names as well, which appear slightly better. So from a outflow perspective, from a money flow perspective, price action, not really as encouraging. So more consolidation with a negative bias on the cards.
Yeah, you need to have a lot of conviction to fight the market on certain things, right? Yeah. And the market is very clearly voting negatively against
But basis what the companies are saying, it's justified. It's completely justified. What about picks this morning then, Kush?
Sure, a quick word on the indices?
Yes.
If it weren't for that Tuesday move,
I thought that JP Morgan response was a word on the indices, but no, for
long
today.
Term.
Long term. Okay.
Long term. So here and now, see, if it weren't for that, expiry move of 24,500, Nifty taking that out, we would have said this is consolidation. If you look at the weekly setup right now, Nifty is down about 0.75, Bank Nifty about 0.45 on a weekly basis. So after 2 weeks of massive gains, big gains, 1 week of consolidation is something that we'll take, happily. Even now, Nifty is within that 24,000 to 24,200 support zone that we've been speaking about. If we do get this kind of a gap up opening, even if it is 50 or 80 points, and we hold in this zone, this is something that you still take as a win. If you have a long position, right now your stop loss should be 23,900. If that is broken, things could get a little sideways to negative for the Nifty. But for now, this is a consolidative move and a welcome one at that. Now, as far as stocks go, some of the brokerage notes, I also have a hint of caution, in the mix now. So 2 longs and 1 short call. LG Equipments and Senoris Pharma are long and Supreme Industries on the short side. So targets for LG Equipments, I think Parag Bhai is smiling here. Also, perhaps I remember, has a positive view on.
My second largest small cap holding after other.
There you go. So a consensus, in that sort. So 569, 585 are your targets. 540 is where you keep that stop loss. Sanoris Pharma, interesting structure, decent volume action, nothing massive, but the price action in such a market very encouraging. So 920, 940, these are your targets. 880 is where you keep that stop loss. Supreme Industries has a negative structure, has been seeing selling pressure on rise, and the volumes incidentally yesterday were on the higher side, on the downside. So 3640, 3600, these are your targets. 3710 is where you keep that stop loss. Mind you, this is for the May futures.
Picks.
Yeah.
Okay, picks are also done.
And no surprise, right? Because
Yeah.
PVC prices are coming off.
Yeah.
So pipe companies naturally we still sell some down.
Okay. The other big story,
It's an
Alex.
interesting one, because we've been looking at cigarette companies, right? And this is after the tax increase that was done by the government, and rightly so, there was a negative sentiment at the time. And the worries that increase in price would affect volumes in the near term seems to have played out. My colleague Ridhima Bhatnagar has actually gone out and done dealer checks in Maharashtra, and she's found that there is impact in volumes at the overall level, but there's also a change in the way consumption is taking place, and that has bearings on the margins. Ridhima, what have you found out?
So cigarette volumes have likely dropped in April as per the distributors, and the majority of this volume decline comes from the king size segment for the cigarettes. This is after the excise duty was hiked on cigarettes by 30 to 40% effective February 1st, 2026. Now the dealers have told us that in Maharashtra alone, around 20% of the volume decline has happened, and your king size cigarettes, for the king size cigarettes, now king size cigarettes in ITC include your brands like Classics and Gold Flick Kings and Marlboro for Godfrey Phillips, and overall volumes have also declined by 20% as per the dealers, and the customers have started down trading amid the steep price increase, going from the king size cigarettes to the regular size and from regular to deluxe, and but the smoker base has largely remained unchanged. This is after the dealer checks we did in Maharashtra. Your stocks in focus include ITC and Godfrey Phillips. Now let's understand that why this premium segment or the king size segment is important. Now 20% of volume decline has happened in the king size segment for cigarettes, and this is a high margin product for the cigarette companies. For ITC, around 30% of revenue comes from the king size segments, and for Godfrey Phillips, over 30% comes from king size segments. We reached out to the companies as well. ITC has so far declined to comment, and we are still awaiting responses from Godfrey Phillips. Now analysts see that this volume drop of 20% could have an impact on the margins to the tune of 800 basis points in Q1 FY27. And but this will remember that the revenue, the margins of ITC for the cigarette segment is around 70%. So that's a majority of the margin, and the final impact will depend on the total volume decline and the product mix.
Well put. Thanks so much, Ridhima, for getting us those details. Some aspects of this were anticipated to play out, but that number is important to bear in mind. The fact that volumes may have gotten impacted to the extent of 20%, and that king size segment getting impacted to the extent of 20%. So the mix changing will have a bearing on cigarette margins, which are, of course, the highest margin product. So 70% going down to possibly 60% or 62% is going to have a bearing on the overall margin, which stands at what, 34% or thereabouts, right? So this was partially expected.
Yeah.
But were you expecting this much of a damage?
No, but I was not expecting this much of damage. But as we move forward, I think this is a 1 month check, and this is very good channel check on your part. But let's see how it, because companies will also not sit idle. They will also do some actions, some pricing actions, some actions they will also do. So I would say that ITC valuation wise is very cheap and is factoring in all the negatives. There might be some 5-7% drop from here on. From that point, it becomes extremely attractive. But you again, like IT here also, you have to be patient. You cannot expect that in the next 2 quarters you are going to get 15-20% returns.
I don't think that we have a standard disclaimer here, but smoking is injurious to health, and you should definitely avoid doing so. I'm adding my own disclaimer.
Yeah, but with this is about if it's injurious to your portfolio to buy or keep or sell ITC is the question right now more than anything else. So I think, just want to ask you a follow-up on that. You said ITC, both companies where you have to have patience. I'm not asking what are the impatient options, but what space has a little more visibility right now?
See, I'll tell you, if this conflict does not, if that this conflict does not last longer, then banks, private sector banks are doing very, very good. You saw the result of Union Bank yesterday, right?
Yeah.
The stock got hit 8%. Why? There was a 12 bips NIM contraction QOQ. And that too, when the NIMs are below 3%, you are getting a hit of 12 bips. It was natural, right? Because 60% of your loan portfolio is floating and there is a 25 bips repo rate cut. So mathematically also 10 to 15 bips margin decline could have happened in all the banks. Now ICICI Bank on that kind of a scenario is protecting its margin at above 4%, 4.3%. I can expect Axis and RBL, for example, are going to report numbers now. The business updates were phenomenal. Axis 18% loan book growth, RBL 10% QOQ loan book growth.
But can I ask you about Union Bank? A couple of other things stood out to me, right? You have your core growth, which is your core business, which is NII. The growth, it's a deceleration of 1%. That's first. Second, there is a one-time provision that they've made to the extent of 700 crore rupees. Why are they doing that now if asset quality is not a question?
That's what I'm saying. That's why I don't have one Union Bank. That's what I was saying. That is the resilience of some of the large cap private sector banks that I was highlighting to, but which I am overweight on.
Is this my question on Union Bank? Is this a Union Bank problem, or is it likely that other public sector banks will also see a similar situation?
See, I'll tell you, SBI, I feel the impact will be lesser and the growth will be higher. Others, BOB has already given business update, Bank of Maharashtra business update is already there. So they have reported good numbers, but we'll have to see NII growth. Because the problem is margins. You grow, but when you lend to a prime salaried customer at 7%, or when you lend to a highly rated corporate at 7.5%, you don't make margins.
You won't make the spreads.
So that is a problem. While in private sector banks, because of lower cost of funds, because of good TASA, banks like ICICI and HDFC have showcased it. And I'm expecting that Axis Bank also, based on their business update, 18% loan book growth, the slippages are going to improve quarter on quarter. And if they report NIM, which is 3.64, which is in Q3, if in Q4 also they don't report a decline in margin, it will be taken very positively. But right now we are staring this big macro problem. If this persists for long, then all bets are off. That is the problem.
Which is fine. But I mean, the idea, of course, should be that you build a hypothesis around what to buy at lower levels or what to buy at the conflict.
You need some cash in the portfolio if that something goes totally haywire. But you cannot ignore good companies declaring good numbers.
No, you should not. I mean, eventually you're buying earnings and companies and not necessarily levels per se. Point well noted. Okay. Well, we lots more to talk about. We'll talk about the solar names once again. I will talk about other things too. But just before we do that, it's time, or rather slightly beyond time, wherein Somit Sarkar joins in with all the chatter from the dealing rooms. Somit, coming close to the weekend, what are dealing rooms telling you? Good morning.
Good morning, Neeraj. Obviously, given the fact that it's a Friday, not much trades will be carried forward by dealers is what the indication is coming in. Stock-specific action, firstly on Walchand Nagar Industries, there are buy flows on the large HNI desk. Dealers expect a positive news flow regarding a fundraise that could come in on this counter. For Sudarshan Chemical, there are buy flows on PMS desk and large HNI desk from long-term perspective, specifically for Mankind Pharma. Yesterday, the entire pharma pack was gaining in trade, but for Mankind Pharma specifically, dealers have indicated that Q4 margins are expected to be on the stronger side, and hence there were some additional buy flows coming in on this counter. For Axis Bank and AU Small Finance Bank, there are buy flows on institutional desk ahead of the Q4 numbers. Delivery volumes were also on the higher side. And lastly, for IIFL Finance, that stock was down around 10% in trade yesterday. Dealers indicate that there's a buzz that there could be some penalty which could be imposed on the company, and that was the reason why the stock had collapsed around 10% in trade yesterday.
All right, thank you so much for that, Samit. We'll wait and see if it really turns out to be an exciting day or not for the market. Meanwhile, the US has imposed steep preliminary anti-dumping duties on solar cells and panels imported from India. The steepest of it is on India, though the duty is on India, Indonesia and Laos. Who does it hit the most? Varsha joining in with more details. Varsha.
Well, you know, a negative news for all the Indian solar cells and solar panel companies as US has imposed duty on solar cells and panels from India, Indonesia and Laos, and the duty for India stands at around 123% and 35% for Indonesia and 22% for Laos. Now, these three nations, why this is important? Because these three nations accounted for almost 57% of US imports in H1 2025, and the combined solar exports to US stand at around $4.5 billion last year, which equals to nearly 2/3 of total US imports. India's solar exports stand at around $792 million in 2024, and it surged 9x compared to 2022. The final decisions will be around July 13 for India and Indonesia and September 9 for Laos. Now, why US is doing this? Of course, to protect the domestic US solar manufacturers, as cheap imports were hurting local production. Indian companies which will take a hit, of course, Waaree Energies, which is the largest Indian solar module company and an exporter to US, has major US exposure. 20% of revenue comes from the US. Vikram Solar will also be in focus, as US was a key opportunity market. Export contributes almost 16% to the overall revenue. Premier Energies will be in focus as growing export focused player, and US demand slowdown could impact the growth plans. Even MV Photo and Fujiyama Power will also be in focus on the back of this news.
Varsha, just a couple of questions for Premier as well, because they have pivoted to domestics going ahead, and yes, there is this thing, right? Because the ADE ruling did found critical circumstances against Premier Energies, meaning duties could apply retroactively. But on MV photovoltaic as well, I mean, isn't the cell and module output entirely domestic facing, and therefore would these get very less impacted relative to a Waaree?
Yes, actually less impacted related to a Waaree, but all these companies, they had a focus to US export also. So sentimentally, this could, you know, impact the stock price of these companies. But yes, Waaree will be, you know, will have a more hit than these companies.
Yeah. Well, let's see how these stocks move up. Thanks a lot, or do today. Thanks a lot for that, Varsha. Kush, I know Parag Bhai doesn't quite track this closely, or do you, Parag Bhai?
Which one?
The solar companies as of now?
So basically, as I told you that I don't venture into the new businesses or new promoters very quickly, and so I have avoided this space. But as to the best of my knowledge, and you can check that Premier doesn't export too much to US.
Yeah, Premier doesn't. In fact, all its forward exposure is not US. MV also has said that their module and cell output is entirely domestic facing now.
Yeah. So that is one thing which I would think that, you know, if the stock corrects, then people can who like this space
and understand the space.
Yeah.
How do they look on the charts?
Not bad actually. If you recall the last few weeks that we've had this discussion, we've had a positive view on Waaree, Premier, most of this space, right? Last couple of days we've been saying thoda profit book kar lo because overheated hai, because they've had such a good run, thoda profit booking bilkul banta hai. If you see the last 3 sessions for Waaree, or 3 out of the 4 for Premier, there has been some cooling off, but on very thin volumes. Purely technically speaking, if there is a dip in some of these names, based on the report or based on this news, I would actually look at it more constructively. In fact, if I look at Fujiyama and MV Photovoltaic, relatively less data, but the most recent data is the most encouraging. Humongous volume accumulation, price action follow through also there. So for me, technically the structure isn't disturbed. Even if there is some kind of a dip on some of these names, they become a buy on dips kind of an opportunity.
Okay, let me ask you about a pack that did particularly well yesterday, and the conversation that we were having in closing was that the pharmaceutical pack as a whole was seeing sector rotation play out, and the defensive angle in this kind of uncertainty that we're seeing is coming to the fore. And look at Dr. Reddy's Laboratories, for example, and the way that it ended, right? Close to 10% gains. Of course, the semaglutide or whatever, the GLP-1 story is also playing out there. How does it look on the charts?
So, before the rebound that came about in the markets, the healthcare space, even the pharma space, was anyway doing well. There was a brief pause because the sector rotation started then. People were taking money, some money off the table from the pharma space, which had done well, to buy into some of the mid names, right, across sectors. Now, if that theme is returning, I would still want to go with the winners. I would still want to go with stocks which have not really seen that kind of a breakdown. Dr. Reddy's does not fall into that category. It had a massive drop, then a massive recovery. Of course, it was a big move on the back of good volumes, but this kind of volatility does not really speak strength as much. So I would stick to something like an Aurobindo Pharma. Look at the move on this one, almost secular. It's been an uptrend, volumes very healthy, didn't really see any kind of meaningful dip. Also, if you want to see, look at Lupin. Yes, it's knocking on the doors of about 2350, 2400 odd levels, but with a positive bias. If that's broken, this stock can zoom up to 2550 and higher levels also. And Semnoris Pharma is a new entrant, in this entire space. So be where the strength is. Don't focus where there's too much volatility in some of these.
Okay, ideas this morning before we get into the market open, and of course we're just about a minute away from the pre-market session. IKS held in focus after announcing the acquisition of US-listed TrueBridge to deepen its reach into rural healthcare. It's quite a significant deal, really. Puneet joining in with more details. Puneet, give us the details and what it means for the company.
Well, thank you for that. Well, IKS listed somewhere in 2025 and has been in a similar range. Now, they've done a big acquisition, which a lot will be fueled by debt. So this is some key aspects to watch. Now, as a company, they operate as a platform as a service. So even though they are a health company, it's more of related in the IT space where they operate a platform and hence focuses on outsourcing a lot of chores, which a lot of routine physicians would be doing in the US and largely focus there as well. So they've done another acquisition there, as you rightly said, focusing on the rural space there to get a lot of new businesses where they weren't present earlier via TrueBridge. Now, specifically for this acquisition, initial funding to almost $600 million of debt will be secured for a 5-year term, and the use of that will be led by as and when basis what they've highlighted. The other aspect, that expectation of completion of this deal Q2 of FY27 and expected to be EPS as well as PAT accretive from day one itself. Now, about TrueBridge, they serve roughly 700 community as well as critical hospitals as well as having a turnover of $347 million. The last 3 years, roughly, revenue has been in a similar trajectory. So there hasn't been any growth for TrueBridge, but a lot more to watch out for because the con call for IKS is on right now. So we'll get you more details on that. But definitely a key acquisition for the company, which has been in a sideways momentum in terms of share price over the last year or so.
Just one quick follow-up, Puneet. What is this combination and this acquisition actually going to do? You said it's in the space of rural healthcare. What is the kind of service or innovation it's going to roll out?
Well, one key aspect that it does is, of course, as I said, that a lot of routine tasks which physical stores might be doing, the back end of that is taken care of by IKS. And this segment which IKS is entering into has been largely untouched by the company as of now. So with this acquisition, hopefully entry into a lot of hospitals as well as community services where it wasn't present earlier.
Okay, thank you for that. All right, let's talk about 3% up in the pre-open session. That's an important one to track. I want to look at some of those solar plays that we've been talking about and the impact over there. Let's look at Vari, let's look at the Premier Energies, let's look at the entire pack of companies which might have some hit. Actually, Vari Energies is doing okay at this point. What is not working this morning? I'm seeing a hit on Century Ply. This could be maybe a bit of profit booking. I mean, the MDF prices were up and this was boosted. SBI Life seeing another knock. The numbers weren't half bad, but SBI Life has constantly been seeing selling pressure. Zentech has either big highs or big lows. That's seeing a bit of a profit booking right now. And Infosys is what we should look at, right? Infosys and the entire IT pack. Infosys showing a bit of a cut. Actually, 1.5% is not too bad compared to what the reaction to the numbers were. On the winning side, a Concord Bio in focus. I think it's another good day for pharma. MCure Pharma in focus as well and continues to be. Let's look at what Dabur is doing. Dabur has a new management and top management announcement coming in. That stock is pretty much flat at this point. So quite a few stories or specific stock-specific action that you need to watch out for. But let's get in Milan Vaishnav into the conversation. He is founder and technical analyst at Gemstone Equity Research. Milan, very good morning to you. Let's start with the Nifty outlook. Do you think, considering one, the Friday factor, no one really wants to be too bold before 2 days of a weekend, and you don't know what's going to happen during that period geopolitically. On the other hand, volumes might be low. But having said that, do you think there's case for a pullback on the Nifty after 2 days of drubbing?
Because the thing is that if you look at the past several days, we have seen one of the strongest technical rebound taking place. We rose almost, in fact, rebounded almost 2,000 plus points on the Nifty. Now, I think that it should not be a surprise to us if the Nifty chooses to consolidate within a little bit of a wider range, I would say. And with that being said, I think until the expiry, we can fairly expect the Nifty to oscillate between 24,500 on the upper side and 23,000, say around 800, 900 on the lower side. So except for this 600-700 points of range bound back and forth, I don't see any sustainable trend on either side taking place on Nifty. We may not rise much, we may not fall much, but I see the market staying a bit off in a wider range until the expiry of this month.
Okay, all right. But what are the individual stocks that are looking attractive to you, Milan?
Individual stocks, again, I have chose to be where the relative strength is. So I would like to go for to buy 40s. One can buy above 825 with a target of 900, and we can keep a protective stop at around 780. The other stock I'm looking at is Coal India. One can buy above 450 with a target of 475 and keep a protective stop at 438.
Okay, so those are some ideas. You got a bevy of ideas, and at 9:08 we'll try and revisit some of those. But it's 9:05, and that time of the show we're going to get you the big brokerage call. JP Morgan today has initiated coverage on CleanMax and Vero with the overweight rating, highlighting the strong growth visibility. Hiral has the details of this note. Morning, Hiral.
Good morning, Neeraj. It's very interesting. The reason I've picked this one is because if you see CleanMax Energy, the stock has moved nearly 25% in the last 1 month. So it has been on an uptrend. And now you have a JP Morgan, which is coming in with an overweight. They have a price target of 1250, which is approximately almost a 19% upside from the current market price. Now, what they're saying is that the market position for the company is pretty strong because it's recognized as India's largest and most differentiated player when it comes to the commercial and industrial renewable energy space. Secondly, what they're highlighting is that there are multiple strategic growth drivers that are in place for the company, where the company is positioned as a beneficiary of this rapid expansion of data centers that we are seeing in the country. In fact, they're seeing increasingly carbon neutral power solutions, and that's the reason why this stock is in focus. Apart from that, the business model is seeing a lot of strength, where the customer retention now is approximately 72% for the company. And this is out of the contracted capacity that is coming in from the repeat clients. Their long-term revenue visibility with the power purchase agreements is also pretty strong, and they're commanding a higher tariff as compared to the usual utility scale projects, and this is only because they're tailoring decarbonization solutions. And very lastly, when you talk about valuations, what JP Morgan is indicating is that it is expected to trade at a premium valuation as compared to your traditional utility scale renewable companies, and this is only because of the distinct project economics as well as higher growth runway. So all in all, a good potential upside of 90%, but the stock has already run up 25% in the last 1 month.
Hey, CleanMax, not showing too much reaction right now, but thank you for that, Hiral. Another one that I want to see is PVR. There's an interesting CLSA note on it, which is very positive on PVR. That's showing about 0.5% uptick. Others on our watch list this morning, Lux Industries. So this news has come in of their demerger plan, and their board has given an in-principle nod to that demerger plan. IKS, we spoke about, they're acquiring an IT firm, a listed IT firm in the United States called TrueBridge. That's about 3% up right now. Cyient has announced a buyback worth 720 crore rupees. That's seeing a slight uptick, but nothing too much, which is happening right now. Jubilant Foodworld is the other one that I want to see, and this is news reports really. We have not confirmed this independently, but reports that they're going to sell Dunkin' in India. Meanwhile, Vikram Solar, Vari Energies is the two that we should look at because of the US anti-dumping duty and see if there's any impact there. Vikram Solar about 1.5% down right now. Vari Energies also about 2% down.
MV maybe also in case it's
MV
not
photovoltaic.
Yeah, in case it is not reacting simply because they have said that they are pivoted completely to domestic. Can we pull up MV photovoltaic as well just to see that? Yeah, interestingly in the green. So, well, that's the summation of stocks. Kush, so many that Tamanna just spoke. Take your pick. Give a call on any of them.
I want to highlight one stock in particular.
Which one?
IKS.
Okay.
The price movement on this one has been sideways. I think Puneet also pointed that out. Fairly, obvious there. But the institutional activity on this one has been rather phenomenal, rather staggering, right? So this has been on my radar from a medium to a long-term perspective for a while. Every decline on this is something that, I suggest, investors, traders should take as an opportunity to accumulate. The setup on this one is very encouraging. It's not given a breakout yet. You want to buy a stock which is in that consolidative phase, accumulation phase, and then wait for that, participation phase for the breakout to happen. I think IKS is there. There's a double bottom formation. So it's got a few technical points going for it. I remain very constructive on this stock. I have it on my watch list as well fairly regularly. So yes, if you do enter, I think positional stop slightly deepish, comes close to the 1350, 1375 zone. Buy it from a medium to a long-term perspective, by the way.
Yeah, the thing about IKS is that it may not necessarily get impacted that badly by AI simply because, as most people have said, you will not want to have exposure to AI or business will not take exposure to AI-enabled processes in critical areas like healthcare or banking, BFSI, and IKS is entirely healthcare. So that's why I think the stock may have withstood some selling pressure. And I was surprised when I saw the size of the acquisition that they are doing, because I didn't realize that IKS is actually 25,000 crores worth of market cap.
Oh.
Yeah, I thought it was maybe less than $1 billion or thereabouts, right?
Yeah.
And they are making a sizable one. Yes, it is still a sizable one, but for a 25,000 crore market cap company to do a $500 million acquisition is palatable.
Yeah,
so,
par for the course.
Yeah, par for the course, if you will. So therefore not surprised.
Milan, Vaishnav, on the IT pack specifically, since it's going to be in focus and after the pre-open session, Infi is down 3.3%. You have TCS that's down 1.3%. The pack as a whole likely to lose ground. How do you trade this?
We would not trade this because whatever little pullback we saw over the past days has got completely fractured once HCL reacted negatively to the numbers, and so did the rest of the IT pack. I think I would entirely ignore IT pack so far as any fresh exposure is concerned.
Okay. Let me ask you about a few of the AMC names, and the first tick for UTI AMC is not bad, considering that it has posted a net loss, treasury loss leading to that. But let me throw AB Sun Life into the list. Let me throw HDFC AMC into the list. How does it look, Milan?
HDFC AMC?
Yeah, I've given you three names. So AB Sun Life, HDFC AMC and UTI AMC.
Yes, HDFC AMC is in a very wide trading range, and for it to move higher, move above 2800 is something that we require. But out of the three, UTI AMC looks a little bit more attractive because it is attempting a multi-month downtrend that had started since August last year. So it has formed a base between March and April, and it's looking to reverse the base. I think UTI AMC looks far better on the chart than the rest of the two.
Okay, all right, Kush, you want to add to that?
You've picked a very interesting space. I will not focus on the UTI and the HDFC AMCs of the world. The two names that very clearly stand out for me.
Nippon.
Absolutely. Nippon is the second one, by the way. Yeah. The first one you've already mentioned, which is Aditya Birla. What a stellar move this one's had. And not too far back. I think about a month, 2 months ago, we've recommended this on the channel multiple times around the 850 level, which seems like, some distance away now. Even now, it's got very healthy accumulation. Dips are shallow, even in terms of price and volume action. I remain very constructive on Aditya Birla Sun Life. A positional stop on this one is at 990 odd levels, but for now I would take dips as an opportunity to accumulate on Aditya Birla. Similarly, positive view on Nippon, but like I said, this is the second in the rung. First one still Aditya Birla.
Okay, IT, Nifty IT after the pre-open session is down about 2%. It's going to be another day where there's really, it seems to be no sparing of IT stocks today, and I want to see where Infosys has closed after the entire pre-open session, because that will give you a sense of how it's going to open. 3.5% down. FMCG stocks continue to have some focus, some interest from buyers, and this is again another defensive trend we've seen. Yesterday, if it was pharma, today it seems to be FMCG, and HUL, Nestle and the likes are the ones that are actually seeing some kind of move yet. I want to look at Dr. Reddy's very quickly, because there's a Goldman Sachs view on Dr. Reddy's which says that there's a price erosion fear in their base business. They've actually downgraded it to a sell from a neutral, and that's taking a 3% knock today as well. And Dr. Reddy's has been a roller coaster to say the least.
Yeah, and yesterday news that Canada's semaglutide launch is not that great. The only thing is that...
No, but there was no news. It was a hope for a launch, and then it's not happening.
Yeah, and the point is that market wanted to shift to a safe sector because oil was up. So day before yesterday it was FMCG, yesterday it was pharma. So it was led by Dr. Reddy to this news, but...
It's like FMCG again today, perhaps. Let's see.
Let's see. Oil is 106, so I doubt, but if it goes up, it's good for me.
Well, let's nail it down to one top pick though. Kush Bora, if I can ask you for one top pick today.
Atul Limited, 7,070-200 target, 6,600 stop loss.
Okay, presume it's a long by the target and the stop loss numbers. Let's see how it does today. Again, a chemical name. Very interesting that Kush Bora is going and picking that up. Okay, watch out for IT, watch out for the solar cell manufacturing companies. I think those two are the principal ones to focus on. Mid caps in the green incidentally, while the large caps are 1.18% lower. Small caps in the green too. Market breadth is constructive. Not a bad start, you have to admit. Yes, IT is down, but frankly, it's okay. Nifty Bank and the broader markets are helping the sentiment on the market. Let's get the heat map up on the screen. Cipla is down 2.7%. Maybe I missed something. Infosys, Dr. Reddy's are the two others which are, well, with reason down. HCL Tech corrects yet again 2% lower. TCS, Tech Mahindra. Frankly, think of it. Is there a catalyst in the offing for the IT space until the next results and commentary come out? Absolutely not. So that is the worry, but more green today. So let's kind of celebrate that a little bit. Interestingly, Indigo in the green despite the fact that the Brent crude prices are higher. Very interesting there. Grasim 0.88%, Geo Financial, Mahindra and Mahindra. There is Nestle yet again in the green. Frankly, the nifty stock of this week has to be Nestle, and for the right reasons. Even if Dr. Reddy's had a rara move yesterday. What else is doing well? Trent, some more tick in the green, so that is good. We also seeing Eicher Motors, Adani Enterprises, yet another very strong stock in the green. But yes, the morning, if you will, does look skittish because of what's happening to IT and pharma, in particular IT, Tamanna. Yes, Infosys is down, but the casualties follow, and HCL Tech, after the drubbing that it has received this week, yet under 2%. So
more to go for IT. There's really no reprieve there. And for pharma, yesterday's favorites as well. There's a fresh clarification which has come from Dr. Reddy's exactly on this news that they are going to get a nod from the Canadian regulator for their version of Ozempic, to which they're saying that it's not happened yet, and the serial numbers they got are part of the process. I think that one bit has flagged off this entire whirlwind, that they're going to be getting their nod very soon. They're saying it's not happening. In fact, just pull up the Dr. Reddy's chart while we're talking about it in today, since we're looking at it in detail, and if we have that data right now. So pharma and IT in that pain. Dr. Reddy's sliding off as we speak and is going to continue to see this pain. Let's pull up the Nifty contributors if we can before we get to the broader markets and the rest of the pack, because it's all Infosys, right? The 16 points out of the 85 which are down on the Nifty is from Infosys. ICICI Bank also not helping. Sun Pharma and HCL Tech following through. On the winning side, L&T, State Bank of India, M&M, so a smattering of stocks there. But overall, you're going to see some weakness through the morning at least. Let's look at what the broader markets are doing. And will the fact that they don't have that much of pressure from IT help them? Flat on the Nifty mid-cap 150, actually coming off right now. Flat on the Nifty small cap 250 as well as we speak. Sectoral heat map should give you a sense of what's happening. IT will be at the bottom is my guess. Yeah, there you have it, 1% down. Right now, as you saw, 1.5% really. Nifty Pharma is the other one, about 0.5% down. Healthcare is following. And on the winning side, Nifty Realty, Defense and Auto. That too, I wouldn't say with robust gains, but at least you have a green tick over there. So it's a mixed bag. I would say range bound mixed bag today when it comes to some of these stocks. Let's look at specific stocks. All right, some of the stories that we've been talking about since this morning. The US has slapped anti-dumping duty on 3 nations. India has received the highest of those. Here are some of the companies which export those solar units to the United States. Waaree about 5% down right now. Vikram Solar about 1.5%, nearly 2% down. IKS in focus because of its big acquisition that it's done, about 5% up on that stock. That's been on our watch list as well. Let's look at Lux Industries. Has been buzzing yesterday, and then the news has come that there's going to be a demerger, maybe a sell-on news going on right now. PVR there has got a positive view from CLSA. That stock still about 0.5% down. Results, I want to review what's happening with Infosys and IEX as well. Both of them have reported. IEX was a decent set of numbers. We told you about 1% up. Infosys 2% down. Actually, looking at the numbers and how the ADR behaved, that's not too bad. Infosys 2% down is really not that big a deal, I would say. Atul Auto has signed an MOU with a Bangalore-based company. Let's look at what's happening with Atul Auto. 8% up. It's one of the stocks that zooming was the quick call that was given before we went into open as well. CIE Automotive has seen a decent set of numbers. That's why you're seeing that stock about 6% up. And Himadri Chemicals also in focus because of its numbers. So, yeah, there are a few stories there if you look closely and carefully, Neeraj.
Yeah, most certainly. Atul Auto standing right up there. I wonder if the chemical names, Atul, Deepak Nitrite, Aarti Industries, are also reacting this morning at all. So let's bring all of them up. Atul was that idea that Kush Bora gave, and I wonder if it's still a go. Aarti, by the way, marginally in the green. Atul actually marginally in the red, might give an idea for, might be an opportunity for people to latch onto if they believe in Kush calls. And well, they've turned out fabulous the last few days, so kudos there, Kush. Just a couple of others. SPML Infra has seen Vijay Kedia's name come in and the preferential allotment, and maybe that stock might be reacting a little. Yeah, a couple of percentage points, nothing too dramatic, but in the green nevertheless. But the headline numbers, you have to argue, is what's happening to information technology. We heard Milan Vaishnav say, no go for the time being. So that is one. And of course, the other one are the solar names. Now, Kush, I want to take it to you. One, would you buy Atul Limited now that it started off flat? Two, would you go short on a Waaree because it's starting off 4.5% lower? So and it actually slipped from those levels of 3,500 all the way to 3,420 just before as of yesterday's close. So is it looking weak enough to short?
So to begin with, Atul, I think I would still consider as a buy. 6,600 is still the stop loss. You can enter and keep that as a stop loss. Risk reward ratio fairly favorable. It did see some sell-off from high points of the day. So maybe anyone who's bought it yesterday, as a BTST trade, could be taking money off the table. The initial tick could be just that. Also, would I go short on Waaree Energies? No, most of these stocks become a buy on dips kind of candidate. Slight weakness extending in Waaree because now the 20-day moving average support is being tested. If that is broken, then the structure could perhaps weaken a little, but not enough to go short right now. So yes, if you have a position, you can hold with 30 to 25 as your stop loss, but I wouldn't really recommend going short on these. Perhaps if it consolidates and stabilizes here, it would give you a long opportunity.
Okay, Cipla is in focus, and actually we're going to get Varsha to tell us about it. We were talking about how Cipla has taken a big knock this morning just as soon as it's opened. And here is the reason. Their partner, as per the FDA's website, is under import alert. This is the first cut of what's happening on Cipla. Varsha.
Well, yes, a big negative news for Cipla because this unit, if you see, product from this unit cannot be imported into the US, and Cipla partners with Pharmathen International unit, which is a manufacturing site for lanreotide injection, and this facility supplies lanreotide injection to Cipla USA, which treats hormonal disorders and certain types of cancers. Now, talking about the product impact, the lanreotide injection supply of the US is disrupted, and shipments from these facilities are effectively blocked. Lanreotide contributes 12% of Cipla's calendar year 25 US sales, and now lanreotide revenue has been removed from the estimates, and analysts are expecting $50 to $60 million in FY27 and $100 million in FY28. So first observations were received, then this facility was considered as OAI, and now import alert. Now because the products from this unit will not be imported to US, and hence the Cipla's revenue will be under pressure.
Okay, so Cipla and Dr. Reddy's, both of them having a pretty bad morning. Thank you for that, Varsha, and for that first cut. Of course, more will follow as we get more details of what exactly is happening to Cipla. We're reaching out to the company as well. Parag bhai, this pharma as a defensive play is really backfiring for whoever thought it's a good idea yesterday.
Yeah, so basically, ultimately, it boils down to earnings. Right, so
but this is not even earnings.
No, I'm saying, yeah. Yesterday, the move towards safe haven in terms of pharma investing was ultimately. I'm trying to say that ultimately the companies which deliver good earnings will go up. It is not the theme rotation which will just keep.
My only point is, in the case of pharmaceuticals, more than earnings, the regulatory overhang becomes a big issue.
It is always that. That is why FMCG is safer, and FMCG gets a very high multiple than pharma, even when in some cases pharma's growth is better.
Cipla on charts, Kush?
we spoke of buying strength in the pharma space as well. Cipla, let me also include Sun Pharma, don't really depict that kind of strength. In fact, Sun Pharma was one of the shorting candidates. Only because it's respecting that 1650 support zone have I not initiated a short call. Otherwise, there is a good possibility that this could turn into a short call. Cipla had a good run yesterday, so now you're seeing that cool off. The structure remains negative to sideways. So I would not really venture into Cipla and even Sun Pharma for that matter in this space. Stick to where strength is.
Okay, IKS is rip and roaring. Let's get across to what the management has to say.
Defensible story to improve healthcare in the US. Next steps going into the transaction. We signed the agreement yesterday. It's expected to take 90 to 120 days to close. In that time frame, we absolutely operate like totally independent companies, focus on our individual objectives, work through the regulatory approval process, which includes the HSR approval from the FTC, which is the Federal Trade Commission. Once the transaction closes, we anticipate 4 to 5 quarter integration process where we start combining ourselves into one company, and we've factored all of that into sort of this 4-year journey that I just described to you all a couple of minutes ago. That's really where I'll end the conversation. Saransh, with the last slide. Again, I would say our traditional moat was we were building the only platform system of action. As we evolved, we understood that the platform system of action moat needs to be further bolstered by, if we were to combine it in niche markets with the system of record, that would make it really long-term defensible. Here we have the opportunity to be able to do that and really build an AI-first integrated platform system of action, system of record. TrueBridge specifically has some exciting growth opportunities within its install base that we will rapidly work on. And together, I think we would have created an industry-leading, scalable, and efficient operating platform, which I really believe will be the new operating system, at least for rural healthcare, and then continue to build upon our traditional physician install base. So.
All right. Well, that's IKS, and that stock, like we said, literally rip and roaring. Milan Vaishnav, you're not constructive IT, but this is not an IT service play. It is completely different. Up 9.5% today. Is there a trade from these levels?
Yeah, I believe there is, but it's more of a medium-term kind of a delivery play here. If one can enter into IKS, they will need to keep a little bit of a lower stop loss, and if they are able to hold it for a couple of months, then I see some decent upticks until 1750 to 1800 odd levels here.
Okay, Milan, just a view on index as we've opened, and let's get a view on Infosys as well. Do you think there's any scope of buying as you're seeing a knock today?
Infosys, no. I would not suggest entering into Infosys. We need to see at least some basic base formation inside, some basic, very initial reversal signals inside. After that, we can consider that to just accumulate and not go out aggressively after Infosys. But as of now, no, I don't see any action which is warranted in this stock.
Okay, thank you so much, Milan, for speaking with us today. Kush Bora, Parag Thakkar, hope you all have a great weekend. And, our work continues, though, on the show. And another very important story that we've been talking about is Mythos. Now, it's not just something that is impacting the world very far away. The concerns about it have come to our shores. Finance Minister Nirmala Sitharaman has flagged threats from Mythos, directing banks to engage in best available cybersecurity professionals and agencies to strengthen monitoring capabilities of banks. Rishabh Bhatnagar joining with more details.
Right, the finance minister has flagged that the threat from new AI models, such as the one from Anthropic, Mythos, is unprecedented, and it requires a very high degree of vigilance as well as preparedness. What the finance minister yesterday in a meeting that was also attended by the IT minister, Ashwini Vaishnav, alongside senior officials from RBI and PCI. The DFS secretary was there. You also had from the MeitY's cybersecurity wing certain officials come in. All of the agencies were advised to sort of adopt an institutional mechanism to respond to such threats. The FM also advised the Indian Banks Association to actually have some sort of an intelligence sharing mechanism also that coordinates between all banks and agencies in real time. She also added that banks should advise and should report any sort of suspicious activity to authorities the moment they see it. And she also asked for banks to engage the best available cybersecurity professionals to sort of take this challenge on. So the government really sort of on a war footing against this, trying to be prepared. Also, global regulators are trying at the same time that the RBI is also trying to understand more and more about this. So very interesting and important development that's coming out of the financial industry.
Thank you for that, Rishabh. But let's focus on our corporate conversations. And we have a fantastic list of corporate conversations lined up today. Of course, if you haven't seen the teasers on our screen, Rhythm Desai is going to be here at 10:30 on the NDTV Profit Town Hall. You have an opportunity to ask him a question as well. Give your question to us on our social media platforms, the numbers on the screen as well. But meanwhile, focus on Prestige Estates. On the back of robust Q4 sales growth, the company has clocked 2,500 crores from their Hyderabad project sales with a footfall of over 4,000 customers at the project. We're going to be speaking with Irfan Razak, Chairman and Managing Director at Prestige Group. But before we go to him, Mahima joining in with all the details. Mahima.
Right, Amana. So as you rightly mentioned, the recent press release did mention about the Hyderabad project, that is Prestige Golden Grove, where they've clocked 2,500 crore of overall amount. In terms of footfalls, also they've seen 4,000 customers come in at that Hyderabad project. They've achieved sales over for 1,700 odd units. The overall project development consists of 5,120 units with 10 towers. The project's GDV is approximately valued at 9,500 odd crore, of which 2,500 they've already done. In terms of Q4 business update, overall sales saw an uptick of 11 odd %, collections grew 66%, average realizations also went up by 7 odd %, and sales volume expanded by 19%. FY26 overall saw record high sales of over 30,000 odd crore, driven by robust launches, added new projects with estimated GDV of over 50,000 crore in FY26 itself. Launches also surged by around 24% and launches contributed around 63% towards pre-sales during the years as well. With regards to occupancy in office and retail portfolio, that was also healthy at 92% and 99% respectively, and consumption in malls also expanded by 15% year-on-year basis in Q4 FY26. So this is the overall view of how Q4 has panned out, and of course with the recent news of the Hyderabad project also coming in, it's poised for better growth in FY27 as well. Nuvama also believes that.
Hey, a lot to unpack with Mr. Irfan Razak. Thank you so much for speaking with us, Mr. Razak, here on NDTV Profit. We always enjoy our conversations. Let's talk about this Hyderabad project as well. You've clocked 2,500 crores in 2 weeks. In terms of number of units, how has it panned out? And give us some kind of color about this project. What is the kind of demand you're anticipating going forward?
Good morning. Prestige Golden Grove in Hyderabad is just off the Outer Ring Road. It's in a good micro market and it's a very large development, but it's being large. Also, it has got a lot of open spaces, and that's what's the chemistry about this development is. Though these are high-rise towers, but we have given a lot of importance to see that there's a lot of space for the people who are living there. It's a big development in terms of sheer volume of space. It's 5,000 plus units, out of which we have been very, very fortunate that there has been a tremendous response for this. And we have already clocked in around 1,700 sales. And that is actually giving us confidence and gives us the required cash flow to go in with this project at full speed. And we are targeting to complete this all in one phase. There are no two phases for this. And I think the contractors also have been appointed. 2 days ago, we had the groundbreaking ceremony, and I believe that this project will do better as days go by.
The timeline of this project, I mean, you sold 1,700 units even as the groundbreaking is taking place. So what is the timeline of this project? Because you have a GDV of 9,500 crores. Is this going to be staggered in terms of realizations?
No, as I said, it will be built in one phase. Okay. Of course, since we've opened this to the market, our endeavor will be to see that the flow through happens and we keep offering this to the customers as we go along. And the overall timeline for construction is pretty aggressive, but I think it is very doable and we will do it is around 4 years.
Mr. Razak, good morning. Neeraj here. I'm very keen to understand how quickly you will finish off the parcels around our office in BKC, because it will change the face of the place where we work in. But just a broad question, sir. The sales at premier developers like yours are looking very solid when you open up, etc. But a lot of independent researchers from real estate consulting firms who are coming on and are now talking about the fact that because we are in the 5th or the 6th year of the upcycle, if you will, we might be nearing the peak as opposed to being midway. Would you concur, or would you believe this time is a different cycle?
I think this time is a different cycle. And first of all, let me answer your question on BKC. I think the work is going on in full swing. And we should be able to see that the first occupier moves in sometime in mid-2028. So I think that is the overall idea. And coming to the real estate cycle, see, it's always been like that. You see, there are phases when you have enormous sales all in one go, and there is a lot of demand. And there are times when, the same product is sold, but it's sold a little leisurely. But net, we've been in this business last 40 years. I've never seen any development that has not been sold out. But the most important thing is it's at what velocity and how soon and how slow it goes. And I think as of today, the speed is still there, velocity is still there. And I believe also that there's been a lot of consolidation. The bigger brands and the well-known brands are doing better. And I think, but then our whole idea is to sort of energize the market. A launch like this will obviously energize everybody else, and there will be a ripple effect for every other developer in that city.
Okay. Mr. Razak, is the current conflict-led uptick in the prices of raw materials, commodities, plus supply issues impacting margins, or are you able to, in your pricing of various projects, pass that on to the buyer?
No, I see. Now, the thing is, current situation, as of now, on the face of it, is quite disturbing. We are watching it, but at the same time, we cannot try to pass on that cost because we don't know what that additional cost will be. So we have to be very, very careful. We have to be measured, and we have to see how it goes. But right now, yes, there will be, if things go on like this and things don't go settle down, there will be shortages, there will be price increases. We don't know how much and this thing, because now see, even our project cycles are not short term. It's like a 4-year cycle, like I said. So in that 4 years, you'll have the highs and the lows. So we always have this sort of touch feel how to price our product. So we do take care of a certain inflation, but if it goes overboard, then it becomes very tough.
Pain points right now, Mr. Razak, in terms of the impact that you're seeing? What are the segments where you're seeing a direct inflationary impact?
No, pain points will be for all commodities, starting from whether it is steel, whether it is now, see, just simple thing like a shortage of gas. What did it do? The production of tiles stopped. So these things are always a matter of concern. So we have to somehow or the other hope that everything settles in, and we have relationships with all the manufacturers, but that in case there's no availability, there's no availability, and that will impact the delivery periods. So we have to hope and pray that things work out well, and there will be some sanity that prevails at some point of time.
Can you give us any visibility on FY27? Because I think FY26, the year-on-year sales did see a bit of a pinch, if I'm not mistaken. What is FY27 looking like for you, Mr. Razak, in terms of demand? One is this geopolitical crisis, more industrial raw material, but also demand, as we don't yet know if there's going to be an impact on appetite because of AI, job cuts, etc. Are you seeing any of those signs?
You know, FY26 wasn't a pinch at all. We closed FY26 at some 20. I mean, we did the previous year to FY26, we did 21 or 22,000 crores. And then we closed 26 at 30,000 crores, which is almost 60% plus increase over the previous year, which I think beat all estimates. And I believe even for the next year, that is FY27, I do believe that we still will be optimistic. And whatever geopolitical situation that comes in, the demand will still be there. And we are very, very sure that things will be good. And I believe that we will have a growth of at least 20% over this current year's closure. That's the target, because we do have a lot of product in the pipeline in all the cities we are operating in, and we are pretty positive and quite sure of how things can pan out.
Okay, that's very optimistic. You're saying you see a 20% increase. You have a target of a 20% increase in FY27. What are the areas from where that growth is going to come, geography-wise, location-wise?
Every city has got potential, including NCR, Mumbai, Bangalore, Hyderabad, Chennai. In all these cities, we've got a good volume of raw material which can come into the market, which launches can happen. Teams are working relentlessly to see the designs are there, approvals come in, and then we bring it to the market as quickly as possible. That's the only way we can bring in so much inventory, and I think we are quite positive about it.
Mr. Razak, just one word on hospitality as well, because in some of the key markets that you are in, you are developing Bombay big time, but Hyderabad, as we learn, has actually become a market with the highest ARRs per se on an average for the year, and a lot of southern cities are doing that. You have a bunch of projects there in all of these key markets. How is that segment looking?
As of today, we were a little concerned on hospitality, but as of today, hospitality is being fueled by internal demand, and there is travel also, and we are not feeling any pinch, and we are developing quite a number of hotels, including Hyderabad, We are doing the Oberoi Hotel in the high-tech city, which the design is already in place, waiting for approval to start work. And we are doing a lot more, Mumbai, Bangalore, also in Chennai. So there is a lot of work that is happening on the hospitality front. Currently, we are at 1,500 keys in the company. Our largest hotel, which is the biggest hotel in the country, is getting ready, NCR in the AeroCity, which should start trading by the end of the year. So there's a lot of work. There's a lot of keys that are going to come in. And by FY30, we should be having almost 5,000 plus keys.
Okay. Thank you so much, Mr. Razak, for speaking with us. Definitely a positive view coming in there from Prestige. At a time when the verdict is still out about the extent of impact that geopolitical issues are going to happen on real estate. Interestingly, real estate, in a sense, Neeraj, is one way to look at the entire geopolitical crisis in one basket, in one set of companies, because everything that they need will, in that sense, be imported.
Yeah, you're so right? And even things which are not imported but are seeing the commodity price rise.
Yeah.
The metals, for example, is the inflation out there is crazy.
Yep.
For him to say that he's concerned.
He's saying if this continues. But yeah, the point is, if you have a 4-year period for a project and then this doesn't last too long,
hopefully
then in
that
4-year cycle it evens out. All right, we're focusing now with a conversation on IT, and Srikanth Velamakani, co-founder and group CEO of Fractal Analytics, is with us, but he's talking to us as the chairman of NASSCOM. He is taking over from Sindhu Gangadharan of SAP Lab India, and his appointment comes at a crucial time for India's technology sector. Srikanth, great to have you on with us at NDTV Profit. Congratulations for helping NASSCOM, and you come at a time when it's all about AI, so I think it's a perfect fit in that sense. Let me start with what you are making of, and I'm not asking you to comment on IT company results, but one theme coming out of there is that there is an impact of AI on revenues which is deflationary. It's beginning to hit. Is that something that NASSCOM as a body is taking cognizance of and is seized of?
The first thing is that tech has always been deflationary. This is one thing that we have to realize, is that tech becomes cheaper over time, and that is perfectly okay, because demand always expands faster than the tech becoming cheaper. So this is not something that is new or something that we need to be worried about. The thing we have to look at is that the overall growth is a function of both AI-related expansion and AI-related compression. And the balance of that is a net growth that you're seeing in the industry. Today, you're seeing somewhat muted growth, but overall, AI is a hugely positive, great growth enhancing vector for the tech industry. And it's a matter of time when this will start to play out in AI expansion for all the tech industry and all the tech industry participants.
Okay. The other aspect of this is job cuts that we're seeing, or at least slowing growth of jobs. Another point that has come out from all the reportage, commentary, and data that we now have is that IT companies are not hiring at the same pace. And in fact, a lot of them have a negative job growth for the full financial year. How is NASSCOM looking at this?
Yeah. Number one is that, yes, there's no denying the fact that growth has slowed down in terms of employment growth. For the last many decades, the tech industry has been one of the biggest employers in the country, also adding to employment growth every single year. The last couple of years, the tech industry has still been a net adder of employees, but the growth rate has slowed down. And the key point here is that one of those elements is around hiring of fresh graduates, which is where the maximum impact has been. Across the world, not just India, we have seen that entry-level jobs have been somewhat affected, partly because of AI and partly because of other reasons. Now, this is generally a structural change, and we expect that these things will take, sort of solve for itself in the next couple of years. One of those things is that if you see tech spends overall, tech spends have been increasing. A lot of those tech spends have been going into AI capex, into data centers, and the infra layer or the chip layer in the overall AI ecosystem. And some of that is come at the expense of employee growth. But as these investments play out, we will see that employment growth will start to return to some levels of normalcy.
Shrikant, good morning, Neeraj here. I buy your argument about tech being deflationary, but I wonder if the ushering in of AI and therefore if companies become more efficient, then the number of hours, the billable hours, etc., go down. Then is it price deflationary for them, and therefore could there be not a race to the bottom in that sense, but could the companies need to start pricing in their clients lower in the competitive edge to get more contracts, and could that therefore be revenue deflationary, software export deflationary, less manpower in the ecosystem? And in that sense, is that if not a doomsday scenario, but a bad space to be in for the time being?
The first thing to realize is that the world needs 1,000 times more technology than it currently has. And you don't need to be an economist or do extensive research to figure this out, right? You will see that across the world, as enterprise users, when we use enterprise technology, it's extraordinarily clunky. So there's a lot of need for improving the overall technology user experience of tech in the world in general. So the world needs 1,000 times more tech. Now, what's happening today is that AI is making tech easier, better, and cheaper, which means that, yes, there will be compression related to AI, and that's a 10x compression. Let's say something that took 100 hours now only takes 10 hours. But then we have 1,000 times more work to be done. Therefore, overall, there is a 100x growth that's still possible in a tech deflationary world. So this is not a new phenomenon. This has been happening for a long time, but AI is making it even more important and even more accelerated. And therefore, it is the biggest opportunity in front of tech companies to make use of AI and help big companies transform their businesses with AI. Enterprise AI is just beginning to take off this year. So we will see a huge opportunity for the tech companies in helping the biggest companies in the world reimagine every aspect of their business, their workflows with AI, transform every process, product, and service with AI. This is a multi-trillion-dollar opportunity. And the second big opportunity that the tech industry has is to help companies modernize their tech. The tech is so clunky. The value of the modernization industry is again multi-trillion. So these are enormous opportunities, and companies that make use of them, bring in the tech, and are able to price on an output or outcome basis can not only see revenue growth, but also see margin expansion in the process.
Interesting. So over a longer term, even if there is a short-term pricing challenge, over the medium term, you reckon there is also a margin opportunity. The part two of my question is because, it's related to the workforce reshaping, right? The belief is that, the fear is that AI, the change will be very swift. Companies may not be able to adapt. And there are some voices now who are saying that change may not necessarily be as quick because regulation facing industries, healthcare industries, for example, will not go all AI all at once in a compressed time frame because they would want to ensure that there are no mistakes. Does it give all forms of tech companies a chance to come to terms with the change that AI is ushering, get the workforce trained, and therefore will it also not be as bad as feared for the IT-focused workforce in India?
So Dinesh, first thing is that, like you rightly said, there is a lot of friction between what is possible versus what enterprises are able to do. It could be regulatory friction. It could be friction because of companies not being fast enough to adapt. It could be because people are not ready yet or workforce is not ready yet. So all of these factors create the friction between what is possible versus what is real today. And this is something that came up in the Anthropic report on March 5th, that this friction currently is already huge, which means that even if we stop AI progress, there's many years of AI deployment inside large companies, which is a massive opportunity for the tech industry. And because it's happening not at the fastest pace possible, because everything will eventually grow as fast as humans are able to adapt to it. And therefore, it gives an enormous opportunity for the big tech companies and all tech companies to be able to transform their organizations faster and respond to the big AI opportunity that is lying in front of them.
Okay, Shrikant, I'm just wondering, changing track a little bit. We're talking about the AI opportunity non-stop, but what about the AI threat? And for example, what we're seeing with Mythos. We're reporting that the finance ministry and banks are speaking to each other and talking about how to protect ourselves and our financial system from these cybersecurity risks. How do you think that part of the whole journey is going to pan out?
It's a very important topic. These AI models are getting incredibly good, both in terms of cyber offense as well as cyber defense. And whenever a new technology comes in and it is extraordinarily magical, as AI is today, the bad actors usually use it first before the good actors are able to use it for defense. Therefore, it is vital and crucial that India as a country gets access to the latest models and uses that to create the defense that is required. The Mythos example is a particularly interesting one. And what we have seen there is that these AI models have agentic features. They can lie, they can go beyond the remit that they were given and exploit various kinds of cybersecurity vulnerabilities that may exist in every system. So given such threats, what we have to do is to make sure that India has access to the best AI models and they are deployed in the most critical infrastructure that India has today.
So what is really the role that NASSCOM is going to play through this? Like I said, Shrikant, you have come in this position at a very, very important time. What is your vision for it, and what do you think is going to be the key focus for you and for NASSCOM through this year?
The first thing I would like to do is to tell the world that AI is a huge opportunity for Indian tech industry and not the threat and gloom that it is currently perceived to be. It is going to be one of the biggest expansionary opportunities for the tech industry that we've ever had. So that is something that we must recognize. The second thing is that we have to solve for the short term to medium term, restoring growth and higher employment and profitability for the industry is super important as well. So when we get the performance axis right and the narrative axis right, I think in the Indian tech industry will again see incredible growth and incredible prospects and so on. And I believe that the best days of the tech industry are ahead of us.
Okay, let's hope so. Let's hope so, Shrikant. And maybe the tech industry will also look different than what it looks like today. So we have to look at an ever-changing face of what our top IT companies are doing. Thank you so much, Shrikant Velikamani, of course, the new NASSCOM chairman, and of course runs Fractal as well. We'll take a very short break. On the other side, and we told you we have a fantastic lineup today. On the other side, we're talking to Neelkant Mishra of Axis on the economy, geopolitical situation, India, so much more. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
welcome back. Very exciting chat up next with Neelkant Mishra, Chief Economist, Axis Bank and Head Global Research at Axis Capital. Neelkant, very good morning to you. 8 weeks in, and we're now not in a war, but we're in a ceasefire where things are somehow worse when it comes to India, because nothing is moving through the Strait of Hormuz. Let's start with that context and how bad things can get with every day this continues.
Yeah, so the challenge for the markets is twofold. The first is that if you are trying to predict the impact, so when say people ask me, oh, what do you think is the balance of payment impact? What do you think is the inflation impact or growth impact? The bigger question is, which month's price are you going to take? So are you going to take the spot price today? Are you going to take the dated Brent price in case you want, say, next week's delivery, which is substantially higher than what shows on the screens? Or are you going to take the December 26 price or the March 27 price? And if you take the March 27 price, there's nothing to worry about. So that's, I think, the biggest challenge for markets. The second one is that the markets are very much part of the war or the negotiation, because clearly the Iranians are using market pressure to get the US to make concessions, and which is why the Strait of Hormuz is so important. And the US administration has so far fairly successfully managed the market expectations that, look, the solution is like 1 day away, 3 days away, 1 week away. And so that makes the whole process, I think, particularly challenging. And we are now reaching a point where I think supply chain disruptions are maybe 2 weeks away. Meaningful supply chain disruptions are just 2 weeks away. Early in the war, we thought that by 15th April, some of the stress would start becoming unbearable. Clearly, there was more inventory in the system than had been envisaged, or maybe, if you believe some of the reports that came out a couple of weeks back, that there were more ships transiting through the strait than what the transponders showed. But either way, now the signs are, I mean, I think you can see that Brent, even the next month's spot is actually, next month's price is now starting to increase.
I don't know what happened there. Something with our feed, but we definitely have Neelkant Mishra there. No one else. Neelkant, I think something went off with that feed, but you were talking about next month's Brent prices.
Yeah, so the next month's Brent prices have started going up, and which is a sign that I think the commodity markets are now starting to get restive. So if the strait doesn't open up quickly, clearly I think inventories are now going to become a major issue, because there are many indications that product inventory. So very famously, the European airlines regulator came out and said we have 6 weeks of inventory left. The bunker fuel inventory in Singapore. So those kind of stresses, I think, are going to build up, which means that whatever solution has to come up in the next couple of weeks. My fear is, though I'm hoping that things settle down without any further kinetic warfare, as they say, but my fear is that a further escalation may be necessary in order for this so-called stalemate to actually break.
That actually makes sense, Neelkant, because so much commentary right now saying at least there won't be any escalation. But this naval blockade of the strait is actually worse. A couple of things. You said there's 2 weeks before we start feeling the pinch. Are you talking about India, everyday people beginning to feel the pinch? Because yesterday there was a government clarification that oil marketing companies are taking a loss, I think up to 100 rupees a litre on petrol, but are not hiking it. For how long can that go on? Is that the kind of pinch you see that we will face in 2 weeks from now?
100 rupees was for the diesel. Petrol is a bit smaller. So, but that's the marketing loss. I think there is a significant refining profit also, which firms are making. So the oil prices are up about $30-$35, but the refining cracks are also up $25-$30. So to some extent, some of the oil marketing companies at least are buffered in terms of profitability. But to answer your question, when I say there is going to be a crunch, it is less about the fiscal decision of the government on whether the prices should go up or not, it is much more, because that buffer exists. I mean, I think you can last it out another couple of weeks, maybe a month or two. I think the bigger issue is physical shortages, where, we already have, for example, Western Airlines not flying to Thailand and Vietnam because they cannot refuel there. We already have plastic manufacturers in India not producing because at 50-60% higher prices, there may not be enough demand for that furniture. So those things are still small, they're minor, but like packaging firms or other consumer goods manufacturers can cope with a 50% higher, say, packaging prices, at least the bigger ones, because they have the margins and they can take the hit in the near term. But if you are, the fear is that in 2-3 weeks there may not be packaging material available. So those are I think the concerns and the crunch point, because we entered the war with about, as per the IEA, about 8.2 billion barrels of equivalent of crude and products. Only about a third of that, 2.6 billion or so, was the product inventory. Meaning that what happens when after crude is refined, and a very small part of that was non-OECD product inventory. So far, the pain has been quite extreme in some of the weaker economies, which couldn't buffer their economies through fiscal intervention. So the limited amount of material available has been allocated to countries that are taking on the fiscal hit, like India is. But it's a matter of weeks before even that inventory starts to dwindle, and then airline schedules start getting curtailed, and serious product shortages start to emerge.
Your point is well made, Neelkant. Hi, morning, Alex here. I'm just wondering at what point it's going to have a bearing on projections for economic growth in FY27. There already have been certain estimates that have been cut, but then what you're describing, if this is the base case and it takes 2 weeks, and we're talking about not just crude sensitive industry, we're talking about, for example, the implications of helium, or you're talking about sulfur and various other supply chains also getting impacted. At what point will you be able to, if not accurately, then with some more confidence, estimate the impact in FY27?
The way the estimates are being made so far, if you see the IMF's estimate that they cut growth by about 10 basis points for this year, or take commodity traders who are, all of their assumptions are that this ends in April and May we start to open up. It takes about 3-4 months for the supply chains to normalize, and then we have a much stronger second half growth. And today, the RBI Deputy Governor's interview also suggests that they've taken a first half slowdown and then a pickup in the second half. So I think most people are assuming that this is a very short-term thing, and this is exactly what the US administration is also signaling. And this is why I think the markets are believing them. I think what starts to happen after a certain point is that when supply chains break, then the predictability goes away, meaning that, how long does it take for recovery? And as of now, I think we are still in that domain, that territory where if the strait was to open up tomorrow, the supply chains can normalize in 3 to 4 months. So far, nothing serious has broken. So no, firm has toppled over. Some very critical inventory situation has been, if you suddenly find that 15% of flights have been cancelled the world over. We are already seeing hotel occupancy rates plummet in India, in Southeast Asia, as foreign arrivals, especially business arrivals so far. Some of the tourists may have booked their flights 2-3 months in advance. Maybe that pain starts to show up. May, June is not a very hot season for us. It is a very hot season for us, not for tourism. But in some of the markets, I think that will actually start to disrupt incomes, and therefore maybe financial systems start coming under stress. So that is when the markets really start to worry about second order effects, which may be hard to recover from. See, we are still in that territory that if the strait was to open up next week or 2 weeks from now, the economy will have its turbulence, but things will settle down, and markets are forward-looking. So there will be losses in the first quarter, there may be losses in the second quarter, but because there is expectation and it is likely that recovery will happen very smoothly thereafter, there is no permanent damage done, and which is why I think the markets have been quite benign. When the supply chains start to break down, and then I think recovery then gets pushed out by a year, there could be effects on financial system stability. That's when I think the markets start to get worried. So that may be, I think 2 weeks may be too early because it's just 2 weeks. I don't think the markets can be that sanguine about something that is emerging in the next 2 weeks. Maybe middle of May. By then, it is reasonable to expect that the inventory problems will become quite severe.
Yeah, it's scary talking about this, but Neelkant, it's coming at the worst time because if there's one thing that you cannot control, it is the weather and El Nino, and the fact that monsoon is expected to be not so good, especially when it comes to spatial distribution in the current year, and the implications that has for rural economy. So the external side is clearly a problem, but there's also the domestic side. So multiple headwinds at the same time.
Yes, this does happen. Sometimes the problems emerge all at the same time. But I must say that if the forecasts of 92% of normal precipitation are accurate, and they don't go to the lower end, because there's always a range, 5-6% on either side. So if it's on the upper sides, of course, there's nothing to worry about. Even 92%, I would say, given that groundwater levels are quite good. If you recall, over the past year, we've seen barely any power demand growth because pumping, because groundwater levels are quite high. We've had several years of good monsoon. So we should be able to cope with one bad monsoon. I think it is the second consecutive bad monsoon which generally brings a lot of stress. If this 92, given the forecast, was to settle down at say 85 or 86, because you go at the lower end, see, this is expected to be a very extreme El Nino. So at least that's what the current projections are. If the hit is during our Indian monsoon, then I think possibly there is a bigger risk. But at this stage, I think 92%, if the forecast is accurate, I don't expect it to cause significant stress. If we are going into this with decent inventories of kharif crops, and vegetables are anyway fairly short cycle, so and they're higher yielding enough, meaning the yield per hectare is high enough that it makes sense to pump out water and give it to them. So I would say that the El Nino concern at this stage is less of a worry for me. I'm much more worried about supply chain disruptions, which are harder to recover from.
You know, you were mentioning a short while ago, Neelkant, that sometimes everything comes together. So we spoke about geopolitics, we spoke about monsoons. Let me also talk about the other red flag and the pain point, which is what's happening with our IT service companies. Their results are showing the stress now of AI and the deflationary impact it's having on earnings. You expect it to get worse?
Look, this is a period of transformation for the industry. So the industry, the firms themselves have to change. So there needs to be a lot of reskilling. Certain skills that were earlier prized and could be built are definitely no longer going to be viable, because, see, right now there are many other challenges. You must have seen that AI compute shortages are emerging. The firms that were aggressively asking their engineers to use AI are now realizing that there's a lot of sloppy code being written, and they are burning through their budgets way faster. So it's not that a $200 subscription a month is going to get you the same value as a, say, a $500 or a $700 engineer. So maybe that arbitrage is not going away as quickly, but that we will see over time. But there needs to be some, I think, recalibration, retraining of resources within the IT firms. I also think that over the next 3 to 5 years, the org boundaries will get redrawn. One of the major reasons why firms used to outsource IT was that this was a very specialist skill set. It was very hard to find people and keep them motivated about the most modern technologies. So as an economy, it was much smarter, either wiser and more efficient to have pockets of excellence, which then kept the economy. So effectively, as an economy, you are keeping, say, 5 million people trained on the most cutting edge, and whoever needs that skill set pays for it and takes it. That's how the economy and an organization structure is there. In the new scheme, maybe those skills become much more easily accessible, and so there is abundance of those skills. In which case, the org structure needs to be redrawn again, and it is possible that as the importance of software requirements, business understanding starts to pick up, firms start to bring in or insource, which is why I think GCCs are still hiring. So even as the firms which were software focused, I'm not going to name them because I shouldn't, but firms that were all about only chip design or only writing software, some of the social media firms which famously are now hiring people, for them, software development costs were the major costs. And so they have started to lay off and restructure. If you are, say, a retailer or a financial services firm, that is not your highest priority. Banks, for them, are the branches efficient? Are they selling the right products? Are we getting deposits at the right cost? And if IT services is a large part of the cost structure, but not absolutely critical to cut down, like say 30%, then that process will happen over 4 or 5 years. So this readjustment is a much more prolonged process in my view. And in the interim, though, the PE multiples for some of these firms, and which is exactly what we are seeing, will start to adjust. Meaning the earnings impact, which I think from an economic perspective for me is far more important. That earnings impact will show up at an economy level with a significant lag. But the uncertainty around which firm is able to train faster and how the org structure, the org boundary gets redrawn will mean that some of these PE multiples may come down more.
From an Indian economy perspective and the creation of much sought after high quality jobs, what about the impact there, Neelkant? One wonders about the second order impact of, say, some of these large IT services companies having to hire less.
Yes, just remember that India's workforce is about 620 million people. And the IT services companies, the total headcount is about 5.5 million. There's maybe another 2.53 million people in the GCCs and BPOs. And then you have maybe 2.5-3 million people in financial services. So all put together, less than 2% of the total workforce. So long as the value add change is not happening very quickly, I don't think there is a lot of headwind. But look at the new types of jobs that can potentially be created, the new efficiencies that can come in an economy like ours, which is low per capita income, and therefore our ability, firms' ability or the government's ability to pay for, say, high quality urban design, better quality buildings. I think all of those skills which were no longer easily available, or maybe some of the ads that were being thrown around during the World Cup and maybe even today on what the large language models or how they can change people's lives. A cricket coach figuring out how to raise funding or how to structure an organization, or some wall manufacturer in UP or figuring out where to export. All of this information, I mean, all of this will create new opportunities and will open up new avenues for entrepreneurs. So I wouldn't worry too much at an aggregate level. I think AI is going to be a huge opportunity for the Indian economy.
Okay, so a point taken. I do want to ask about corporate earnings, because the tendency is to look at it in a one-dimensional manner to say that if nominal goes up, and one assumes that with inflation likely heading higher in FY27, there will be some increase in nominal. But where we were at the cusp of consumption picking up, we were at the cusp of a few companies saying, look, I need to increase my capacity. But now you have supply chain issues. You will likely see a reduction in capacity utilization. We saw what the last supply shock did. Is that a problem point in FY27, Neelkant?
I agree with the assertion that the economy was looking up. March was a very strong month. I would say that the first 2 weeks of April also were fairly strong. But yes, I think the supply chain disruptions are now beginning to show up, and firms are becoming stressed. Stressed meaning worried about what may happen. In fact, if you ask everyone, they're of the view that we are fine, but we are worried. My sense is that from the earnings perspective, the impact may be slightly lower, maybe may appear with a lag. The reason I say so is that the larger companies, which by definition are the ones that are listed, may be able to weather the supply disruptions much better. So if, say, there is a shortage of packaging material, it is very likely that the larger firms will take them on first. And you may see them gaining share in very 2022-like scenario. We also see, for example, say for even oil refining and marketing companies, if the supply chain requirements, supply chains are getting lengthened, meaning what used to happen in 8 days or 10 days is happening now in 20 days and 30 days, their working capital requirements are going up, and that means stronger credit demand. So when you think about the Nifty earnings or the NSE 200 earnings or NSE 500 earnings, you're talking about larger firms and specific sectors which are, I think, over-indexed than the rest of the economy. We have seen earnings trajectory, at least till March, being quite much better than what it used to be till 6 months before that. Are we going to see aggressive cuts? Maybe in this earnings season, some people will recalibrate, some analysts will recalibrate at FY27 and 28.
Yeah.
But by and large, if this ends in the next 2 weeks or 3 weeks, which I hope it does, I think all of us hope it does, then maybe meaningful cuts may not be necessary.
Yeah, so the next 2 weeks become crucial. Either things get worse or this ends. But having said that, Neelkant, just this week, you've had 2 downgrades on Indian equities from HSBC and from JP Morgan for a variety of factors. Is it fair to say that for some reason or one way or the other, India seems to be more vulnerable than even the direct participants in the conflict? I'm sorry, we missed that bit. I think technology just somehow came in. We missed the bit of what you just said.
No, I don't want to opine on other people's opinions. I think you see in a market on every day, every time you see a new price, there's a buyer and a seller. So people are happy to sell and buy. I think the Indian economy is in a good place. I do think that it is particularly vulnerable to the energy market disruption. It's a concern, and I do think that we need to address that strategically. But at the same time, if the oil markets do stabilize, the energy market do stabilize, then the fact that the cost of capital is lower, reforms are happening, there's some significant changes that are happening. You must have seen Andhra Pradesh giving DISCOM licenses to data centers. There is significant energy market reform that is underway. A number of the structural constraints that we had put on ourselves are starting to change. We are making deep inroads into global value chains in electronics. So I don't share that pessimism about India's medium-term future. From a trading perspective, yes, if the oil prices go to $130, we have a severe problem in FY27. So if people want to take a short bet on India, maybe it makes sense, but it's predicated on how long this conflict lasts. So again, my view on the medium-term outlook on India is far more positive and optimistic than some of the. But it's important to respect that, maybe from the outside, India doesn't look that attractive. Maybe the messaging can be improved. But frankly, I don't bother too much about those kind of downgrades.
Okay, fair enough. Thank you so much, Neelkant Mishra there, for taking all of our questions and answering so extensively and in detail. An important perspective. Next 2 to 3 weeks are crucial. That, I think, is one big takeaway from this conversation. Always a pleasure to speak with you, Neelkant. Okay, the other big story, of course, is the impact that some companies are facing after the US has imposed steep preliminary anti-dumping duties on solar cells and panels imported from India, Indonesia and Laos. The maximum amount of import is from Indonesia. We're going to be speaking exclusively with Waaree Energies in just a few minutes, but Varsha joining in to give us the context of what this means for the company. Varsha.
Well, this is definitely a negative news for the solar panels and solar cells companies in India, as US imposes duty on solar cells and panels from India, Indonesia and Laos, and the duty for India stands at around 123% and 35% for Indonesia and 22% for Laos. And the three nations, if you see, accounted for 57% of the US imports in H1 2025, and which equally nears to 2/3 of total US imports. And India's solar export, if you see, stand at around $792 million in 2024, which surged 9x compared to 2022. Well, final decisions will be taken in July 13 for India and Indonesia and September 9 for Laos. And why US is doing, of course, to protect domestic US solar manufacturers, as cheap imports were hurting local production. So because of this reason, we are seeing the solar cells and panels companies stock price in pressure today.
Well, thanks for that, Varsha. And let's get in Mr. Hitesh Doshi on the conversation. Hitesh bhai, thanks so much for taking the time out. Your initial comment on this, while this is a notification of what was known earlier, it is certainly a big hit because the Indian duty is much more than the duty levied on the neighboring countries.
Oh, thank you. Thanks for inviting me and giving this opportunity. As you know that in United States, there is no duty on the solar panel. The duty is on the solar cell which is used inside the panel. So country of origin of the solar cell makes the difference here. So what happens exactly? Suppose I am using a solar cell made in India, then whatever the duty is on the India, I have to pay there. But at the same time, if I use the cell made in some country where the duties are, let us say, 10%, then when I make the solar panels in India and export to United States, then the duties will be only 10% on that solar panel. So this is what you can see from the country's perspective. At the Waaree's level, we have never used an Indian-made solar cell. There is a duty or there is no duty on India, or whatever comes in the final findings. We use the solar cells from the countries where the duties are less, and we make a solar panels in India and then we export there, and we pay the duties of that country on that solar panel. There is a duty or there is no duty, we clear the customs based on their local regulations there. Another thing for Waaree Energies is that we have 2 manufacturing plants in United States. So, of course, there is no solar panel duty today and not also in this. But if it comes in future also, we have the local production, which will also help us as a company in altogether.
Okay. So, Hitesh bhai, just trying to understand this, the belief is that for you, because 60% of your unexecuted order book is US, if I'm not wrong, and exports constitute about 29% of revenue, do either of these figures get hit in either fashion? I heard you speak about how you don't use the Indian-made solar cells, but you have production facilities out here in India. And wouldn't it be ideal for you to use your own cells as opposed to using third-party cells?
First of all, we need local cells more for the local market here. And as you know that the new policies which are coming, we will need more made in India solar cells in future. So definitely there is no plan to make a solar cells in India and make a solar panels and export to US. We will continue what I have been doing for last 10 years. That's the one thing. But the second most important thing at the country's perspective, I would like to share that this investigation was together for 3 countries. It was not only for the India. The Indian share in that period was not more than 3.6% of the total import in United States. So now after filing the preliminary duties, there will be the hearings where the India will present their case as a manufacturers. We will, of course, and we will inform that this is the numbers are very low. So we don't know what the final results comes, but as of now, the import from the India, United States in the investigation period is not even more than a 4%. So this is another opportunity for us as a country.
No, which is fine. Okay, so for Wari in particular, Hitesh Bhai, what happens to your US business, the export business? It is a large portion of your book. Do the US made cells therefore mitigate the impact, or are you actually saying to me that there is virtually no impact for you?
Absolutely no impact to us.
Wow. Could you kind of please, just for the benefit of our viewers, Hitesh Bhai, because the markets are penciling in that you will have an impact on the 30% of the exports that you have, and you are telling me there is zero impact. I know you maybe mentioned it at the beginning of the interview, but could you tell us piece by piece, why is it that you're saying there is no impact? Because there is a duty out here which is very, very high.
So let me explain again. The duty in United States is calculated on the product from where you have purchased the solar cells. So there is a solar panel. In a solar panel, we use a solar cells. These solar cells, if they are made in, let us say, some country where the duty is 250%, then the United States, even if the panels are made in India, they will charge me 250% duty. At the same time, if the solar cells are made in a country where the duty is 0 or 10%, then I buy the solar cells from there in India. I make the solar panels in India and I export to United States. I will pay only 10%. Last 10 years, the Wari is using the solar cells from the countries based on the duties.
Okay.
So we are not used in last 10 years any single solar cell which is made in India, even if the duty was not there.
Okay, and okay, fine. So Hitesh Bhai, the fears that people have that the domestic market could get flooded by Wari cells, which is not able to export and thereby use in India, you are saying are unfounded. You anyways didn't use them.
We have enough demand, enough orders, and we do not have any plans to use an Indian-made solar cell. Even if in a final finding the zero duty comes, we do not have at present the availability for the export.
Got it. Okay. Part 2 of my question is, because you're sourcing cells from other country, it does become a bit expensive relative to what it would be if they were your own cells, whether made in India or whether made in your US facility as well. I believe in Texas. How do you mitigate that? Do you use, what's the status of your US facility, and do you use that for your incremental US orders?
Right. At present in United States, we are making a solar panels. So we are not making a solar cells. Even in a United States plants, we import the solar cells from the countries based on their duties. So to make a solar panels in India, we do not get the solar cells from United States. We buy from the countries based on the duties time to time.
Got it.
And as you know, these duties are not fixed nowadays. So it changes every time. So based on the time, based on the duties at that time, these decisions are taken.
Got it. Hitesh Bhai, before we end, I'm just trying to make this simple for everybody listening into this. There is a very high import duty levied on India versus some of the neighboring countries. You are telling me that post the final order, final imposition of this order, if it stays at the current levels, let's say from October 2026, if I'm not wrong, you are telling me that Vari Energies will not see any impact at all of these duties. For you, it is business as usual on your export side. Am I understanding this correctly, sir?
Absolutely. We will continue in the same way. We don't see any impact in that.
Okay. One last question. Any impact on some of the other companies, or all of them would be doing the same thing, Mr. Doshi? That you can buy cells from a country of a lower duty origin and do it and export to the US?
Absolutely, you are right. Anybody who is buying a solar cells from the country, that the duties on that country will be liable at the time of import in US.
Okay.
So it's not for Vari, it's for whole country or anywhere across the globe.
Got it. Okay, Mr. Doshi, I understand you are in a silent period. Results out on, I think, 2-3 days from now, so we'll get the chance to talk to you then. But thank you so much for coming in and talking to us about this. Viewers, on NDTV Profit, Vari Energies exclusive, saying that there is no impact at all. Forget material impact, no impact at all of this duty, and their numbers will not show any sign of a higher duty if it were to become a reality post October 2026. You get these details only on India Market Open and on NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
One teacher, a million destinies. MV Sir, live at NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when
We are joined in by Rajiv Sabharwal, the MD and CEO at Tata Capital, and the company has come out with a really strong set of quarterly numbers. And to decode this more, we are joined in by Rajiv, sir. Sir, if you could just explain us what led to the outperformance in this fourth quarter, and now since the financial year is over, I'm sure there must be the outlook coming in for the next fiscal as well. So if you could just give a light on both of this.
I think the last year was very good. Actually, the growth was very strong. And the good part is that the growth was there across all segments. Whether we touch housing, which is the largest segment for us, or we talk about retail business, both on the secured and the unsecured side, as well as SME and corporate. The growth was strong in all products, which led to an overall growth for us of about 28% if we exclude the motor finance business. Which was one of the highest in the last few years. Along with that, we also saw the credit cost improving. The credit cost has been coming down quarter on quarter. And for the year, excluding motor finance, our credit costs were sub 1%. The other benefit which is accruing to us is because of the investment in technology over the last few years and the use of GenAI over the last 18 months, we are seeing a significant drop in the cost of doing business, which is also helping us. So it's a combination of all of this, which has helped us in bringing about a much higher increase in profits. For example, if you look at non-recurring items, our profits for the year was up by over 36%.
Right, pretty much interesting, but let's get a little bit into the details about the performance. The AUM mix, that seems to be a little bit of a shift in the decline coming when it comes to home loan, personal loans or two-wheelers, and now it's shifting towards SME and corporate. Now, is this intentional? How is the product mix or the AUM mix? You could talk about it going forward. What will be the targeted mix?
So if you look at a year back, our retail plus SME was about 87%, and as of now, it's about 86%. So there is no significant shift which has happened. This typically happens at certain points of time where you see growth more in certain sectors. We do believe that for the coming year, we will see more higher growth on the retail and the housing sector, and we will see that proportion increasing. If I just have to pick up a few products, our housing finance company has grown at close to about 30%. If I pick up a retail secured business, which has grown by about 28% or so. So we've seen good growth happening on retail as well as housing. SME has been strong post the GST cuts, and we also found certain opportunities to grow on the corporate side. But in terms of proportion, still about 86% of our business is retail and SME.
Right. So retail, SME, 86% of the...
All right. So that was the management, of course, of Tata Capital. And viewers, welcome to Ask Profit. This is a show where we try to get all your stock-related queries answered. For viewers who are tuning in, you can either give us a call or send us a WhatsApp with regards to your stock-related queries. But before we start doing that, let's take a quick look as to how the markets are doing at the moment. The Nifty 50 is now down by about almost 1%. 200 points of a downtick is what we're seeing. Almost at its day low points, we've slid below the 24,000 levels on the benchmarks. Let's try to pull up the heat map and see as to what are the counters that are putting that kind of pressure coming in. You have Infosys, HCL Tech. So IT continues to be a drag. Infosys down by about 4%, HCL Tech down 4% as well. Tech Mahindra, TCS, Wipro, all of these counters down in that range of 2 to 3%. You have Sun Pharma, which is also seeing a downtick of around 3% followed by Eternal, BEL. Also dragging down. In terms of counters that are holding up, you have Coal India, which is up 1.4%, Grasim, which is also up by about 1%, and slightly Auto is where we're seeing a tad bit of recovery. Bajaj Auto as well as M&M seeing an uptick of around 0.5 and 0.6% each. Let's quickly pull up the sectoral heat map to see as to what that heat map is looking like, and probably it's a day of red. And a sea of red is what we're seeing. Nifty IT dragging the most. Yet another 3.5% of a downtick is what we're seeing. Largely, dragged by heavyweights. Pharma is also seeing profit booking today after the rally that we saw yesterday. I think largely dragged down by Cipla, down 1.4%. Followed by metals, bank, as well as media and realty seeing downtick. Nifty Auto losing the least ground, but still down by about 0.3%. Let's quickly pull up the advanced decline ratio and see as to how that is faring, because the broader markets as a whole are were at least holding up. Now that's not the case. Tides have turned, and that gap in terms of advanced decline ratio is widening, Puneet. You have right now 2,000 odd declines versus that of 500 odd advances. So 3:1 ratio in terms of declines versus advances is what we are seeing.
Well, most certainly, and you continuing to see pressure largely led by the IT stocks, which Mahima discussed. So earnings for Infosys yesterday didn't into the street one bit, and that's having an effect. The other pack that is in focus is also the solar pack, which we were just in conversation with the management of Vari Energies. So Vari Energies is down, but stocks like Premier Energies are now in the green. You're also seeing Fujiyama Power up almost 4%. So the domestic plays doing relatively well as well. But in terms of the mid cap and the small cap, let's look at that index very quickly as well, because we continue to monitor all of those. So it's down 0.8% for the mid cap 150. The small cap also, it's down with a similar percentage. But the individual movers, quickly look at those as well. Continue to be in focus on the back of a lot of them on the back of results. But today, in terms of the gainers, MRPL as well as the AB, Aditya Birla Sun Life Insurance on the back of decent earnings. Cochin Shipyard is the other one. Aether Industries, UTI Asset as well is down in trade today. So is Signed on the back of results and LTM. So you're seeing the IT pack very visible in the BSE 500 as well. But let's go across, start taking all your stock related queries now. Let me welcome in Sachin Janardhan. He's the AVP Derivative Research Analyst at IDBI Capital, and we'll shortly be joined by a fundamental expert as well. Sachin, very good morning and thanks so much for joining. And let me go across, take the first query now. This one's on Jyoti CNC Automation, and our viewer is asking if it's a good time to enter into the stock as a fresh entry is the question from Sai Kumar. Would you recommend that?
Jyoti CNC, we have seen continuous basis. The stock is trading into a lower high, lower low pattern. Overall, the trend is down for the stock. Recommendation will be to basically, if anyone is holding this stock, one should exit it, should not buy it.
Okay, all right. So that's the view coming in on Jyoti CNC. We've got our next, in fact, the first caller for the day. Narendra is calling us from Hyderabad. Narendra, a very good morning to you. Go ahead, ask your question.
Yeah, good morning, madam, and good morning, panel members. Regarding, I have the Karnataka Bank, quantity is 300 shares at price of 245 rupees. So this bank is not moving much. So can I hold or can I sell? If I sell, I can buy on Power India stock.
Okay, Narendra, got your question. I'll take this up with Sachin. Sachin, your overall view on Karnataka Bank, he's sitting on a mild losses for around 1,000 rupees.
There is no problem. Basically, the trend for the stock is up only. He can hold it. There is no problem. In all the time frames, basically on daily, weekly, and monthly, the trend and the structure of the stock is also good. Yeah, there was a consolidation and profit booking in this stock around for a year, basically, and which dragged down from an all-time high towards the 43% down. But yes, it has recovered and made a base of around 50 month moving averages, and then it has moved up right now from a bottom. If we can see, it has already recovered 57% from the bottom, and we can see the all-time high levels of 286 as well. So he can hold, there is no problem. We can see further 300 and 355 levels also in this stock.
Got that view.
Power India, if he wants to buy Power India, there is no problem. Even the stock for Power India, the trend is very much strong. So even he can add in Power India as well. Need not have to exit from KTK to enter in Power India.
Got that view, Sachin. But the next question coming in now on Himadri Specialty. Now this company reported results and stocks up flying in trade today, up over 10%. Now, our viewer, Ramesh is actually asking this question. He's bought 200 shares at 489. So sitting on considerable gains at this point of time, asking what he should do with the stock now for the next 3 to 6 months. Sachin, should he still continue to hold this counter?
Yes, he should continue to hold as overall the trend on all the time frames is strong. Structure has been good. If I compare to all the months from last 6 to 8 months, the stock was not actually doing anything. And from all-time high, the stock has fallen around 44%. Now the recovery has been done. The base has been done around 20-month moving average. From the base, the stock has already recovered 65%. We can see the all-time high levels of 688 and above levels as well. He should hold this stock. There is no problem.
Okay, all right. We've got our next caller. Anita is calling us from Bengaluru. Anita, a very good morning to you. Go ahead, ask your question.
Very good morning to you, ma'am, and all of you.
Actually, I wanted to enter PNB Housing fresh, ma'am. So I wanted to know what is the short-term view on this. Like, what is the price to enter and what is the price to exit?
Okay, Anita, got your question. I'll take this up with Sachin. Sachin, your view on PNB Housing, whether it's the right time to make an entry?
So from a fresh entry point of view, I need a closing above 1020. If we are getting the closing above 1020, she can enter, and the targets for above will be 1158 and 1301.
Got that view, Sachin. But the next question coming in now, this one's coming in on Senco Gold. Our viewer has bought roughly around 120 shares. This is Bhaskar, holding at 325. Now, Sachin, should he still continue to hold this particular counter?
So Senco Gold, overall the trend for the stock is down, and I don't recommend such stocks wherein the daily and weekly both the trend is down. The stocks are getting intermediate basically bounces, but that bounces are not able to capitulate and hold it. So basically exit will be the strategy in this stock.
Okay, all right. We're also joined by Samir Dalal of Natwalal and Sons Stockbrokers now. Samir, the next question that we have is from Kalpana, who's writing us from Muzaffarnagar, holding 500 shares of Eris Infra Solutions at the rate of 120. Wants to know if she can continue to hold this or not. First of all, of course, very good morning to you. Your view, if any, on Eris Infra?
Good morning to you and your viewers. No, unfortunately, no view on this one.
No way. Sachin, your quick view on the charts for Eris Infra?
Which one?
Eris Infra.
You spell it?
The spelling is ARIS, if I'm not wrong. Is that correct? ARIS? Yes.
Yes, Infra Solutions?
Yes, correct.
Okay. The trend is down. Exit will be the strategy.
Okay.
Okay, got it. The next question coming in now, and very topical for today's market. It's on Coforge. Now, our viewer, Harsha from Vijayawada, who is a regular viewer, is holding shares at 1400 rupees per share, bought roughly 15 shares, asking if she should continue to hold or sell out this counter at this point of time. Samir, good morning to you. What would you recommend Harsha to do as well? Because we've been talking about the IT space and coming at that 15-16 multiple because of derating, and today seems to be one of those days, right? Would you recommend her to continue to hold, average down? What would be your strategy?
So good morning, Puneet. Yeah, for the time being, it would not be a sell for sure. Look, a lot of the negatives are priced in. So definitely don't book your loss out. I would actually not average at this point of time. Also, I would wait for the stock to stabilize. I would like to see what further news flow is coming from in more Indian IT companies. Already we've got the larger ones that are through. But it's a very clear indication that growth is a serious concern where you have companies projecting between -2 to +4 or max 5, right? Apart from a persistent who says we'll grow at 15%. So in that kind of situation, to say that, the turnaround is going to happen and these stocks are going to rally, that's not going to happen immediately. But like I've been saying for some time, play this as a counter or this sector as against a FD. I believe from today's price, I'm sure you'll be able to get more than 10% return. But in general, on the larger IT players, I think it's easy for you to say that you'll get your 5-6% div yield. And then on top of that, 5-6% growth because profitability grew by 5 to 10%.
Okay, all right. So that's we coming in on Coforge. I think we've got Mohan calling us from Mysore. Mohan, very good morning to you. What's your question about?
I just want to know, can I buy Swaraj engines at this time for a long-term perspective?
Okay, I'll try to get a view on this one. Samir, do you have a view on Swaraj engines?
So we don't have active coverage, but we have studied the company. Fundamentals are good. Valuations not the cheapest. So from that perspective, corrections may be a better opportunity. And in general, I feel right now, what's happening is there's a massive de-rating happening in PE multiples across the board. So in that kind of situation, buying counters like Swaraj Engine may not make the right sense because there will be a de-rating in the valuation multiple, and that is maybe the time to get it, not right now.
In fact, viewers, the visuals that are coming in, we have Ridham Desai has already come to our office, and we are going to have a very exciting town hall with him. This is, if you have a question to ask Ridham Desai, this is your one and only chance. You can go ahead, send us what questions do you want to ask him, and we'll be more than happy to take it up with him. Do stay tuned to NDTV Profit for this exciting town hall that we're going to soon be hosting with Ridham Desai. But let's, again, start taking your queries. The next one is on Delta Corp. Shrikant from Hyderabad has bought it since 2021. He's got 100 odd shares at the levels of 126. Wants to know whether he can hold or exit this one. Sachin, yesterday, of course, the stock rallied on the back of its Q4 numbers coming in. But overall, from a chart perspective, what should he do?
So overall, the trend on the daily chart has improved, but from a longer perspective, like weekly and monthly, the trend is down. Upper resistance will be around 80 and 89 levels. I think the stock might get a resistance from that levels and can make a new low of 50 levels as well. So I think exits will be the strategy in the stock.
This one's a very interesting question. Ram from Michigan, USA, where it's almost 1:30 a.m. right now, has written to us. And this query is directed towards Samir. He's holding roughly 1,000 shares of Sterling and Wilson, and he's holding it at 220. Asking Samir what he should do with this counter. His conviction is that 600 is on the table. What is your opinion on yesterday's results is what his question is. So I'm sure this result you must have definitely studied, Samir. What's your view on the counter now?
Yeah, so I was a little surprised with the results where the top line didn't grow to the extent we were expecting, but the margins came in far higher than what we were expecting. So I guess one positive and one negative. Look, I was just on the con call before I joined your show at this point of time. And, the basic theme and thesis around the stock at the company at the moment is, when will Bade Papa give the order to Sterling and Wilson for the Reliance New Energy projects, and they keep discussing that we are in active discussion with them. So it's a question of when that order comes in. It's not if, and how large it will be, and what margin profile they will allow Sterling and Wilson to make. Now, if they're even giving them 8-9% margin, but given large orders, we've discussed what the operational leverage is there for the company. For simple example, they increased their turnover from the previous year to the current year by about 20%, whereas their cost structure at the central offices remain the same at 350 crores. So you got the operating leverage playing out, and that we believe will continue to play out. So yes, I'm very positive on the stock, but it is a question of when that order finally comes through, and then the execution of that starts happening. So maybe 600 in the next 2 years, I think is a strong possibility. If he's expecting it in the next 1 year, I think little difficult.
Okay, so that's the view coming in on...
No, that's just a very unique way of putting it across, because, we've been speaking to Samir for such a long time about this particular stock, and, I'll have to give credit to you, Samir. You do come out with a newer response in an innovative way with the same thesis. So I'll give that to you, but most certainly that estimate of whether this company will be led to make margins, that's the key question. Yeah. Stock's down 2% today, but on Monday got that big order. And Samir, you'll have to believe us, but we did talk about it that, that big order has finally come through. But yes, a lot to talk about.
We did miss you. We did miss you on that show for sure. But yes, moving on to the next question. We've got a question on Kalyan Jewelers. This is from Santosh, who's writing us from Bengaluru. Got 320 odd shares. At 75 rupees since the IPO is what he's saying. So he's been a very patient investor, and he's seen it rally also and fall down to that 407 mark as well. He wants to know if this is the right time to maybe add more to average out. He's around 2 lakhs rupees to invest in Kalyan Jewelers. Samir, would you advise that?
I say yes, you can go on and add some more. Look, the company's fundamentals are very good. They're expanding very aggressively. They're adding 100 plus stores a year. In Candia plus Kalyan, all through the low-cost FOCO model, which is franchisee-owned, company-operated. Their ROEs are moving up. Valuations are looking relatively okay. I will not say they're cheap, but they're not expensive. If you compare them to a Titan, it's trading at a cheaper valuation, right? So from that perspective, yes, I think there is upside. And as the industry continues to grow, Kalyan will do well. So you can definitely add on.
Got that view, Samir. But Saju is writing us to us for Infosys today. Now it's a difficult time to be an investor in this counter. Most certainly, she's holding 100 shares at 1,300 rupees and asking Samir if she should continue to hold. Now, I don't know if you have a view on the results, but while the order book has been decent, nothing to write home about, right? Stocks at a 5-year low, hit a 52-week low today. You spoke about Coforge, but would you recommend on Infosys as well that's a similar view, and how do you view this counter now?
So yeah, my view on Infosys is the same. So what I discussed at that time also was, Wipro going as low as -2% revenue guidance for the year, and most companies like Infosys going up to 3.5% on the upside. TCS unfortunately doesn't give a guidance, and Persistence has given a broader range that they want to reach a $2 billion mark, which will mean a 14.5%, whatever growth that is. So, the growth guidance numbers are not exactly very encouraging, but all of the negatives are priced in. These counters used to trade at 32, 33 times earnings when you go back to COVID times, when everyone did work from home and IT requirements had gone up. Since then, you've seen the companies obviously growing quite well, and the growth has started to taper off, and the valuation multiples in the same time have come down to about 14, 15 times. So from here, valuation derating in IT seems a little more difficult. More importantly, as the integration of AI starts happening into corporates, and companies like Infosys, TCS and all are given work orders to do those part of the businesses, I think that's where you'll see maybe a slight pickup in the revenue coming and margins improving. And that is when probably the stocks will start moving up. But I think that's a good year and a half away. But I wouldn't sell at this point. I'm very clear IT at this point is not a seller.
Okay, all right. So that's the entire perspective on IT as well as Infosys. Sachin as well as Samir, thank you so much for helping us all those answers with all those queries. But viewers, as promised, we were just talking about how we're going to have a very interesting town hall with Ridham Desai. So this is your one and only chance to go ahead and ask a question to Ridham Desai, a man who is extremely bullish when it comes to Indian markets. I mean, in times like these, I think a perspective on the markets as a whole coming from Ridham Desai is most certainly going to be a very interesting one coming in. So anybody and everybody who wants to go ahead and ask on macro factors for India, for Indian markets going forward, I think I always, whenever you read his reports, he's always bullish from a long-term perspective, right? He always talks about 10 years going forward. In fact, in one of his recent reports, he's also said that 95,000, 96,000 is something that he's looking at when it comes to Sensex. By the end of 2026. I don't know whether that's going to happen or not, considering the geopolitical conditions, but the way he puts into perspective everything when it comes to the Indian markets, the way he's maintained his bullish stance no matter what, I think that makes him Ridham Desai as a whole, and makes him as a different person viewing India from that macro perspective.
Compared to the emerging markets is such a strong point in that same report, where gold is giving you that indicators versus the Sensex, earnings are giving you that indication, and valuations are giving you that indications as well. So there's a lot to talk about with Ridham Desai over the next half an hour or so, but do stay tuned. Just after this very short break, we get you the man himself. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From the factory floors of Guangdong to the policy corridors in Beijing, what is going to be China's next political, economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
No offense to anyone and no pressure.
No offense to anyone and no pressure. That's the best way to start off a town hall with Rhythm Desai, because frankly, interviewing him creates some bit of pressure simply because he's so good with numbers that I tend to fall back every time about how do I ask the next question which can put you in a spot, and I have failed invariably. But I'm going to start off, Rhythm, by asking you what a lot of people on social media told me, that Rhythm Desai mostly will sound constructive on India. Now, is this the right time to be constructive on India, considering that the AI trade is still alive and kicking? We have a conflict in place as well, and there is a macro shock.
Chalo, this is going to be a long answer, so you'll have to be very patient with me. Okay?
Perfect.
So, pehla na, see, I used to read a lot. Okay? And I think that's the most wasteful use of time. Okay? I'll tell you why. So, there was only one book to be written on the planet, in the planet's history, and that was written 5,100 odd years ago. It wasn't written, actually recited, the Bhagavad Gita. Okay, 5,100 years have passed, billions of people have come and gone, hardly anybody's life changed. Most people have read the Gita in some form or the other. People don't read the entire Gita, but they have read the relevant portions. So it doesn't look like books do anything to you. Reading stuff doesn't change your life. Only experience does. So then why waste time reading, right? Which is a good, and I've read so many books, and then I try to see, which book, and I don't do self-help. Those are the books I certainly avoid. I do history, I do geography, I do science, physics I love. I've also read books on chemistry and a few books on investing. But imagine, all that we know about investing is contained in books. And yet, people struggle to be good investors. So if books were working, everybody should be a good investor, correct? However, having said this and put this into place, there are some things that come out of books that stick in your head and help you when you need them the most. So one of the things I've read, and the funny part of it, I can't remember which book I read this in. But obviously this is an investing book. And I can't remember who wrote this. But the line was that the point of maximum return is at the point of maximum uncertainty. So you have to make a call. Are you in an uncertain environment? So the most uncertain I have felt in life was in March 2020. I didn't feel uncertain during the GFC crisis, global financial crisis. I didn't feel uncertain in 2013 or when the tech bubble burst. Those were plain vanilla things. We knew that will come out of it. It was a question of time and how much prices will go down. But in 2020, I felt like I may not even live to see, the next 3 months. And yeah, tragically, my father did pass away. So this thought had crossed my mind, and I was sitting there at home and saying, this has to be the point of maximum uncertainty of my life, and therefore it has to be the point of maximum return. And so personally, I started buying stocks. And by the way, things fell 20% after I bought them. And then I bought more. And then they fell another 20. And then ultimately the market troughed. And then ultimately I recovered everything, and we know what happened. So this also feels like a point of great uncertainty. Not maximum uncertainty, but great uncertainty. We've been through wars before, and usually markets come out good from wars because good things happen after wars end. And a lot of good things will happen in India after this war ends. We will pivot on energy, we will pivot on fertilizers, we will pivot on defense, we will become a beneficiary of data centers, and I can go on and on. So this looks like the best time to buy, at least in the last 6 years since COVID. And now that doesn't mean that the markets can't fall further. They may. But we can't really catch the bottom, as they say, tops and bottoms are for fools. So one shouldn't be in that business. Now, hats off to Indian retail, because that's what they did in March. So, none of my institutional customers are watching this show. It's retail. They don't even need this advice because they're already there. They're buying this thing. And I know a lot of people think that they are foolish to do it. And only time will tell that they are not foolish, because when you buy risky assets during uncertain times, the prospective result is usually good.
Perfect.
So that's one. Now you ask the question on AI. So usme na, I have a very simple proposition. Okay, where is the next Neeraj Shah coming from? Neeraj Shah came. Neeraj Shah is one of, if not the best anchor in this country, one of the best anchors, and then I'll struggle to name a few others. So I will say the best anchor in financial news. We have some good anchors in non-financial news, but in financial news, you are the best. Where did you come from? Right? You didn't drop from the sky. You started your career as a junior journalist, learned the tricks of the trade, learned the ropes, interacted with people. It took a lot of work, right? And that is the problem with AI. So the threat of AI, as I'm told, is that it will wipe out the need for having junior people. The stuff that junior people do is no longer required. Well, then if you do that, where the hell is the next Neeraj Shah coming from? So I think the world will learn this in the coming years. So the knee-jerk reaction is let's hire fewer junior people and we'll cut costs and AI will do this, and then 2 or 3 years later there will be a middle management crisis across firms in the world because you will not have enough. And now when I talk to somebody at one particular firm, that firm will say, but we'll hire from the other firm. But if the other firm is also doing the same and then the rest of them are all doing the same thing, where are you going to get the next pool of talent? And by the way, you cannot even tell me that I'll hire 2-3 people, because Neeraj comes from hundreds of people that got hired when he stepped out of college.
Sure, perfect.
Right? And so it comes like at a rate of 1%, 0.1%. So there is a very low probability and therefore you cannot get it out of a small sample. You need large sample, you need population size sample to be able to get these stars out of it. So I think AI is a risk in the near term, but I don't see it as a risk in the long term. Come back to the AI question, because this was just an introductory answer. There are a lot of other things that I think are relevant regarding AI.
Okay, and we are going to come to that. In fact, there's a viewer query too, which we'll take later on. And I'm sure a lot of my colleagues have some questions too, but I have one follow-up, Rhythm. What can AI / the macro shock of higher oil prices do to India in the near to the medium term? Because one is that what AI does to talent, but two is that India doesn't have necessarily an AI play. Will AI be a commodity service, and therefore does India not need to fear too much, or does India need to fear too much?
So there are two parts to this. So firstly is the impact of AI, and the second is the lack of an AI trade. So that's a stock market question. The first one is a macro question. I'll take the macro question first. I think India is one of the biggest beneficiaries on the planet from AI. Reason is, AI benefits those with the lowest productivity the most. And India's productivity arguably is low across systems. I'll give you one example. We have 22 million cases outstanding in our courts, from the Supreme Court all the way down to the lowest court. The largest cohort of cases in India come from, it's a surprise, traffic violations. 500 रुपए का फाइन लगा, the fellow turns up in the court challenging that. Magistrates are busy hearing traffic violation cases, and serious stuff is held up. It's now going into AI. So challan goes there, photo goes there, police statement, appellant's case, everything, and AI is delivering judgments. This is going to unshackle our court systems. And one of the biggest macro risks to India's long-term story is lack of judiciary capacity.
That's true.
Which is, we have a pristine contract law, but its enforceability is a question mark. So if I have a contract dispute and I go to court, it can take any length of time to get it resolved. And that will prevent foreign businesses from setting up serious stuff in India. So we have to resolve that. And one of the ways to resolve it, because judges don't get produced at any faster pace, is to embed AI into our processes, and that has already started. Last year was the first year since we became a democracy that the outstanding cases in the Supreme Court fell. Because the Supreme Court of India is also putting AI into its process.
You're saying that happened courtesy AI. Okay.
Well, I'm not saying that, but AI is contributing. So when productivity is low, AI is a big boon, and it's going to help. It is going to help us in our factories, it's going to help us in our desktops, it's going to help us lift productivity, which actually enhances growth. Because growth is a function of, so how does macro growth come? It comes from two things. It comes from the growth in your workforce, multiplied the change in the productivity of that workforce. Now the workforce growth in India is already set, because that's the fruit of what we have done over the last 30-40 years. So the demographic will decide where your growth in workforce is. So that you cannot change. In fact, as Elon Musk says, that climate change will get resolved eventually, but the decline in fertility rate, humanity has no solution to it and has no way to reverse that. So that is not a concern for India. It's a concern for many other countries on the planet. And there's only that much you can lift productivity. So their growth is in a declining phase. India has that. And now if you can lift productivity, our growth, so AI will take our growth higher. Now, of course, there are near-term risk factors. The biggest risk factor arises from the fact that there's pressure from Wall Street to demonstrate on American firms to demonstrate that you are putting AI into your business. Now the simple metric that is used, which is very amateurish, but that's how the street behaves in the short run, is how many people did you fire last quarter?
Yeah.
Because if you fire people, then it means you're putting AI. Now, that doesn't mean anything, but that's how the street is concluding, and it will in the short run continue to behave in that fashion. Now, a lot of American firms have a lot of people in India doing low-end work that can be automated. So the instinct will be, let's get rid of these people. So there is a possibility that growth in that section of industry, which is largely in coding, may stall and may turn negative. And that could happen. And that's a 4 to 6 quarter transition pain. Out of that will emerge the fact, and Jensen Huang talks about the 5-layered cake that AI is. At the top of that, so at the bottom is energy, then you have the data centers, then you have the chips, that is the chips, and then in the infrastructure, the LLMs and the applications. India is going to be at the forefront of building the applications. How are you going to monetize all this AI? It's not going to come out of subscriptions that the current LLMs are charging. That's not going to take them much further. It will only come when people build real-life applications on these AI. And those real-life applications will be built in India by Indian techies. Okay. So
much
the
like
opportunity for our IT services industries is very large. But there is a transition pain. Which of course the market is already put into the share prices, so I dare say that the market has turned a tad too pessimistic, but that's okay. That happens from time to time. I think as you go forward into 27, 28, this AI opportunity will start reflecting in their earnings. Very similar to what happened when the world moved from enterprise to cloud 15 years ago.
Got it.
There was a transition pain.
Okay. Well, with that as an opener, guys, anybody a question? Sure. I mean, whoever. Mahima, yeah, maybe.
Yeah. So first of all, pleasure having you here, sir. I think my first question is from a perspective that we've seen markets consolidating, right? And which is valid also, which was needed also. But according to you, from a long-term perspective, what could be the 2 to 3 triggers that will push the market forward? And if not triggers, some policy changes in place which will bring back FIs into India?
See, the only thing in the long run that the market cares about is growth in earnings and return on capital. Okay, so let me just give you 4 strong macro drivers to India's long-term performance, which I reckon that no other country, with the possible exception of the US, enjoy. So the first is we have a young population and therefore growth in workforce, which, as I explained, is key to driving overall growth. The second is we have a very good balance between saving and consumption. Our saving rate is about 20%, consumption is 80%. It's a perfect balance. If you look at the 2 extremes in the world, in China the saving rate is a lot higher, and in America it's a lot lower, in fact negative. Okay, so there are 2 extremes. These are not going to end well. We are in that balance. Why? Because there's respect for property in this country. So people are very secure about the assets they own. They are not afraid that the government will come and confiscate, which to some extent they may be in China. And in the US, of course, people want to spend their future because it's become a consumerist society, which we are not yet there. The third is that we don't have excess capacity anywhere. In fact, I would say that we have shortage of capacity everywhere. So we've seen how Mumbai has built out in the last 10 years. And we have to do 5x of that. There are very few countries on the planet where you have to do such capacity building at scale that India needs to do in almost every area, whether it's defense, fertilizers, as we are learning from this war, that it's not enough what you have done, or it's in the field of energy or infrastructure or basic stuff. We have capacity building everywhere. So that ensures a very high investment rate. Earnings come from investment rate. And finally, the most important thing in the stock market is respect for capital. Our entrepreneurs are still very frugal about the way they spend. In fact, I would say a touch too frugal. And nobody out here in this room or outside this room will invest unless 15% return on capital nahi mila to. So that respect for capital ensures that share prices actually do well, which is what India has done on a 30-year time frame. This is one of the best performing stock markets in the world in dollar terms, which one cannot say about China, which is a much faster growing economy, but it's not such a good performing stock market because the respect for capital is not as intense as it is in India. The US enjoys similar type of dynamic. So the long-term outlook, I think, is pretty good for the stock markets. Because this all will ensure that we deliver earnings growth and return on equity.
Okay, my producer tells me we have about 9 minutes left, so we're going to make it a bit of a rapid fire between all the questions, but you didn't answer the second part of our question. Yeah. When do FPIs come back?
No, I didn't answer the second part of your question either, which is a very important one. I'm surprised we're running out of time already.
Yeah.
Okay, so I'll do this quickly. So you asked about the AI trade. So that has hurt India massively in the last 12 months. So our market started losing performance because growth slowed down. The government and the RBI both pivoted on policy last year, and the effect of that is now visible. As you can see, most companies are reporting very good numbers. So the reflation trade is very much on. But the lack of the AI trade hurts. And you just look at, say, the memory companies in in Korea. Their earnings are bursting at the seams, and they are doubling profits, tripling profits. That cannot be said about India. So the relative story is still not as strong, but I think we'll get there. So my understanding is that as you progress further in this cycle, some of those things will unwind. But AI is here to stay. To the best of my knowledge, I don't think it is going to go away. And those who characterize this as a bubble need to just examine this a little bit more closely. FPIs, I think the technical point is that if domestic investors are going to put 40,000 crores in a single month, somebody has to sell, right? Because they already got the bid out there. And because corporate issuances are not happening, FPIs are selling. So that's the technical point, because you can't get a trade in the market unless somebody is selling, if somebody is buying. The fundamental reasons were threefold. One is India's valuations were too rich going back in September 24. That's unwound now. Growth had slowed down. That's unwound now. And India did not have an AI trade. That has still not gone away. So at the margin, I think FPI interest in dumping India is waning. The interest to buy, I think, will be a function of how this relative world around India moves.
Okay, that's a good answer. Okay, Puneet.
Hi sir. You speak about earnings quite a bit, but also on a deeper philosophy level, you mentioned that you look at a lot of things. So investment philosophy, how do you look at it for a lot of investors who came during COVID, post-COVID, seeing their first kind of crash seeing the first kind of difficult time in the last 18 months, and with that combining what we've seen in the smaller and the mid-cap companies, they've run up. Do you think that your conversations with those companies give you enough confidence to show that they're still resilient and it was just the valuation that had run up at that time?
So, I'm going to borrow from Charlie Munger. 1994 Berkshire Hathaway AGM. Somebody stood up and asked Warren Buffett, how do I become the next Warren Buffett? So Warren Buffett, asked Charlie, can you please respond to this? Because it is not appropriate for me to talk about this. So Charlie said, listen, you can't be Warren Buffett, as hard as you may try. The best thing you can do is stack your money into an index fund on a regular basis, and the results will be good. 32 years later, he was absolutely prescient about it. The results have been good. And I think that's what people should do. Picking stocks, getting into businesses, trying to understand that, trying to understand what's happening to competitive dynamics, trying to figure out valuation, this is a full-time job. 99.5% of the people don't have the, in fact I would say 99.99% of people don't have the time. They have a day job to do. And this is not like, on the weekend I will go into one of these many applications that are available and figure out and look at a company and, apply some basic rules and figure that I've got a 10-bagger. It's not so simple. So I think most people should default to buying mutual funds and leave the experts to take care of their money, and the results I think will be good. Okay, now to answer your question, I think companies are feeling okay right now. Of course, they're feeling a little bit worried about the war not ending, because it is putting some pressure on costs in places, and then of course some trade channels also have got disrupted. But domestic demand I think is fine. Exports have been a little weak. So those who are relying more on exports are struggling a bit, but hopefully this is going to fade away sooner than we think.
So you've got a reputation as a perma bull, and you can't have a bull case scenario without having contemplated the worst possible scenario. So my question to you at this juncture is, sitting in April of 2026 with an uncertain geopolitical conflict, with a significant bearing on India with regard to energy, what is the bear case as we stand?
So this is a function of the time frame, and I would resist the temptation to give a 6-month outlook on this. It doesn't matter. Equities don't work on a 6-month time frame. If you want returns on a daily basis, then you buy fixed deposits. If you are willing to take the risk and you are willing to have that duration, then you buy equities, and 5 to 10 years. So this will pass. This is not such a big thing. It's not going to cause the world to end. It will be gone. We'll forget about this and we'll move on. So that's my first overarching point. The bear case is, of course, that the war accelerates and oil goes to $130, and then I think it will create a real pain for India. At the moment, it's not creating so much pain. India can absorb this quite easily. The intensity of oil to GDP, as I have said many times in the last few years, has halved in India. So we're not as exposed as we were in, say, 2008 when oil went to $140, or in 2000, or of course 1991 when oil prices doubled in a single month, and our BOP crisis emerged. So we're nowhere close to all those things. Our balance sheet is very robust. Energy prices, of course, will hurt a little bit, but nothing to really derail India's growth story.
Okay, Hiral has a question.
Hi, Ridham. My question to you is, we've been talking about India as a growth story since quite some time. We started with the China Plus One strategy. Then we moved on to say, post-COVID, we said, okay, probably we'll start emerging from here on with, some outbursts that we did in the pharma sector. After that, we're talking about US tariffs, where India came in and realized that, okay, we have to be independent. We cannot rely on, exports. And now you're talking about the Middle East war. Where we are looking at supply chain disruptions, right? Now, with all of this, do you think it's time for India to realize that this is the time we are actually getting shaken up, and from here on, we are going to emerge, and that's the reason why India should be a destination to look at for investors? May it be retail investors, HNIs, FIs, GIs, whoever you call them.
Okay, so when did the Prime Minister deliver his vision on Atmanirbhar Bharat? Do you remember?
I mean, it's been, I don't know the
COVID.
Yeah, before COVID, correct.
Before people started talking about China Plus One, before people saw the global supply disruption. So this vision has already been in place, and we've been working on it for the last many years, and we continue to work on it, but there's so much work to be done. But we have done this in many areas. In many areas, we have developed a fair bit of independence, but it's not going to be visible to you overnight. 10 years later, you will see the effects of all of this. So that work is already underway. And India is likely to gain share in global trade of physical goods, like it has in services. See, India has done extremely well on services. Its market share in services is 50% higher than its GDP share. But in goods, it's not so good. And there are many reasons. We don't have time to go through this. But in short, it was not only about the IDR, the Industrial Development Regulation Act of 1951, which we commonly call as License Raj. It had also to do with woeful infrastructure, high tax rates, multiple taxation, and also with the state of factors of production. A lot of work has happened in the last 10 years to fix this. Our tax rates are far more competitive than before. Our infrastructure is much more competitive. Our labor costs are now materially lower than China. And factors of production is work in progress. So you will see the effects. You can't assess this on a 3-4 year time frame. You'll see the impact of this. And investors largely are aware of this. Unfortunately, and when I say investors, I mean global investors, unfortunately their mandates don't allow them to take a 5-year call. Those who can, like private equity funds and venture capital funds, are doing it, and they've made good money.
Okay, so as we went down rhythm.
By the way, also FDI is happening. Again, it's not a story that's so well told, but last year we gained share in global FDI. And this year, I think FDI will go up again, and we'll gain further share in global FDI. So it's like even companies are setting up manufacturing in India ground up, which was not happening earlier.
Yeah, in fact, did we read that Hyundai is probably setting up a fairly large thing in Tamil Nadu as well? Okay, as we wrap up, you had said at the start of the show that there'll be a first amongst equals. The best question.
Oh God.
I put you in a spot. Maybe we'll do it after the show. Okay, but Rhythm Desai, thank you so much. Just one quick 20-second answer before we wrap up, because we are out of time completely. If you had to bet on the next decade being the one in terms of preference for manufacturing versus services, what would you believe?
No, that's too broad a classification.
Okay.
I think
we have 20 seconds. Huh?
Yeah, I think many areas on the supply chain side will do well. Because that's where the growth will be very strong. But if you're coming from a stock market perspective, you have to also see what these stocks trade at, because the stock market is not oblivious to these opportunities.
Got it.
Like you can see in this whole electricity supply chain, stocks are flying, right?
Got it.
So will you make money in the stock sector? Will do very well.
Got it.
That is a very different question.
Okay.
So I think the place to put money to work is where there's a lot of pessimism.
Okay, and where is that? I'm just extending that.
Take a 5-year view, I think IT services.
Take a 5-year view, IT services.
A lot of pessimism there. So maybe that's the place where you'll make money. It may not be the best performing sector from a growth perspective, but it's not pricing in even that little growth that it's going to do in the next 5 years.
Okay, well, on that note, Rhythm Desai, such a pleasure talking to you as always. Thank you so much for being with us on the Town Hall. Really appreciate it.
Thank you.
And viewers, thanks for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where I get to the hottest companies where you can create alpha or save your capital. But let's give you some hints before you understand which company I'm talking about. This is a pharma company which is incorporated in 1999. Also, last time this company came in KYC 5 months ago as well, when it was newly launched. It had an IPO. Stock was listed on October the 16th, 2025. But it seems D Street has given a strong thumbs up to the stock. The stock is up 90% from its IPO price, and recently the stock has been buzzing because it has entered India's CNS formulation market. CNS means Central Nervous System. But which company this is and why everybody is talking about it in the pharma space, and the company in focus is Rubicon Research. This is the company which we like to talk about and understand what the growth strategy is. But it's at an interesting pivot level also when it comes to its business model, and we'll try to understand that. The first question for this company is its entry into this big formulation market, and what's the synergy, because they have acquired a company called Arena Life Sciences. It will be very much interesting to understand more details about it. What's the operationalization timeline for the Pithampur plant? That is very much important as company starts believing much more on its own rather than contract manufacturing, and this is where the question comes, because that model also needs to be sorted for this company, and of course investors will be looking at that for the next 2 to 3 quarters. The uptick in the specialty product share in the gross profit, how does this go out, and the specialty segment, what are the margin outlook for these key products, and of course we'll understand the key product launch pipelines and the product lines. What should someone track for this company for FY27? But of course, when we talk about the geopolitical issues, concerns come in raw material, packaging, that is where the concern comes. But on the other hand, 98% of dollar billing also comes. And the inventories, they are on the higher levels. Will they remain elevated in the fourth quarter? That's the key question to be asked, because they are getting a lot of higher orders as well, the new orders which we speak about. And joining us would be Parag Sancheti. He's the CEO at Rubicon Research, where he'll give us the entire details and the questions for the company. But let's get into more details about this company and see what has happened, since the last time the company came to KYC, and now we are doing a little bit more detailed coverage on that. Company, as we know, listed on 16th October 2025. It's an R&D led pharma manufacturing company with a focus coming on the regulated markets. Now if you go into details, there are 4 dosage forms where the company is focusing on: oral solids, oral liquids, nasal sprays and topicals. And seeing the condition of my cough, I think I might be needing nasal sprays as well. But let's also talk about the company's inspection facilities, the R&D facilities which is there. And one each is there, one is in India, another one is in Canada. So these are important facilities to look at. There are 3 US FDA approved facilities in Ambernath, Satara, Pithampur. Pithampur is in, of course, you could say Madhya Pradesh, and the other places in Maharashtra. The R&D expenses is pretty high, and that's a good sign if you're tracking a company like this. 11% of the operating revenue. Generally the industry range is 5 to 6%. Now they are entering into India's CNS formulations market, and if you get into the details about it, this is a strong acquisition which the company has put in. This is of course the factors coming in at play. The pricing still continues to remain stable as per the Q3 numbers. Remember, the company has not come out with its Q4 numbers, so we'll try to understand, or at least try to get a flavor of where the trends are lying. Also, apart from that, the commercialization rate continues to be on the stronger side, especially for the US markets. It's 90% plus. I'll get you an important detail on those operational front. And also let's look at the other key factors, and this is the number which I'm talking about, and that's the growth strategy looking like. But let's get into a little bit more details about it. And there's a larger reliance on the outsourced manufacturing, and that is why they want that commissioning or the commercialization of the Pithampur plant to start fast. So of course we'll ask about the timelines, and this is where we come in. That's what company has given. So this is a very important trigger point for the company. It changes the business model a little bit. The key operational data, look at these numbers. 83 active approved products are there. And if you look at the second operational data, that's the number I'm talking about, 92.77% of the commercialization rate. Let's pull up the third operational parameter, and that also is showing a good momentum. But the product concentration, that has been going down. That is something to look at for as well. But how the company is passing the D-Street test, stronger returns post the IPO, and they have done well. Second important reason as per my analysis is better return ratios as compared to the global peers which we have done. That means there is a good strength in the long-term basis, and 98% of business is via dollar billing. And remember, dollar has been appreciating, so it augurs well for this company. Street is bullish on the new product line forays as well. So as of now, since IPO, the company has passed its D-Street test. But now what happens, that's also very much important. But to judge that, we need to get our ratings back to judge this company. In a KYC, the important numbers we track is of course the income statement, balance sheet and the cash flows. But apart from that, also the return ratios is something which we track. And now the company has a history, so we'll have shareholding analysis. Street cred, kitne paisa banaya, kitna nahi banaya. valuations. We'll try to see how things are panning out over the next 3 odd years, and the outlook itself, the short term, medium term, long term, all of this outlook we'll get it for you. But without delay, let's start the first rating, and that is the income statement, and let's see what changes have happened. Largely the numbers have been growing. Just look at the top line numbers, they have been increasing very properly, and of course the bottom line numbers also, there is some kind of a good trend coming in. Just look at the EBITDA number, the net profit has also jumped in. This was a loss making entity in FY23, and see the growth coming in. But you must be wondering, this is just FY23, 24, 25. But if you look at the Q3 numbers also, they were really strong. The revenue, you could just show the PAT, EBITDA, all of them doing well as well. That means net the strength is very strong, and like we could just show the margins picture also to give us the entire picture of how the business is moving around, and this is where the magic happens, and the company is continuously growing, and it's around 23% of this margins. Is this a sustainable growth going ahead, or is there a more chance to touch that 25% mark? That's the question to be asked. But net income statement is really strong, so I'm going to give this a thumbs up when it comes to the margin trajectory and the income statement. Let's look at the balance sheet and see what has happened. Remember, company has come out with its IPO proceeds have been there to reduce the debt also. Largely most of the business happens via working capital. That's the debt financing which happens, and we see a decent cash balance is also there, around 151 crores, and we can see that the overall D ratio has been maintained for a company which is actually in its growth perspective as well. So net right now, let's give it a neutral rating for balance sheet and wait for a couple of more years to judge the company properly. But post its IPO, the company has managed its balance sheet ratios quite nicely. So we have spoken about income statement, we have spoken about balance sheet. Let's also talk about the cash flow segment, what it actually means, and let's just get in the cash flow numbers. Remember, the cash flow numbers have improved a lot. In the third quarter, there was a good 35 crore inflows coming in, and the way the turnaround has happened. So from FY24, which seems like an inflection year, things have been moving, and you see the overall strategy numbers have been really strong. And if you could just see the numbers, remember this is the cash flow. There's just an error on that top. It's not the balance sheet, it's the cash flow. That is where we see the good momentum coming in. Now, yes, we can see that. So it's a strong thumbs up when it comes to the cash flows. Let's also talk about the return ratios. The last time in KYC also, the company had a great numbers coming up, and now the company is actually backing it up. From 21% in FY24, the growth is coming in at 30%, and then we see at 34%. Look at that 9-month FY26, and that is where we see the good return ratios is coming in. So will this continue going ahead, or will it taper off? That's the big question to be asked for Rubicon Research. But overall, as of now, it's a strong thumbs up as well. Apart from return ratios, the shareholding, last time we just had the October shareholding, but now we are understanding largely it's unchanged. Promoters having a 60% stake, FI is unchanged, DI is a slight increase in it. We need to give it more time to judge the company, but net nothing much happening here to highlight. So I'm going to give this a neutral rating to shareholding segment. But let's talk about Street Cred, and the company has done well. Why I say that is because from its IPO price, the stock is up almost 90%. And remember, last 5 to 6 months, there was so much stress, especially in the small cap, mid cap. Of course, recovery was there. And year to date basis, also the stock is up 35%. So, जिन्होंने IPO में पैसा लगाया या IPO के बाद भी पैसा लगाया, दोनों को पैसा बना. So net, it's a strong thumbs up as well. But let's talk about valuations, how things pan out. And I've taken the ratios, expectations. Currently, it's a bit expensive, so entering in the stock might not be a good idea. But overall, if the earnings do well, at a FY28, it's trading at 35 times of P. So that's something to look out for as well. For long-term basis, definitely the stock looks good. That's what the analysts and the traders say. But short-term, do look at the valuations. It's still on the higher side. So right now, I'm going to give this a neutral rating. So we spoke about valuations and all the other 6 parameters, but the last parameter, but which it is certainly not the least, is the outlook parameter. They have entered India's central nervous system formulations market. That's a pretty big market, and also the benefit is coming in from the appreciation, the dollar appreciation, because they're billing 98% of them happens in that. Remember, pharma as a defense is also good. A defensive play is also good because of the volatility in the current times. Raw material packaging costs might be higher in the fourth quarter, but maybe that can be offset from dollar realizations and the new launches in the generics, especially in the nasal sprays. That is something which we'll be watching out for. And the operationalization timelines of Pithampur plant, this is very much important to show the entire perspective. So net right now, short term there might be a little bit hiccups, but long term the story is good. So outlook, I'm going to give this a neutral rating. But overall ratings, what's the total number looking like? And from last time, I feel it's a very significant improvement we have seen in the company in KYC, and that is why we get you these stories and we revise these stories back only for you. And see, look at that, 3 thumbs up coming in for income statement, cash flow and return ratio. And interestingly, because of the run up in the stock, the valuations are neutral right now. I wouldn't say it's very welcoming, but the outlook and the overall street get still remains decent. So overall, let's see the entire rating parameter of how much the moment happens, and it's around 6 out of 8 I have given, and this is largely on the higher side of the average ratings which I give for KYC. Very interesting. And let's also talk about the management, what this management is all about. We have Parag Sancheti, he's a CEO at Rubicon Research, and a little bit of details about him as well. Interestingly, he's been CEO in the company since May 2019, but associated for the last 13 years. Interesting trivia about him is also where he has worked and leadership roles. Of course, Avishkar Venture Management Services there, but something which I liked on his strategic background is the Tata Strategic Management Group. We'll just take a quick break and we'll get back talking with the management.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
One teacher, a million destinies. NVSA, live at NDTV Yuva. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back, and hi Parag, it's always a pleasure to chat with you. An interesting announcement came in last week also. That's where my interest came in the company, and of course this is you are returning back to KYC also, and this time it's much better performance and much better discoveries coming to the markets, and a lot of stakeholders are actually watching your company right now. We want to understand about this new entry into the CNS. Correct me if I'm wrong, it is Central Nervous System formulation market, and Arena Life Science acquisition which is at play. Explain us this acquisition, explain us what are the incremental benefits which can start coming in for the company, and how will you be funding this?
Hey, thanks Sharad for having me on the show. I think I did the first TV interview with you, and again happy to be back on the same show. The acquisition we've done is part of our global playbook to be a prominent player in the CNS or the central nervous system market, which includes neurology, neuropsychiatry, neurodegenerative, pediatric neurology. So it's a very broad segment. So we are looking at participating in this space, and which has been our stated vision of becoming a therapeutics company globally. And that's where the acquisition fits in, because India is a very growing market. The diagnosis on the CNS side has been increasing tremendously. And what we want to do is, as we are developing innovative pipeline products, not only for US, but we want to get these products to India and other markets where we can be recognized as a global leader in the CNS space.
Right, Parag, but we want some numbers, what kind of incremental benefit you can actually get from this. Is there anything on the pipeline? Is there any number or a range which can be, aiding the company going ahead?
So, Sharath, I can't guide you on a specific number, but I'll just give you a philosophy or acquisition, right? If you've seen over the last 4 or 5 years, whenever we have done an acquisition, we've done it for capability. The numbers of Arena Life Sciences is already stated. The 9 months number are around 57 crores is already, which has been part of our public release. What we are going to use Arena Life Sciences, more importantly, is to use this platform. They have a reach to 4,000 prescribers. They are fairly strong in UP, Madhya Pradesh, Maharashtra, some southern states. We will be using this reach to 4,000 doctors to actually give the products which we have developing for other parts of the world to take them to India, because we think these needs of or these innovative products will find a lot of value in India, and also patients will benefit with these therapies which are not currently available.
Right. Parag, let's understand a little bit about your model also. There is contract manufacturing, there is something which you are also doing, and everybody is looking at the timelines for your Pithampur plant. Now, the Pithampur plant timeline is first quarter FY27. Just wanted to understand, this is the exact time which the completion of the commercial operation will start. And secondly, I just want to understand one more thing, is how does your business model change now? Contract manufacturing ज़्यादा रहेगा या आपके खुद जो बनाएंगे वो ज़्यादा रहेंगे? What's the entire thing? That's the one big query coming in from the investors.
Yeah. So I'll just clarify, Sharath. I think we are not in the contract manufacturing business. All R&D we do it for majority of that is we are doing for our own products. Only in some special cases where we see strategic value, we do co-development or some kind of contract manufacturing for companies. But you should be looking at Rubicon as a company which develops and sells its own products across the world. So I think that's one thing I would like to clarify. If you look at the business, from 2015 to now, our revenues have grown 32x, primarily driven by three things: our product portfolio, the choices we make in terms of what products we want to do, the science and the quality behind that, and third is great execution. So these are the three things. Coming now to the Pithampur piece, I think can't share anything specific because currently we are under the silent period. But as what we had stated in our previous investor call or the results announcement, we are on track as per the guidance we've given in the past.
Right, that's an interesting take. But Parag, just wanted to understand, in the third quarter you had mentioned, very interestingly that the gross margins, they were under pressure. And I was just reading your third quarter. I'm not asking anything more. That pressure will continue in the next 2 quarters, 2 to 3 quarters. That was the statement coming in. Why is that pressure coming in the gross margins?
So I think I'll just speak on that because it's what we had disclosed even previously. Just clarifying that is the fact that we've been experiencing very, very high demand for our products, and if we had planned that there would be a certain amount of demand, I think the demand has been even larger than that. So we've had to do outsourcing of manufacturing to ensure we don't we satisfy our customers, all patient needs are met. So when we outsource, obviously the margins get compressed a little. But as we mentioned in the last call, in the long run, the idea is to get the in-house manufacturing. So that will be sorted. But having said, though the gross margins came a bit lower, our EBITDA margins were still intact.
Gross margins might be lower, but the EBITDA margins, they have been intact, and that's true. The numbers also I've seen. And of course, I cannot talk about the numbers. You're in silent period, but definitely when the fourth quarter numbers come out, I'll be asking you the question, is this sustainable or not? But there's a very high ROC number which your business is giving. But could you share a little bit about, not the exact word, but at least any product launch pipeline for FY27, anything, which areas you might see a good positive corporate development coming in? You do not have to be very precise, but just give us a flavor of it.
So we've been, if you've typically seen, Sharath, we've been launching around anywhere between 12 to 15 products in the year. As we, from a pipeline perspective, we are always very, very, we don't give any specific product names from a competitive reason and not misleading the investors, because the business of pharmaceutical formulations is a complex one and we don't want to mislead anyone. But I can only tell you, seeing a past record, you can just see the kind of business we are seeing for our existing products where we've seen good demand. I think even coming ahead, the products we try to choose, or we do products where we see there is there's some angle or some unmet patient need which we are solving for. If you look at our last time's numbers, are almost 32% was coming from specialty products, the gross profit. And specialty, just to define for the broader viewers, I think our products where we have one or less than one competitor in that product. So, a significant part of our gross profit even last quarter was coming from specialty products.
And this is expected to sustain going ahead, especially for the specialty products, this ratio which is there, or it's very dynamic? I'm just asking on a business perspective model.
Now you can see, so I don't want to give any forward-looking statement, but Sharath, you can see a previous track record, and that has been there in our DRHP and also in the last 2 quarters, it has sustained.
Okay, so it's pretty much interesting to talk about it, but geopolitical impact is something which we need to address, because of course देखें तो दवाई के दाम बढ़ गए हैं, raw material हो, packaging cost हो, and it of course hits the pharma players also. Of course there is an offsetting angle because of your dollar billings. Just wanted to understand the ground reality. The costs have gone up and this impact might spill in the first quarter also.
So again, I'll not link it to numbers. I'll just give you a general macro feel what is happening right now. Generally, as a company which is focused on the US markets, we do have adequate supply chain, because you can't. We at least have 3 to 4 months inventory, and for even some products might be even longer than that. But what happens is, with the war situation, I think there are 2 or 3 things to watch out for. The whole trade angle, right? The freight movement and all that gets impacted, and it's already got impacted severely. Second, when you look at the pharmaceutical sector, the starting material is for solvents, for lab chemicals, is crude oil. Now, if you look at crude oil and you've seen the prices, that's a stated fact. It is definitely impacting the broader pharmaceutical market. And we feel that as we even if peace prevails, I think at least for the next 6 to 8 months, the supply chain will not come back to the normalcy which it was running before the war. Having said that, obviously we have a lot of mitigation plans which have already we have worked out or in play. But yeah, there'll be definitely impact either on availability or on the pricing which will be there.
Exactly, and of course you spoke about a stable pricing in the third quarter, and of course we cannot discuss the pricing trends right now. One side, there is a supply chain impact coming in the industry for 6 to 8 months, and that's a very honest view coming in from an industry player like yours. But just wanted to understand about the inventory levels. They were very high on the third quarter itself, and you had mentioned and that these levels might be on the higher side as well. So what's the update on that? Is the same thing in Q3 which you had spoken about?
Yeah, so not commenting on the specific number, but I would just say that this is one of the reasons, right? Because our markets are United States. There is a certain time to take the products from India to US. We've already seen post-COVID, the shipping has not been the most efficient one. We have experienced a lot of. So we have kind of built a decent amount of stock for products in the United States for our products. As we know, that's again publicly disclosed. We have our own distribution and logistics company there, which allows us to actually
pretty much interesting.
Hold a lot more inventory as compared to other companies who actually outsource that. So obviously those all factors help us in the long run of doing the business, and
Parag,
mitigating the
exactly. Parag, one interesting thing about your company I noticed, I was studying it during your IPO also, was your R&D cost as compared to your operating revenue. It's almost double. of this players. To understand the cycle of this, how does this work? It's in your philosophy of Rubicon Research that R&D is very much important. Now, what is the cycle for it, when the benefits can start coming in 2 years, 3 years? Any numbers for it? It's very technical, so I want you to make it very easy for my audience.
Yeah. So, and again, this is thanks for bringing out. I think, again, that was a part of our presentation, which we disclosed in the last quarter. And we've talked about R&D productivity. Again, going a little stepping back on our philosophy, Rubicon has developed or is one of India's only company we developed from R&D to commercialization. All the other companies either developed as API companies or India domestic formulations companies and then have gone into the US. But Rubicon is unique because our strength and our DNA has been always science, chemistry, quality. These are the three parameters which we have actually worked on. So for us, all this growth, which we have seen 32x growth in revenues over the last 12 years, has been purely driven by research and development and the execution of the product portfolio we have chosen. So I think we've put a chart in our last time presentation. I don't right now have handy, but I can just explain you how the logic works. Is whatever R&D which I spend today, or I've spent over the last, say, 1.5 to 2 years, only comes to play after, say, roughly around 24 to 30 months. And when we have seen this ratio, so if you take that $1 of R&D spent to the multiplier on the revenue, say after an average 3 years, we have seen that that number has moved up from 3x to 5.5x for Rubicon from the past data. If you look at the last data, again, this is publicly available. And so that increase in productivity has been a tremendous, what you're seeing in the return.
You explained us a very important mathematical formula to judge your company, and I will be using that in the future when I analyze your company. But Parag, it's always a pleasure to talk with you. Thank you very much. And from the last time's KYC till now, there has been a good improvement in the company, and that is where the alpha we get for all of our audience. It's always a pleasure to talk with you, Parag.
Thanks.
So that's the management of Rubicon Research. Earlier KYC ratings were on the lower side. Now it's on the higher side. Company has passed the D-Street's first test. But of course, a lot of things are there for the company to prove going ahead. But for interesting stories like this, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Was always a rebellion. Sunny Malhotra, live at NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna,
Weak global and crude volatility hits the Lal Street today. Nifty trades near 23,900. Broader markets underperform benchmarks. All the sectors are in the red zone. IT, pharma, real estate top losers today. Oil prices surge for the fifth consecutive day, hitting their most sustained upward trend since the start of the year. The rise comes amid the stalled negotiations between the US and Iran, which could further delay oil flows from the Persian Gulf. IKS Health acquires US-based healthcare technology firm TrueBridge for a total consideration of up to $565 million, marking its largest acquisition to date and a strategic push to rural and community hospital technology. Solar stocks are under pressure after the US Commerce Department announced preliminary anti-dumping duties on solar cells and panels imported from India, Indonesia and Laos. In an exclusive chat with NDTV Profit, new NASSCOM chairman Shrikant Vellamakani says that AI is a huge opportunity for Indian tech and not a threat, highlights that employment to gain traction as spends play out. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and the bad news from the market and the color that I've got right for the day today is red, because Nifty 50 is not seeing any let up. In fact, currently struggling to hold on to the 93,900 levels, just at that level, but is seeing pressure really mounting. And the biggest pressure for the last two trading sessions is coming in from the IT space. So a large part of the 275 points drop on Nifty 50 is coming in from the IT space and also some of the banks. Now take a look at HDFC Bank. That's the one which is gaining. Almost all the sectors are in the red. Even the broader markets are showing slight underperformance to the key indices today. So that's the snapshot of the market. Let's take it straight to the earnings season. We are in the thick of earnings season at the current moment, and let's focus on Tips Music. Now Kumar Taurani, the managing director of Tips Music, joins in for the discussion. Kumar, always a pleasure to welcome you on NDTV Profit on an otherwise very weak market. The stock of Tips Music after the performance on the earnings has really gone up over 4%. In your view, what is it that the shareholders really like?
Thank you, Nisha. Actually, shareholders like about us, whatever we commit, we achieve. God is really kind on us. We are so far, whatever our investors or shareholders are expecting, we are achieving that. I think last 4 or 5 years, we were achieving 30% top line, 30% bottom line. This year, we said to our investors, we will do 20% top line and 20% bottom line. But touch wood, we have achieved 20% top line, and instead of 20, we have done 31% bottom line. So that's a good numbers, and I think that's why our shareholders and all our investors are very happy with us.
Right, but Kumar, you have really shifted gears from last year to now. Your EBITDA margin has really gone up at 74% versus 47% in the last financial year, same quarter. And the pivot and the shifting of gears has also happened when it comes to the digital platforms. So 70% of your revenue through the digital platforms. Can you break down in terms of the margins? How is the digital platform where your bulk of revenue coming in? Is that the push for the margins as well?
See, from digital side, bulk revenue comes from, there's a 3 big apps, YouTube, Spotify and Instagram. These are the 3 drivers for digital business. And what other question you said? Can you please repeat that?
So I wanted to understand a breakup on the 70% of the revenue from digital platform. How is the margin picture that has really lifted on a YOY basis? How's the margin picture from the digital platform as well?
So these are the three top parties, and after that there is many other small parties are there. And actually earlier this year we have performed very well at the non-digital side as well. So this between 70-75 we are doing in digital side, and between 25 and 30% we are doing on non-digital side. So combinedly. And actually, it's a major reason, whatever our results are, whether it is digital or non-digital side, our repertoire of when we started from 88 till now, whatever we are doing, touchwood, we have a many great hits, and that is continuously doing good.
Right, a bulk of the profitability. I wanted a little breakdown on that. The question that I asked, and let me rephrase there, Kumar. I wanted to understand, while your bulk of the revenue is coming from the digital space, is that also delivering a bulk of the profitability?
Profitability, see, we have only our expenses are very minimal. So we don't calculate a segment-wise profit. We just do all the money comes in one pocket, and then money goes for our internal expenses plus content cost plus marketing. So apart from that, everything is our profit. So we don't calculate each segment ki kahan se kitna aaya, kahan par kitna we should credit. We don't have that kind of a system.
All right, we are starting a new financial year, Kumar. Last financial year, you have really performed very well in the last quarter as well. Now, what are the key factors and deliverables that you're guiding for this financial year?
I think in our business now, everybody is pushing for subscription, and subscription numbers are increasing. So I feel subscription and the short content, Instagram, YouTube shorts, and maybe TikTok and will come back in India. These 2-3 things. Plus there is a lot of events happening. So our collection from public performance also increasing. So these three will be a top drivers for our business. So I'm confident we will achieve 20% top line, 20% bottom line. We'll try for more. Our people or our shareholders expect lot more than that. But at present, I'm targeting 20%. But after 1-2 quarters, we'll see if we change or we can increase our numbers.
So you're sitting on cash, one of the few companies sitting pretty with cash, and at this point, cash is king, 267 crore rupees. Where are you going to utilize the cash for growth, Kumar?
See, we always give entire earning of last year. We give as a dividend. See, last year, March 25, our earning was 166 crore. We have given entire 166 crores as dividend to all our shareholders. So this year, our margin is around 212-15, around that. So we will, again, this year also we'll give entire money to our shareholders.
All right, Kumar, always a pleasure speaking to you, and very exciting times when it comes to the content. All the best for the next quarter. All right, tips, music, doing well in trade and good momentum for the next year as well as per the management. Let's now listen in to an exclusive conversation our colleague Rishabh Bhatnagar had with Abhijit Kishore, the CEO of Vodafone India. Listen in.
Right, I'm joined here by Abhijit Kishore, chairperson of the COAI, as well as MD CEO of Vodafone Idea Limited. Thank you so much, Mr. Kishore, for speaking with us. Firstly, I want to talk about, of course, the AGR dues issue. I know there's not much you can share with us, but in terms of the reassessment outcome, when it's likely, if you have any inputs on that?
No, I think first of all, I would really be thankful to the Honorable Supreme Court and the Government of India for making a very decisive, conclusive, holistic reassessment for the AGR. As you are aware, the reassessment exercise is on, and we are all waiting for the outcome. Whatever was asked of us, has been submitted, and we all wait for the outcome. That's what I can share at this point in time. And as and when we get to hear from the government and the Department of Telecommunication, we'll come back to you.
Mr. Kishore, also in terms of tariff hikes, we've seen one come in from Bharti Airtel so far. What is the industry thinking? Where are you placed in terms of a tariff hike imminent?
No, we have always maintained that the industry at the tariff level that we are is not a really long-term sustainable one. I really don't want to comment on somebody else, but our stance has been very clear. As we speak today, there is some bit of a transactional changes on the tariff that keeps happening. But this right now, I don't think that there's anybody who's done a structural tariff revision. So we'll wait to see, how the leaders respond on that.
Lastly, there's also a lot of conversations around AI models coming in, sort of detecting vulnerabilities in systems. What is the telecom industry doing? You've seen the FM hold a meeting with banks. Talk to us about your approach to this entire situation.
So I really can't share too much in detail because we are in a particular period where the results are not out. But at a very, very broad level, what we can see is, from the telecom industry and more from the Vodafone Idea Limited point of view, I think the way we really look at ourselves is that we are not really the customers of AI, but rather we are really the proprietary intellectual people who's making AI for our customers. The way we really look at, everybody's talking about the agentic, and we look at a three-layered approach on that. One being assistive, second being agentic, and the third being the sovereign AI. That's what I can share at this point in time. But there are more details on how can telecom industry and more so for Vodafone Idea Limited, how do we really put it to use for our customers, as well as how do you kind of bring productivity and efficiency improvement with the use of AI.
All right, so that was the exclusive conversation with the Vodafone Idea management. Let's take a look at the stock. The biggest takeaway really coming in from that particular conversation with my colleague Rishabh Bhatnagar is that the reassessment of the AGR with the government that's really taking place is the main aspect that is going to be announced soon, is what he said. So there is work going on that one. And of course, the stakeholders are waiting and watching out for that key development to come out after the government approved the waiver on Vodafone Idea. So AGR reassessment on the watch at the current moment. All right, let's take it straight across to Siddharth Vora, who is the head of Quant Investment Strategies. Siddharth, always a pleasure speaking to you on NDTV Profit. And my question, of course, it's an obvious question. This volatility really persists, and a lot is really dependent on the oil prices and the war. How much do you think is already baked in about the next quarter's performance, because war is not getting over, supply chain constraints and crude oil prices are really not coming to any sanity? Given that, are we already ascertaining the bad news coming in the next earnings cycle?
So I think first, just to understand where we are in the markets, I think it's very evident that it's a macro and headline and crude driven market. Completely the fundamentals are overlooked at this point of time, and it's taken over by geopolitics, taken over by sentiment. If you look at the broad estimates on the street, I think very few of them have turned adverse or have seen meaningful cuts. So I think sentimentally and from a price correction perspective, we have seen some correction, but I don't think the entire concern is baked in yet, because we don't know how long this situation will last. So there are two scenarios playing out in the market. One is that things resolve very quickly, in which case markets will see a sharp recovery, and then the street is aligned. If the war extends, say 3 months, 6 months, something like that, I don't think the street is prepared. Neither have the estimates been revised. Neither have the target prices been revised for that kind of a scenario. So I think people are hoping for a better outcome, and the worst that can happen is not yet priced in. But if the worst doesn't happen, I think we're good to go for a recovery.
All right. So, Siddharth, since you started off by saying that it is a crude-driven market and that's on the watch for us as well. So, Purva Jain, who's the lead energy specialist and for gas and international advocacy, Southeast Asia Institute for Energy Economics and Financial Analysis. Purva, good to have you on NDTV Profit and thanks for joining in this discussion. It is a crude-driven market. What are you penciling in the near term for the crude prices?
Thank you for having me here. Of course, I think like we have spoken earlier also, and I've said that it is a systematic, structure that we have where we are a crude-driven market. It is starting to become a systematic risk where changes need to be, structural changes need to be brought into the economy. As far as prices are concerned, we have seen in the past 1 month there has been so much volatility in the Brent crude prices since the onset of the conflict, and of course there has been a lot of upward pressure on the fuel price. It was under $70 in February 2026, but now we are seeing it touching it at 105. We have seen it go on to 108, come down to 94. So we have seen a lot of volatility. And if the standstill continues, we might see that volatility also to continue in the crude oil prices.
Right, volatility to continue. But Siddharth, taking back to your point, crude is one of the very big factors which has been overall driving the sentiment. But for the last three trading sessions, what has been the biggest drag on the Indian market is clearly the IT sector. They are, eroding maximum value. They're the biggest draggers on Nifty 50. And after each result, there is a knee-jerk reaction. How do you see the IT sector? And we have all the top 5 companies now after Infosys reporting their results. What do you pick in terms of trend, valuations, and how long will this be a pain point in the market?
So I think over the last 16 or 18 months, IT has been a laggard. It has had a few weeks where the oversold or recovery trade plays out, but I don't think it's got meaningful legs or structural legs as of now. And the whole concern is that growth is weaker, the guidance is very unfavorable, margins are under pressure, and the deal wins also have not been anything like to look forward to. So we've seen cuts on deal wins as well. So overall, from a core fundamental growth perspective, I think the IT sector is likely to be out of favor. We don't own any IT stocks in our portfolio. I think we just have a 1.5% allocation to the IT sector. And this underweight to IT has really helped us, gain some alpha versus the benchmark over the last 12 to 15 months. And I think we'll continue to be underweight IT, overweight metals. That's been our big, theme, overweight metals and underweight IT.
All right, that's a good line. Overweight metals, underweight IT. And yes, metals have been shining for large part because of the supply chain constraints and, of course, globally driven prices. But Siddharth, one more question coming back to the crude momentum, the supply chain constraints, Reliance Industries results. The big boy is going to announce the results today, and it has had a pretty patchy run in the last few trading sessions. What's your view on the upstream oil companies given the context of the global war?
So I think upstream oil companies definitely see some tailwinds because of in the rising crude environment. And I think overall, we used to own ONGC, but we exited ONGC, I think, 10, 12 days back. And we're currently trying to build some conviction on downstream, though. So we're actually trying to take the contra call on crude because we believe crude cannot sustain at these levels. And we've looked at data for the last 30 years. And that data tells us that crude stays elevated for a period of 100 to 150 days on average. After crude peaks out, Indian equities give a return of roughly 25 to 30% in the next 6 months on average, and 40 to 45% in the next 12 months on average across multiple historic episodes. So while currently crude is driving the narrative, we're trying to build the portfolio with a little more forward-looking view, with a little more foresight that crude cannot sustain at these levels. And eventually, sanity will prevail. And we are actually more excited about the downstream players as a contra pick in the portfolio.
All right. So focus on downstream. Of course, Reliance Industries results today will be very important. Now, Purva, final question to you. What are the levels of crude that we are penciling in? Earlier, it had actually reached above $115 or so per barrel when the Middle East crisis was at its peak. Now we are not seeing any kind of resolution. There is a stalemate situation on negotiations. What is the in-house view on the immediate targets, and how high can crude go, and what is the range being penciled in and the factors impacting?
Thanks for that. See, it's very difficult to give a number because we have seen the volatility. Like I was saying, that there has been extreme volatility in just the last 2 months. The price is going really up and then settling in. So the market has been very, very reactive, and it will continue to be like that. But what we do know is that, that India had managed to show excellent resilience and managed the early phases of the crisis quite well. It had swung into action with multiple strategies of prioritizing fuel supply, diversifying import sources, even diplomatic action, which worked in the country's favor. But signs of stress will begin to show now, because the duration of the conflict, everyone has been talking about how the duration of the conflict is very important, and now we are seeing it going longer, and that is going to impact the economy. It's going to have fiscal impact with subsidies, under recoveries that will have to be paid for. That is lead to an additional economic repercussions with fuel supply constraints. We're already seeing sectors like tiles and ceramics. 300 ceramics units have been shut down. Tile sector is manufacturing is impacted. That is resulting in an increase in the tiles prices, and slowly the supply chain disruptions and price increases is going to have an inflationary pressure on the economy, and also the economic impact is going to be greater as long as the duration of the conflict increases.
All right. Thank you so much, Purva. So volatility it is. And Siddharth Vora, thank you so much for your tips on the market in terms of the sector play and the investment strategy. Thank you both for joining in. And of course, Reliance Industries on the watch as a stock, as one of the key draggers in the market today ahead of the results. Keep an eye out on that. It is going on a downtake, over 1% down on the big boy Reliance Industries. With that, it's a wrap on Markets at 12. But keep it with NDTV Profit. Lots of market action on the other side. Thanks so much.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello, welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm...
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, good afternoon. I mean, second consecutive session of decline is what we're seeing. It seems, there is uncertainty which is prevailing in the markets as well, and no one is really sure of what's happening because we are already at the day's lowest levels.
That's right. Good afternoon, Hiral. And look at that markets. If you look at it, there was a gap down opening, and then after that, the market is not able to find an important level where a support can come, and we are at the day's low level also. So definitely, Hiral, there is a concern. Let's pull up Nifty Bank. I think the technical setup of Nifty Bank is much better than Nifty. It's just down 0.61%. There was a mild recovery attempt, but now that's also trying to lose off its steam as well. But let's look at the triggers, what's important to watch out for the markets currently right now. And remember, you rightly pointed out, there is uncertainty in the market, ceasefire uncertainty to name it, and the risk of sentiment is back across all the asset classes, and that is where the stress comes in. But let's look at the other key factors which should be very much important for you to track. Nifty has slipped below the 24,000 mark and is down for the second straight day. Concern comes in. Nifty Bank, however, the technical setup is still decent as compared to Nifty going ahead. It's down 330 odd points. Apart from that, there is a big reversal in the SMIDs. We have been seeing for lots of weeks, almost 3 to 4 weeks, there was a good value buying coming, but today this has hit the broader markets also. The bigger drag coming in, of course, from the IT and the solar names on the news flows, which we had covered earlier at NDTV Profit. And also, if you go into the more details, crude is rising, yields is jumping, and the rupee is weakening as well. So nothing right going currently. And remember, to avoid any big carryover trade for the weekend, you don't know what's going to be announced, or will there be some more tensions coming in. And remember, foreign brokerages have also turned bullish as well. We have seen the FIs not coming in the markets for last 4 trading session. They have been selling in cash market, so concern is definitely there. But the focus should be on the earnings today, and that's the most important thing. Reliance is down 1%. We have bigger names such as Shriram Finance and IndusInd Bank also. So these are the important stories which you should be covering right now. And of course, uncertainty will be there, but what is certain is the earnings, and that's what we'll be tracking and talking to you.
Absolutely. Earnings is left, right, center in focus. IT stocks are on the watch list on the back of, a weak Q4. Guidance is what everyone is eyeing as well. There is profit booking coming in there. LTI Mindtree muted Q4 operating performance, but the conversation with the management is going to be interesting in terms of outlook for FY27. Gujarat Themis, they're looking to acquire Sanofi anti-TB portfolio. Lux Industries is demerging the business into 3 distinct verticals. Cipla also is in focus because the partner has got an import alert. IKS has acquired TwoBridge for $565 million. Tips, again, 20% revenue growth is what they're eyeing in FY27. Strong numbers there. Solar companies on the back of the US anti-dumping duty are in focus. Cyient has reported a weak set of numbers, and Mahindra Logistics again in focus on the back of numbers. UTI AMC, Bluestone, all of them are in focus on the back of earnings. And you have GMR Airports, which is under pressure on the back of the ADB stake sale. And lastly, Himadri Speciality seeing strong volumes again on the set of numbers that have been reported. Data Patterns, Hutco, MRPL, a few of the other names that are on our radar as well. But let me actually head across to Sharad. In fact, no, I'm going to look at the rapid fire with Gaurav Sharma, who's Associate VP and Head of Research at Globe Capital. Gaurav, welcome to the show. Always a pleasure to speak to you. We'll be looking at a quick rapid fire here. So buy, sell, hold with your target price. The first stock is GMR Airports. How are you looking at this one? The stock is under pressure with cuts of 1.5%.
Hi, Viral. Good afternoon. Slight dip is possible towards 94. Hold your position. Take a stop at 92.
Okay. Cyient, a weak Q4 buyback of 720 crores. Will that come, as a support, or the weakness will continue?
I think some more weakness is likely towards 850. If that is held, fine. Otherwise, it will drift below 800 levels. Caution is advised.
Caution advised. Okay. Mahindra Logistics, second straight quarterly profit is what the company has reported. The stock also seeing some smart moves in today's session.
Hold and utilize dips to add your position. Take a stop at 350.
Okay, so that's Mahindra Logistics. Lux Industries is another one. They're looking at a three-way split in terms of demerger. What would you advise investors to do? The stock is down 5%.
Already rallied. 60 to 70% position must be booked here.
Okay. Data pattern, strong volumes building up on this one. What are charts indicating?
Volume back up move has already been witnessed. Utilize any further up move for booking. Take a stop at 3800.
Okay. HUDCO is another one where we are seeing some bit of short covering that's coming in today's session. The stock is up 3.5%. What would you advise?
Hold with the trading stop at 215. Revise stop loss with every rise.
Okay. Strong volumes building up on MRPL today. The stock is up. I mean, it's cooled off slightly, but 0.5% upside.
That is the recommendation here. Take a stop at 175. 210 is the immediate upside target.
Okay, and lastly, Gujarat Themis, interesting one. They're looking to acquire Sanofi anti-TB portfolio. The stock is up 13.5%.
Hold with a stop at 340. Look for targets close to 400, 420.
Okay, so 420 is one that you should be watching out for. Thank you, Gaurav, for that quick rapid fire. But we'll look at, everything that's trending in terms of Google today, because last couple of days it's mainly the power companies or power related stocks that have been trending. Today you have Intellect Design, which has come in. IEX, again, their data patterns we've already spoken about, and the Tata Elxsi. Gaurav, anything that comes to your radar from an Intellect Design to a IEX or a Tata Elxsi where charts are looking strong or where there could be a trade opportunity?
IEX came up with good set of numbers. Despite that, the stock is reeling under pressure. I think one can take a position here, take a small stop at 120. Apart from this, the HCL Infosystem is also looking fine. So a position can be considered there as well.
That's a pretty interesting take coming in from the Google Trends, but there's a company Cipla, and of course we have seen the initial gap down opening, also adverse news flows coming in, and to understand the entire perspective we're joined in by Varsha. Varsha, what are the important news flows for this counter?
So, Cipla's partner, that is Pharmathen, which is a Greek facility, this is now under import alert. So first this Greece facility had got 9 observations, then it went into OAI, and now this is under import alert. Now the product from this facility cannot be imported to US. Now if you see the Cipla partners with Pharmathen International, and this facility is the manufacturing site for lanturide injection, which is, this facility supplies this product to Cipla USA. Now this drug treats hormonal disorder and certain types of cancer. Now lanreotide injection supply to the US is disrupted. Shipments from these facilities are effectively blocked. And if I were to talk about the financial impact, lanreotide contributes almost 12% to Cipla's calendar year 25 sales, and this revenue now has been removed from estimates because of the import alert. You cannot import this product to US, and hence Cipla will have financial impact. And earlier analysts had expected $50 to $60 million of revenue from lanreotide in FY27 and $100 million in FY28. So now these numbers won't be into the financials of Cipla, and hence we are seeing the stock is under pressure.
All right, that's a big fall coming. Thanks a lot, Varsha, for that. But Gaurav, just wanted to take your views on this as well. Adverse development coming in. Just wanted to understand the technicals of it. A good time to do a little bit of buy in the dip, because the focus is moving towards the defensives. Your view on that?
Yes, sir. Good afternoon. Absolutely. Supply is looking pretty attractive at current levels. Unlike most of the pharma stock, it has not rallied. Only up move or witnessed in yesterday's trade. I take it as a welcome move. Any sustenance above 1300 will firmly open the gates for a further up moves towards 1350, 1375 odd levels in the immediate near term. And even 1410 looks pretty much possible. So I'll advise the viewers to take a stop at 1250 closing stop here and buy above 1300 for 1400 targets.
Well, I think, yeah, fair enough. We'll be joined shortly by Varsha also on this, and to understand that entire solar structure, you know, how the solar stocks have been impacted. And I think Varsha is joining us. Varsha, a lot of, solar stocks have been under pressure. Earlier in the morning, we got the news. What's the exact actual impact? Is it there or is it not there?
So yes, the impact would be there, to all the solar cells and panels manufacturers in India. Now this is the anti-dumping duty which has been imposed by US to India, Indonesia and Laos, and India will face almost 123% of duties. Now the companies which will be impacted, of course, one is Waaree. We are seeing already the stock is under pressure, though Waaree's management believes that they won't be impacted because the cells are made in, are not bought from India and are bought from the countries which has the lowest duty, and hence they will not be impacted. But just for the benefit of viewers, almost 29% of revenue contribution is for Waaree from US. And when it comes to Vikram Solar, if you see, they are also expanding into US. 16% of the business comes from export, and even the other solar companies are also under pressure because of the negative sentiment that is revolving around this news.
Exactly. Thanks a lot for that, Varsha. We're getting you back in again. But to get in a little bit more perspective, Waaree Industries, Waaree Group's spokesperson also talked about what's going to happen or the impact. Do listen in.
We have never used an Indian-made solar cell. There is a duty or there is no duty on India, or whatever comes in the final findings. We use the solar cells from the countries where the duties are less, and we make a solar panels in India and then we export there, and we pay the duties of that country on that solar panel. There is a duty or there is no duty. We clear the customs based on their local regulations there. Another thing for Waaree Energies is that we have 2 manufacturing plants in United States. So, of course, there is no solar panel duty today and not also in this. But if it comes in future also, we have the local production, which will also help us as a company in all together.
Okay, so that's the view coming in when you talk about Waaree exports. In fact, let me take a quick question with Gaurav. Gaurav, how are you looking at all of these solar-related companies, from a Waaree to a Inox? Anything that you like on the charts?
Here is something else that we prefer, and the company's name is Premier Engines. This company derives negligible revenue from US, and that's the reason why Premier Engines, despite the negative news, is trading in green today, having been into the similar business line as to Waaree and other companies making solar cells. Therefore, this is some space that we are suggesting to our clients to actually stay invested in, because it will always be, on the sidelines, and stay away from the duty-related issues that come up every now and then.
Regards to where Premier Energies go, Vikram Solar also trading under pressure. LTI Mindtree reported numbers. If you talk about Q4, the numbers are in line with expectations. But I think the street is reacting to the contraction that has come in on the margin front, because the stock is down nearly 5.5%. The constant currency revenue growth is at 1.2% versus a 2.4% in the third quarter. So that is lower as well. And your BFSI segment is the one which has fallen the most, which is down a little over 5%. Deal wins, again, $1.69 billion is where it stands. It remains flat. Your attrition is at 13.3%, and your headcount also remains flat. Revenues of 4.5% growth is what you've seen. Your EBIT has grown around 2%. Margins have gone down 97 basis points, and your profits have improved 43%. If you talk about the margin degrowth, it's the first degrowth that is coming in 6 quarters, and I think that's what the street is worried about. In dollar revenue terms, it's the highest revenues in 5 quarters, and Europe has grown faster than the Americas. In fact, we did speak to the management of LTI Mindtree on what does Q4 actually tell them about FY27 and what's the outlook when it comes to AI investments and acquisitions. Let's listen into a slice of that conversation which I had with them. Right now, it's not about a quarterly performance or what the numbers are looking like. It's more in terms of what the strategy is going to be, where are we headed towards, and what's that sentiment and trajectory looking like. If you have to look at the fourth quarter, how would you pitch in for the fourth quarter going into FY27?
Well, firstly, thanks for having me here. Look, with regard to the full year, in my view, we delivered a great performance. Coming back, navigating the lot of macroeconomic situations that happened throughout the year. I mean, if you look back, at the beginning of Q1, we had tariffs, we had H1B, we had AI, and we had more AI. So we sort of navigated all of that and delivered 6% year-on-year growth. That's number one. For Q4, for the corresponding quarter, the year-on-year basis, we delivered 8.1%. I've been consistent, even as per the last earnings call, I did mention that we'll come very close to the double-digit kind of a growth. And 8.1% in these times, in my view, I think our teams have done a fantastic job, and we are in the right position to continue our growth momentum as we get into the FY27. And lastly, I would say, as you rightly put it, it's not about just looking at in the quarter view. Well, the performance is important when you look at it from the quarter and the yearly perspective. But at the same time, it's important that we continue to focus on the transformation. How do we transform ourselves to become an AI-centric company, and how do we transform to capture the bigger opportunity that exists with our clients in the AI agentic era. So that's where we're focusing on. I sort of sum it up as, continue to perform while we transform.
That's interesting. So, Venu, to what extent would you say that these AI-led, say, productivity pass-throughs, if you would call it so, specifically when it comes to your top accounts, are creating some price deflation? And if so, how are you actually offsetting this in your new contract negotiations then?
Look, I think we have gone through those journey over the last 12 to 18 months. And in fact, it started in the tech services vertical. So we went through the productivity journey with some of our large clients in the tech sector. And if you actually look at it, we had the biggest drop rebound in Q4. We are back to almost near to the double-digit growth for the same Q4, revenue compared to the last year. So, when it comes to some of the big clients, we are past that journey in the tech sector. In the BFS sector, as I mentioned in the earnings call yesterday, and I had given a heads up that in the Q4 we'll bottom it out in terms of what the productivity gain we are passing on. I think we've passed that phase as well. And as we move on to the Q1 and onwards, I look forward to the recovery in our top clients in the BFS sector.
Okay, so if you have to talk about your FY27 pipeline, how much of your pipeline will comprise of your direct revenue that is coming in from generating or AI contracts versus your internal productivity tools?
Look, the way I look at it is that, there are three broad category of revenues is what we are focusing on. That's how the pipeline is sort of shaping up. The first one is about, the core services that we're doing for our customers. How do we reimagine that capabilities with AI infusion? So that's one part of the pivot, and that's happening, at a much faster pace in collaboration with our customers. And that leads to the newer opportunities when it comes to modernizing the systems. That leads to the new opportunities in terms of how do we increase the predictability of operations on the IT systems, right? So that's part of the core services. That's one category of opportunity that exists in our pipeline. And the second one is, related to, how the clients wants to get ready for the AI, right? So there is a huge modernization opportunity right from the data side, infrastructure, application modernization. So all the stack modernization is, it can happen as part of one big contract, or it can happen in sort of a small steps with a series of smaller denomination contract spread throughout the year. But that's a modernization agenda. And the third one is, where the AI adoption is actually happening at much faster pace, which is about how do you bring the agentic solutions into reimagining the business process. And we call that as a business AI. So that's a third category of pipeline opportunity that exists. So across all these three things are equal focus for us. And that's how we restructured our organization around these three broad capabilities areas. And, we're pretty much done with that, and we're ready for FY27.
Okay. So, Venu, coming to what's going to happen in FY27 as well with all the geopolitical tension. Okay, you can catch the other part of the conversation on our social media platforms as well. But that's with LTI Mindtree. Girish Sudani, co-founder at Ensure Capital, joins in. Girish, overall the numbers are not looking that bad, but there is some bit of crunch that's coming in terms of where margins go. If you have to look at all the IT companies that have reported numbers so far, in fact, Jasmeet will be taking us through a comparison shortly. What would you have to say, in terms of the sector?
So I think the overall sectors come into the restructuring models because of the geopolitical tensions. Apart from that, there's a multiple flows are going on in the order pipelines. So we are just expecting that the whole IT sector is going to be shuffled in the next to 3 or 4 months type rate. And if anyone had the long-term view, like for the 1.5 year or 2 year time frame, then the IT space is very strongly built up. Not because the AI developments, not because of the order cycles are going on, but the restructuring and the retentions are still working on them. So, and the AI segments we are talking about, so many of the IT companies, like a major of the IT companies, are done their profit numbers from the AI itself, like more than a 30 to 35% growth in their particular numbers, not including the BFSI sectors, apart from that, the other sectors too. So this is a reason that we are looking out a very highly prospective sector for the longer period, at least 2.5 year time.
That's a pretty interesting, but one more stock is in focus, Himadri Specialty. Very strong set of numbers coming in. Just like to point out the revenue jumping up 14% on a year-on-year basis, but more importantly, they have commenced the new anode material production facility in West Bengal, and there is expansion at play as well. Girish, good afternoon. Your views on this? Of course, Himadri has been doing well. Last 2-3 quarters have been strong, and now the company comes up with another strong set of earnings.
So Himadri Specials Chemicals, basically quarter numbers are decent ones, like 29% to 30% year-on-year net numbers are going to be there. But the company performance, I'm looking out for the next 2 to 3 year time frame, because completely we are facing on the geopolitical tensions, and these type of chemical companies are looking out for the next how they are going to be expanded in their particular capacities. So as of now, I'm not very much bullish in Himadri Chemicals, but looking out for the next one or two quarter numbers, it will be give me a clear view exactly for the next 1.5 year time.
So that's with regards to where Himadri Chemicals goes. And as we were talking about Indian IT majors, Jasmeet is standing by to tell us what does the Q4 numbers actually tell you, because majority of them have given you their outlook, their guidance, and the trend that one should be watching out for. Jasmeet, over to you.
Well, thank you for that. Here is a comparison of top 5 IT firms of how they have performed in the overall Q4. While Q4 was quite weak for the IT companies altogether, they saw a weak earning growth in terms of overall number performance. If you look at the key numbers, though the numbers were flattish and even some companies did meet the estimates, but the overall commentary and the guidance was quite weak, and that's why we see the overall IT falling past couple of weeks. Now, in terms of the other key highlights, they also make a note that the guidance has turned negative for Wipro from 0 to -2%, where it was positive in the previous quarter, while turned softish for HCL Tech and Infosys that we saw coming in trade. While also we see that the Tech Mahindra, the TCS also reported its first ever revenue degrowth in terms of the overall dollar revenue since listing since 2004, which was quite negative for the company, and the stock has been tanking since then. While lastly, the one positive apart from in top 4 IT companies, we see Tech Mahindra, where they have recorded the highest ever deal wins of 3.8 billion, and also records second consecutive quarter for the company where they have clocked in deal wins over 1 billion. Let's quickly understand on the top 5 key parameters how they have performed in the overall Q1. Now, if you look at the overall in the CC growth, the actuals have quite tanked for something like an HCL Tech and Infosys, where the street was estimating the overall minus negative 1.1% for estimates, and the overall actual has come minus 3% for HCL Tech, while for Infosys we were estimating a CC downtick of 0.2%, but it has come in at minus 1.3%, and that's why the Infosys is tanking into downward 5%. Now, if you look at the next key parameter, what we have compared the overall IT pack is on the overall revenue growth. While the revenue, we do see that they have actually met the estimates and performed way better than what we were estimating. If you look at the overall TCS, we're estimating 2.3%, but revenue uptick is 5.3%. In terms of overall Infosys, we're estimating an uptick of 0.4%, but it's far better. At 2.0%, the company grew in the Q4. Now, if you look at the overall EBIT performance and how the EBIT margins have panned out for the companies, even in EBIT performance, we do note that most of the companies have met the guidance, barring the HCL Tech. We're estimating a downtick of 5.6%, but the overall downtick in terms of EBIT came in at nearly 11% for this particular counter. Further, Infosys, on the other hand, we're estimating an uptick of 0.9%, but again, better than the estimate, came in at 2.7%. Now, if you look at the other key parameters, the deal wins, while the deal wins has stayed positive for all the IT packs and they have come in line with the estimate, but the key question remains, when will the ramp up come and how will the ramp up impact the margins and increase the top line going ahead? If we look at the next key parameter, what we have analyzed is all over on terms of the AI revenue. While what we make a note is we were estimating Infosys to come out and give out its AI revenue, but unlike in the AI day, they have not given the AI revenue in this particular quarter, which is an overall overhang in the particular counter. But we do have a company like TCS, which gives its AI revenue at 2.3 billion. That's roughly 12 billion. That's roughly 1.2% of the overall FY26 revenue, and we also have HCL Tech giving out its AI revenue. Now, in terms of the key outlook commentary of what to expect going ahead, Tech Mahindra is on track to achieve its 15% guidance versus what was in the FY26 as roughly 12.6%. They need 240 basis points more to achieve that 15% mark in FY27. Now, something like an HCL Tech, they remain cautious on the overall discretionary spending as they note a downtick for a communication segment. That will be something in focus. If we look at the next counter, we have something like Wipro, where they have reported the weakest quarter for the Q4, and they also note that the Q1 will be a weak quarter for them as they have given a negative guidance going ahead. Now, something like TCS, where they expect the growth recovery in FY27 as FY26 was a weak ending for them. Further, they also plan to collaborate with other AI companies to build their AI models. Lastly, in terms of Infosys, it remains cautious in terms of outlook as they have given a weak commentary and weak guidance altogether. So all in all, do note that the numbers were in line in this particular quarter, but the guidance and commentary overhang still remains on top of the major IT companies.
Guidance and commentary, that's the weakness that we're looking at. Thank you, Jasmeet, so much for joining in. Always a pleasure to get, your analysis when it comes to IT as a sector. But completely out of time, a thank you to the guests and the viewers. From Sharad, the team that put the show together, and myself, lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
One teacher, a million destinies. LV Sir, live at NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen, And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar.
Weak global and crude volatility hits Dalal Street. Nifty trades near the 23,900 mark, while the broader markets underperform the benchmarks. All sectors trade in the red territory. IT, pharma, as well as realty are the top losers for today. Oil prices surge for the fifth consecutive day, hitting their most sustained upward trend since the start of the year. The rise comes amid stalled negotiations between the US and Iran, which could further delay oil flows from the Persian Gulf. IKS Health has acquired US-based healthcare technology firm TrueBridge for a total consideration of $565 million. Now, this marks its largest acquisition to date and a strategic push into rural and the community hospital technology space. Solar stocks are under pressure after the US Commerce Department announced preliminary anti-dumping duties on solar cells imported from India, Indonesia, as well as Laos. Waaree Energies is one of the key losers in this aspect. In an exclusive chat with NDTV Profit, new NASSCOM chairman Shrikant Velamakani, he says AI is huge opportunity for Indian tech companies and not a threat. Highlights that employment to gain traction as well as spends will play out eventually. Hello and welcome. You're watching Lunchtime Trades. My name is Puneet Zaveri, and this show gets you a roundup of everything that's happening in the world of commodities, news, updates, as well as some of the key top buzzers and top stories that you should have your eye on. Now, before we do that, let's take a very quick check of how the markets are doing, because it's been in an downward correction. Essentially, we breached 23,900 and we still continue to be there at this point of time. Pull up the heat map for the Nifty 50 and the IT pack, definitely the one which is down and out in today's trading session. You've seen Infosys, HCL Tech, TCS being the top three losers post earnings of Infosys, and summing up a week that's been a forgetful one for the IT names. Pull up the sectoral heat map as well. We saw largely a red screen today, and that unfortunately had continued to be so. Nifty IT is down 5% now, along with HCL Tech's earnings that were there. So we've seen a massive correction this week for this particular index. The mid cap and the small cap though is also very interesting at this point of time, because we're seeing consistent pressure throughout the broader markets today. The mid cap 150 is now down 1.17%. The small cap 2 is down with a similar percentage as well. And finally, the BSE 500, to look at some of the individual movers for trade. In the losers, you have UTI Asset Management Company, which is down 10% now on the back of weak quarterly results. And along with that, all the IT companies there, as you can see in red. Amongst the greeners, you're seeing Cochin Shipyard as being some of the names that are doing well, trying to buck the trend, but not too successfully at this point of time. But as we do in the show, a very quick check of the commodity space, and let me welcome Biren Vakil, commodity consultant at Paradigm Commodity Advisors. Biren, thanks so much for joining in. Very good afternoon. It's Puneet this side. We've seen all key aspects of the commodity trade, whether you take oil, you take gold and silver, all are under pressure in this particular week. But let me start off first with what we've seen in the aluminum side of things, because that index also continues to be affected because of the war, and almost 9% of commodities, especially aluminum, coming in from the Middle Eastern region. Now, the key question is, firstly, what is your view of aluminum and where do you expect that price to go in? And secondly, for retail investors as well, how do you expect is a better way to play this opportunity in the near term?
Aluminum prices are on almost super spike mode because of large scale disruption in Middle East. Several aluminum producers have declared force majeure, means they are not making near-term shipments because of congestion or shipping issues. So supply chain is disrupted, in particular aluminum. Here plain bet could be in form of futures, but it is a leverage trade, so proper guidance and risk should be understood. Proxy bet could be done by producers, aluminum producers. That could be the way to participate, whether it is direct or indirect.
Right. So, got that, Biren. So, would you recommend that futures, of course, is a way that you mentioned that would require leverage? Are ETFs via an international exposure a better way to play then?
Unfortunately, we don't have ETF in aluminum. Those who are global players, they have various indexes of various index service providers. They have a variety of instruments.
And Biren, before we go forward, your a couple of views on what we've seen essentially happen with gold. Now, of course, in the rupee context, trading around the 1.5 lakh mark, do you feel that this is a sustainable support level in the near term? What would be your view?
Currently, bullion space means gold, silver, platinum, all these precious metals are witnessing a fatigue kind of, because last year it was too much volatile. So I think there is a lot of wealth destruction in the form of a retail side. So I think market is looking for some kind of floor. Maybe gold may find floor around 4,200, or silver may find floor around 60, 65, which could be a little bit attractive bargain levels.
And finally, Biren, before we let you go, one of the key aspects of oil has been led by geopolitical conversations between the US and Iran. Now, we still don't have clarity at this point of time about a potential meetup in the next 3 to 4 days in Islamabad, yet again for a second round of talks. So, would your strategy right now be for oil to be on the sidelines, or is there a venture that you can do at this point of time?
Those who are professional traders can do with the help of options, but avoid writing, because writing would expose you to unlimited risk, while option buying is limited to the premium you pay. And that is also a little bit risky, but professional can do. A plain retail trade, which is based on rationality, headline chasing, that should be avoided, because most of trade now is algo trade.
Got the view, Biren. Well, Biren, thanks so much for joining in, giving us perspective across a whole bunch of commodities. And Biren recommends avoiding to writing at this point of time for oil. But thanks so much for joining in, giving us that perspective yet again. But viewers, we spoke about multiple key spaces that are buzzing in trade today. Let's pull up some of the key ones as well. And you're seeing the solar stocks continuing to be under pressure. But before we get to that, another important national story as well, because amid the rising concerns of Anthropic's AI model Mythos, now Finance Minister Nirmala Sitharaman has actually given a clear statement that banks should work together to counter the newer threats that we are seeing from these AI models. Before we listen to her from the presser, let me bring in my colleague Piyush to give us the few key takeaways.
We are at Pune's Khardi, where SBI has launched its local head office for the Pune circle. Here the finance minister addressed a press conference, and here are the big takeaways from that presser. The first one being that the threat posed by Mythos, which is a new AI model developed by Anthropic, banks are studying, banks, government and the regulator is studying the risk associated with this particular AI model, and the MEITY is also in engagement with various authorities and governments globally to understand the risks that are associated with Mythos. Number two, the finance minister said that banks have done well in terms of cybersecurity risk. They have put in safeguards, but as times grow and AI becomes more advanced, they need to be more versatile in terms of countering these threats. Banks are working together on Mythos, and IBA is actually leading this whole consultation on how to counter this challenge. On the bank assurance, the FM specified that there is a committee which is studying whether banks can have exclusive insurance partners for distributing policies. The FM also said that the IDBI Bank's disinvestment process is on, and the high-level committee on banking will review this going ahead. The FM said as of now there is nothing on the PSU bank consolidation front, but the high-level banking committee, which will be formed soon, will also look at these matters. These are the key takeaways from today's presser. We will get back to you with more updates.
So yesterday's meeting was in that context. So all the while what we've had, and therefore proved ourselves that we are careful and protective of our customers, may not be sufficient. They need to be there, they need to improve, they need to grow. But we need something new and something far more versatile to be able to counter the newer threats which are likely to come. On that, I had a meeting with all the banks. MeitY Minister himself was present with me. Secretary, Department of Financial Services, Mr. Nagaraju, was also there. So actively now the banks have been told to work together. As Chairman IBA, Chairman of CMD State Bank of India will be leading that effort. And in the coming weeks, there will be a lot of interaction within the banks, understanding where more investments will have to be made, what kind of technologies can come in, how AI itself can be used for countering this AI-born challenge. Works are happening on that.
Well, that was Finance Minister Nirmala Sitharaman talking about what threat this could have, and this has led to waves and as well as conversations from different politicians from other countries as well. So continue to monitor this national story in that sense. But pull up a few counters that are buzzing in trade today. Tata Capital is one of them. On the back of earnings, you're not seeing too much of a wild reaction today. Stocks just 0.8%, but came on the back of earnings. Profit was up 20% in this particular quarter, also led by the total income, which was up only 2%. Now, that's led by the company's impairment of financial instruments actually correcting to 582 crores versus 758 crores on a quarter-on-quarter basis, and hence you're seeing that beat on profits. AUM has crossed the 2.5 lakh crore mark on a quarter-on-quarter basis compared to 2.3 lakh crore, and you're seeing the unsecured share going to 10.3% of assets under management. Cyient is the other one that's taking a beating on the street today as well. Now, stocks down 5%, has been in a corrective phase. Let's look at the one-year chart, and that will show you the pain that's been visible in the stock as well. Revenue is up 4.2%, but the EBIT is down almost 7% at this point of time. Margins corrected to just 8.08%, which is down 95 basis points, and the EBIT and the net profit is down by almost 40% in this particular quarter, coming in at 54 crores. Now, you've seen that the board has announced a buyback of 1125 rupees per share. So it's still a lot of premium from this share, but you see the 12-month chart visible on your screen. Quarter 2 was one where they broke, the first level of essentially that support led by a weak earnings, and that has sustained throughout the year in that sense. Now, this is a 720 crore buyback, failing to enter street at this point of time. Finally, Bluestone, a recently listed company, but a stellar set of earnings. Revenue is up 47% for this particular counter. EBITDA is up almost 5x in this quarter at almost 126 crore. Margins have increased to 18.4%, and the net profit is also up at 32 crores versus a loss that the company did of 51 crores. Stock's not reacting too much, but done well as well. But Another key story that continues to be in focus today has been from the solar space. We spoke about how US has imposed a steep preliminary anti-dumping duty on solar cells imported from India, Indonesia as well as Laos. What this means for the industry as well as which companies are said to be impacted the most. Varsha is now joining in to give us more details. Varsha, what are some of the key highlights from this?
First of all, this is a negative news for the Indian solar cells and solar panel manufacturers. Now, why? Now, we all know that, US has imposed a duty on solar cells from India, Indonesia and Laos. Now, duty for India, if you see, stand at around 123%, for Indonesia 35%, and for Laos at 22%. Now, if you see that these three nations accounted for almost 57% of the US imports in H1 FY25, and combined solar exports to US stand at around $4.5 billion last year, which equals to nearby 2/3 of total US imports. Now, talking about India's solar exports stand at around $792 million in 2024, and which surged 9x compared to 2022. Now, the final decision is expected for India by around July 13th, and for Indonesia and for Laos at September 9. Now, why US is doing this? Of course, to protect domestic US solar manufacturers, as cheap imports were hurting local production. Now, which companies will likely be impacted? Of course, Waaree Energies, now largest, has major US exposure. 20% of revenue comes from US, and even Premier Energies and Vikram Solar and MV are also in focus because of the solar cells manufacturers. But Waaree Energy said that they won't be impacted from this anti-dumping duty, as they don't make they don't buy cells from India. But to hear exactly how they are not going to impact, let's hear a bite. We did speak to the management of Waaree. We did speak to Mr. Hiten Doshi, who is chairman and managing director at Waaree Energies. Do listen in what he had to say.
We have never used an Indian-made solar cell. There is a duty or there is no duty on India, or whatever comes in the final findings. We use the solar cells from the countries where the duties are less, and we make a solar panels in India and then we export there, and we pay the duties of that country on that solar panel. There is a duty or there is no duty. We clear the customs based on their local regulations there. Another thing for Waaree Energies is that we have 2 manufacturing plants in United States. So, of course, there is no solar panel duty today and not also in this. But if it comes in future also, we have the local production, which will also help us as a company in altogether.
Well, that was Hitesh Joshi of Waaree Energies talking specifically that there will be an impact, of course, on solar cells, but they can always shift their sourcing essentially of solar cells away from India, from different countries, and hence that impact will be limited. Stocks still continuing to be down at this point of time, and very important clarification that there is no duty on solar panels at this point of time. Another counter that continues to be under pressure is Cipla. Now, this comes after US FDA has put out, and actually the stock has recovered quite a bit from the lows, but from one of its partner import facility could see some pressure and has seen an import alert essentially from US FDA. But Varsha, what are some of the key aspects of this, and what does this actually mean?
First of all, of course, negative impact on Cipla, and Cipla will have some pressure on financials when it comes to this product. Now, talking about what actually happened, so FDA, as per US FDA website, so FDA has placed Pharmathen, which is Cipla's partner company, under import alert, and a product from this unit cannot be imported to the US. Now, onto the partnership exposure, Cipla partners with Pharmathen International, and the Rodopi facility is the manufacturing site for lanreotide injection. Now, this facility supplies lanreotide injection to Cipla USA, which treats hormonal disorders and certain type of cancer. Now, talking about the product impact, of course, this injection supply to the US is disrupted, and all the shipments from this facility are effectively blocked. Now, what is the financial impact? Since there will be no business of this drug, the lanreotide It's almost 12% to plus US revenue, and this revenue has been removed, or estimates have been removed. Revenue has been removed from the estimates because analysts earlier had expected $50 to $60 million in FY27 and $100 million in FY28. Now these numbers won't be included in the financials of Cipla, and hence of course this being the drug which is into disruption, these all numbers will be impacted when it comes to Cipla.
Well, thanks so much for that, Varsha, getting us that key perspective for Cipla. But let's pull up the 1 year chart for Cipla, because this is the second impact that we are seeing on the stock in that 1 year. Morgan Stanley continues to maintain an underweight rating on the stock. Stock's down 16% at a time where the other majors have done pretty well. Morgan Stanley has highlighted that the resolution timeline is unknown at this point of time, could be between 6 to 12 months. And this accounts for almost 5 to 6% of sales from the US for this product. Macquarie, while maintaining an outperform rating with a target price of 1490, has highlighted that they had built in revenue of almost $70 million, something that Varsha highlighted in FY27 estimates, which might now be under threat. So while we've seen a stock recover, results season continues to be one of the key ones where a lot of clarification will be needed at this point of time. But viewers, if you've been on social media, if you've been anywhere or a consumer of Diet Coke, you know that there could be a shortage at this point of time in certain select stores. Now, it is getting costlier because, and that's what distributor checks are suggesting, as price could rise by up to 10 rupees amid the supply constraints as well as the higher input cost as well. We spoke with a guest in the morning at the start of the show about aluminum as well, and how you are seeing that impact, and it's visible in this as well. My colleague Ridhima is now joining in to give us some perspective on all of this.
So Diet Coke prices could rise by rupees 10 as per the distributors. This is mainly due to the pressure on the input costs. Now the prices are set to rise from rupees 40 to rupees 50 now for the 300 ml pack, and the companies are already considering a price hike, the dealers have told us. Now the main reason the price hikes are happening is because of the shortage of the aluminum cans and not the Diet Coke itself. And also let's understand that 5% of the revenue for India Coca-Cola comes from the Diet Coke, and it's a small percentage but a very high margin product. It's very popular among the Gen Z and the urban consumers, and even the company sources have told us that this is a very rapid growing growth section. The segment has been growing rapidly from the past 2 years. Now if you were to understand the exact reason why the prices are hiking, first up, as we told that there's a shortage of the aluminum cans, and India is heavily import dependent on aluminum, as we don't have aluminium manufacturing units in India that much. And also aluminiums have come under the quality control order due to which the BIS certification, or the Bureau of Indian Standards certification, has been made mandatory for the aluminium cans from April 2025, and due to which a lot of approvals and the production delays have happened, and also the delays in imports have happened. Now, the impact could also be seen on Varun beverages, which could also lead a price increase in the coming time. That's been told us by the distributors. But when and what exactly the momentum of the increase of prices, that's something we need to wait and watch.
Well, thanks so much for that, Ridhima. We've seen Varun beverages as stock continuing under pressure, but has seen revival post hitting that 400 mark. Of course, a maker of Pepsi in India, largely Varun beverages continue to be in focus. But the IT index we highlighted has been under pressure. Let's pull up the IT index now. You've seen stocks like Infosys dragging the index today, largely led by quarterly earnings that were largely weak as well. Not too enthused by the guidance either on the lower end of things, and that are some of the key aspects that is cracking, on the back of multiple key aspects that we've spoken about. Let me get my colleague Jasmeet to highlight all of those. Jasmeet, over to you.
Well, thank you for that. Nifty IT is in red today, and it's down at 5%. If you look at the key constituents, all are in red, barring Oracle Financial Services. Now, here are the key reasons why Nifty IT is in red, and we see extended pressure over last 1 week. Firstly, the Q4 numbers. The numbers did come flattish in this particular quarter, but the overall guidance and commentary has remained cautious and weak for the companies. Apart from that, if you look at the commentary by the management, we see weaker demand commentary coming in from HCL Tech, Wipro. Also, softer guidance we saw from Wipro were negative 2 to 0% 10% for the coming quarter, as well as Infosys in the yesterday's trade. We did note the company had given the guidance below the street estimates. Well, apart from that, the overall AI deflation fear is still continually impacting the investor and also impacting the company. As we did see HCL Tech come out and disclose a figure between 2 to 3% is the impact they see because of AI deflation on the revenues. While lastly, the overall brokerages have remained bearish on IT for a while, and they have also cut the target price after the Q4 earnings. So amid all these factors, the IT has been tanking and is in red today's trade.
Well, thanks so much for that, Jasmeet. But a couple of key stocks that will be in focus today on the back of quarterly results. You have, of course, IndusInd Bank coming out with earnings later today. But Shriram Finance is also one that we are putting our focus on, all set to announce its Q4 numbers. My colleague Shivam now joining in to give us some perspective of what to expect. Shivam, over to you.
Well, yes, Shriram Finance is going to report its Q4 FY26 results today. So let's quickly take it how the numbers are going to be. So starting with the AUM, asset under management, that is going to see a healthy growth on the back of good disbursement numbers, and also there will be a healthy growth in CV segment too. So OPEX is also going to see a rise as there has been an increase in bond yields, and the cost of borrowings and cost of funds are also expected to be increased. There will be some pressure on margins due to higher yields of the bonds, and moderation in MSME portfolio has been also a key concern for the stock. Also, one more thing that we need to note here today is the credit costs are likely to moderate, and this might help in the better asset quality.
Got that view, Shivam. Thanks so much for that. So continue to monitor Shriram Finance as well. Earnings expected continuing to be on that as well. But IndusInd Bank, of course, will also be results, will be something to watch as well. Let's pull up that stock as well. So NIM likely to see higher double-digit growth on a YY basis on a lower base, but the NIM will decline sequentially. So that's rounding up the impact on the financial names. Also pull up Himadri Specialty Chemicals as well. That's been one stock that's been firing up in trade today post results. We've seen stock cool off a little bit, but consolidated revenue was up almost 13%, EBITDA also up 4%, while the profits have grown by almost 29% to come in at 201 crores. Now they have commenced a new anode material production facility in West Bengal, which boasts an annual capacity of 200 MTPA, and hence that's continuing to be in focus. Stock has corrected slightly post hitting that 10% mark, but that also continues to be in focus as well. But that's all the time that we have on this edition of Lunchtime Trades. Thanks so much for watching. Stay tuned. Small Cap Buzzers comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year. new power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So what's on the show today? Firstly, we'll be speaking with the management of Stallion India. Now, if you look at the stock price move in the last 1 month, the stock is up nearly 44%. So the key question to ask the management is whether the refrigerant and gas demand is on an uptrend and how can things change around for the company in FY27. Apart from that, we'll be also talking about stocks like Gujarat Thamses. Now, it has signed a big deal, a major acquisition of close to around 1,740 crore rupees. Now, why this is big? Because the company's market capitalization is just 3,770 crore rupees. Apart from that, we'll be also talking about a stock IRM Energy. Now, this counter has been on a tear for the last 3 trading sessions. The stock has moved up nearly 37% on the back of strong volumes. And in the month of April alone, if you look, the stock is up nearly 61% in trade. So what could be the potential buzz around this is something that we'll try to decode on the show today. And then we are also talking about Mahindra Logistics. Despite reporting a strong set of numbers, the company is on a downtrend. Now, if you look at the company's net profit, the net profit that the company has reported in the fourth quarter is the highest that we have seen, highest quarterly net profit that we have seen in the last 3 years. Overall, on a YTD basis, the stock is up nearly 29%. And lastly, it's all about Atul Auto. The stock is again on an up move on the back of a major order win that it has received. Around 15,000 electric vehicle order is what the company has received. Now, if you look at the market, we are it's the third trading session where we are seeing a down trend, and it's a major one today. Around 300 points down. We have broken below the 23,900 support level as well. And if you look at the sectoral indices, it's largely led by the IT names. Even in the top 5 in the Nifty draggers, it's all IT. Nifty IT is down nearly 5.3% in trade, and none of the sectoral indices are trading in red. All of them are none of them are trading in green. All of them are trading in red. Nifty Private Bank Index is the only one which has declined the least in trade today, and even the Nifty Small Cap is down in trade. But there are a few pockets where there are buying interest, and let's get in Varsha to understand which are those pockets where we are seeing some buying interest coming in the small cap names.
Yeah, you know, a lot of stocks under focus, Soumit. You have Vidya Wires, which is buzzing in trade today. Let's see what that counter is doing. The stock was up almost, there you go, 9% in trade. You have Sri Pushkar Chemicals also buzzing in trade. This is on the back of volumes. Volumes are trading at 79 times of its 20-day average. You have Shivalik Biometal, Veranda Learning are some of the key stocks which are in focus or buzzing as of today. On the loser side though, you have many. You have AB Cotspin, which is under pressure. You have Khaitan Chemicals is also under pressure in trade. Rupa and company, yesterday we saw a stellar running when it comes to this counter, but today some kind of profit booking is also seen in this counter. You have STL Networks and Marine Electricals, which are, under pressure. So overall, not a good day for, small cap 250 also. But let's also invite Avinash Gorakshakhar, founder and head research at Avinash Mentor Research. Avinash, welcome at NDTV Profit. Always pleasure to have you. What are your views when it comes to markets? Which small cap stocks would you recommend for the investors?
Yeah, good afternoon. I think the markets are waiting for clarity, and I think this clarity has yet not come. I think the narratives has played very well up till now, and I think markets have now heard a lot of narratives from both the sides. I think now they want action and some clarity as when this war is going to end, and it looks very unlikely that any ceasefire could happen in the very near term. So my sense is that in this kind of market, it's always better to focus on domestic themes like automotives or capital goods, hospitals, or for that reason, hospitality kind of sectors. And specifically in the large cap category, even in the bank category, I think large cap banks, both from the private and the PSU side, look quite interesting. I think we have been telling our clients to get into stocks like SBI, Canara Bank, or for that reason, smaller banks like Bank of Maharashtra. So I think the market is going to provide a lot of opportunities, but there are going to be ups and downs. The market will be volatile. So I think it's going to be a little tough for investors to make money, but definitely I think one needs to focus on the numbers because we are in the midst of earnings season. And I think the market is definitely going to focus more on these data points for the near term. But yes, I think unless we get a clear solution for the ongoing war, I would not be surprised that this market would continue to remain a little subdued, at least in the near term.
Right, let's move across to Atul Auto. That stock has been gaining on the back of a strong order win coming in of around 15,000 vehicles. Where does this take the total order book and what lies ahead? Let's get in Puneet to understand more.
Well, thank you for that. We've seen stocks up 5% today, and this is the second such move that we've seen in the last 1 month. On April 13th, the stock was up almost 18% on the back of certain news flows as well. But the stock has now run up over 30% since the lows hit on March 30th as well. So has been largely a laggard in that sense, but rally 30% since March 30th. Now, they have announced, and Atul Auto as well as Exponent Energy have announced a strategic partnership today where they will be launching 15-minute rapid charging passenger three-wheelers. And for that, they will be deploying 15,000 vehicles under this particular partnership. Now, Atul Auto's vehicles will also be integrated into Exponent Energy's ecosystem as well as its mobility platform as well, which is specifically for three-wheelers. But when you look at the company, the three-wheeler EV policy that was announced in New Delhi last month was also something that was leading to stock buzzing in trade today. Now, you get incentives as visible on your screen right now, but the share of EVs out of the total three-wheeler space has now inched up to 60%. So you do see all players present in that state get that benefit too. But for Atul Auto, over the last 5 to 10 years as well, it's been a slow ramp up. They have a production capacity of almost 120,000 vehicles per year, but the utilization has been quite low. And hence the share, when you see compared to other players like Bajaj Auto, as well as on TVS Motors and Mahindra, continues to be limited at this point of time in terms of growth. So, players like Bajaj Auto have almost 34% share in the EV three-wheeler space. Mahindra is also inching up there, but Atul Auto continues to be just at around 2 to 3% share. So they will have to improve that. But if this policy, which is implemented in Delhi, is reflected in other states, there could be some benefit to look at for the company.
Avinash, how are you looking at this counter Atul Auto at the current valuations?
No, I think, Swamit, Atul Auto has always been a front runner in the three-wheeler category. I think this new order which they have got is largely for the EV category. And I think they should do considerably well. They have a large capacity, so ramp up is not going to be a problem. I think the markets are quite convinced and happy that after a long period, from the EV category side, Atul Auto has bagged a large order. And if they are able to successfully commission this order in time, then further orders could also be possible. So definitely, despite the fact that the stock has moved up by 25-30%, it could be a good investment pick, for somebody who's got a 12 to 15 month time frame. I think one could look at accumulating the stock on declines, but yes, structurally the performance for current year, that is FY27, should be significantly better than last year.
Right, got that view. Well, moving on, Stallion India Fluoro is one such stock which is in focus. This company is actually, shifting from a trading to manufacturing business, but of course in the next 1 year. But a lot of things are actually working in favor of this company, considering the demand for refrigerant gases is expected to rise. But to speak more about this and what lies ahead for the next 2 to 3 years, we are here joined by Shahjad Rustamji, who is the chairman and managing director at Stallion India Fluoro. Well, Mr. Rustamji, hello and welcome at NDTV Profit. Always pleasure to have you. With peak AC season approaching, is demand for refrigerant gases rising, and if yes, how much incremental volume or pricing benefit are you expecting when it comes to Q1 and Q2 of FY27?
The AC season is upon us currently, and India historically has a long way to go. We are continually seeing over 10% year-on-year growth in demand, growth in all the air conditioner manufacturers, all the ACNR companies have seen a sustained growth year-on-year. So the demand is going to be continuous. Secondly, we also have phase out of the HFC gases that are currently used, and incoming HFO gases that are going to be replacing the HFC gases. This also builds up on the turnover and the volumes, because the price of the HFOs is almost 4 times the price of the HFC gases. So that itself also gives a growth in the turnover. This is going to be a sustained, for next 10 years, it's going to be a sustained growth itself.
Okay. Also, sir, just wanted to understand a couple of things. Firstly, the Middle East issue, the war that we have been seeing here, has that had any bearing on the prices of your chemicals? Do you expect any impact of the same?
There has definitely been an impact. Prices have gone up. We have seen price rise by at least 15 to 20%. A minimum, we have seen a 15% increase. Reason is raw material pricings have gone up. Price of LPG has gone up. Price of transport has gone up. Middle East had become quite a player in this market. Number one, from point of sales. Second thing is from they also became a sort of a raw material supplier for AHF and other products. So the blocking of the Hormuz Straits has had an impact. Secondly, even in the helium business in which we have entered, the price of helium has gone up at least minimum of 300%. Meaning it was what was available at 800, 900 rupees a cubic meter is now 2,500 rupees a cubic meter.
Right. Right. Also, any issues with or any delays in shipping your products in the export market? Anything on that front as well?
There is disruption, but basically, as a company, we have not been impacted so much because this was pretty much foreseen that the situation would be arrived at. So contingencies had already been placed in all the working.
Right.
But
yeah, please go ahead.
Basically, we had taken the contingencies into our planning, but yes, impact is there in the market due to this.
Talk about helium and specialty gases. So helium you have entered recently. Just wanted to understand the opportunity size and of course how this is going to add to your financials in future.
Helium definitely would work. It's one of the new product ranges. It's we say helium, but it's actually a basket of products that would go into the semiconductor businesses, the semiconductor fluids, etc. In forefront would be helium. The good thing is we have entered in at the upside of the market, not the low side of the market, because now due to the happenings in the Middle East, the major supplier was Qatar. And disruption of their oil field has meant that for the next 2 years, helium will always be in scarcity. So our entry into the business itself has brought us at a time when the market is upscale.
Okay. Also, if you could just take us through your major capital expenditure plans, when are they commissioning, and would you require any further fundraise for the same?
We've got 3 projects underway. One is the helium semiconductor plant that is at Khalapur. That is almost ready and operational. We should go on stream next month, mostly for that plant. Mumbai 2 is a HFO debulking and blending plant. That had been enhanced. The project size had been enhanced almost like 200%. And range of other products, everything were added. What should have been done in stage 2 and 3, we decided to complete in stage 1 itself. So that whole plant itself would be a completed plant requiring no further addition or anything in that. That should go on stream by June. And the Bhilwara facility, which is our first maiden manufacturing project,
Right.
where the molecule is going to be manufactured by us. That work has already started much earlier to the rights issue. The work is on progress, and we expect to have production in, meaning start operation in October.
Right. And so for FY27, in the last con call, you had said that you were expecting 180 to 200 odd crores of net profit. You still on track?
Yes, if October production comes online, we would be very much on track.
And also for FY26, you were expecting 40 crores of net profit, but on a TTM basis, you have already crossed that. So, should we expect your net profit more than 45 crores?
We are in the result phase right now. We cannot discuss on that.
All right. Got that view. Well, thank you so much, sir, for joining in and having a conversation with us, and all the best for the business. Well, Avinash, considering, what are your views on Stallion India? Because they are expecting 180 to 200 odd crores of net profit in FY27. That's a huge, growth that they are expecting in PAT.
I think definitely this appears to be a very long and a very promising structural story. And I think the kind of product they are dealing in and the kind of customer, target, product range which they have been servicing is something which is going to benefit them. So the tailwind continues to be strong. Their expansion into new, plant plus the volume growth, I think is definitely going to play a very big role. So I think, maybe even at the current level, if one were to take a position and, invest for the next, say, 12 to 15 months, one could definitely expect a decent risk reward. Once numbers come in, I think once execution starts and we see these numbers in the financials, I think you're going to see the stock getting re-rated. So definitely, yes, I think from a medium-term perspective, the company appears to be attractive and can be accumulated for a medium to long-term horizon.
Well, viewers, time for a short break. More news on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show.
Well, Welcome back. You're watching Small Cap Buzzers. Now, before we go on to our next small cap stock, let's get in Sharat to understand what's looking on the F&O side. A weak and a very dull day. Sharat?
Exactly, that's the point. And for last two trading sessions, that pressure is there. And today it seems like IT has taken the entire focus of the markets. Infosys, HCL Tech, TCS Tech, Mahindra, all of them seeing a bloodbath. Only Kotak Mahindra and SBI is trying to hold the fort and barely in the green. But net, there is some respite in the private banking space, but nevertheless, it's a day of red, and this is happening across the counters, even in the benchmark indices as well as the broader indices. Let's look at how the long build-up is there. I doubt there'll be a very convincing long trade here. RBL Bank and NMDC come in with almost 1 to 2% gains coming in. Let's see if there is any short covering at play for our analysis. And we have Cochin Shipyard and Hudco. Interestingly, the defense name, certain names buying is there, so that stock is up 5%, so you can have a look at that. And also let's look at the long unwinding. Of course, the list will be larger. We are largely seeing IT players, LTM and Infosys, and I think there is no points for guessing. We'll have IT companies in the short build-up also, and largely they will be there all throughout. If you could just show the short build-up, and yes, it's IT and IT. All of them falling between 6 to 7%. Even the mid-cap IT, we are seeing a big carnage in red, and red.
Right. Well, thank you so much, Sharat, for all the details. Moving on, let's see what IRM Energy is doing in trade. It's the stock is down almost 5% in trade, but it's also down 14% in the last 6 months. And down over if you see 43% down over the last 5 years. But to speak more about this and what are the key reasons of this pressure for this stock, let's bring in Jasmeet for that.
Well, thank you for that. Before we get to the details of what the company operates and what are the operational highlights of the company, let's quickly understand the business model of the company. While the company operates as a distributor and manufacturer of gas, so what they do is they buy the overall gas, they compress it, and they supply it to CNG and then the gas stations. The CNG forms the biggest revenue chunk for the company, nearly contributing 61% of the overall top line. Now, in terms of the overall performance of the stock, we do make a note that the stock has been in negative over last 6 months, 1 year, YTD, and even over 5 years. Over last 5 years, the stock is down nearly 43%. Now, in terms of operation, the management is continuously doing the capex and increasing the stance when you look at the overall geography. While if you look at the key highlights, the company has commissioned its 150th CNG station in Bankas Thana on March 2026, and they also plan on expanding further in the similar areas of where they have won the contracts. It's basically they win a contract in a particular area and they get the sole right to build more CNG pumps around it. Now, if you look at overall pumps in FY26, they have nearly 39 stations so far built in FY26 alone, and Q4 will give more clarity of how much they have built by the year end. Now, in terms of the overall capex in Q3, the planned capex was 35 odd crores, and over the 9 months, the capex stands at 103 odd crores. If you look at the key financials, the financials have remained fairly stable for the particular counter, though they see a good uptick in terms of the overall EBITDA and profit when you look at the Q3 performance. But the revenue has stayed modest because once they buy the contract and they get paid based on the volumes of it, that's why the revenues are flattish. But the EBITDA comes in on the back of the operational efficiency the company is doing, and the profit has been growing at a healthy stage. If we look at overall 9 months, the cash and balance for the company stands at 250 odd crore, and the company operates at low debt of 54 odd crore. So all in all, the fundamentals look muted, but the stock is tanking in trade at down 43% over last 5 years.
Right. Well, thank you so much, Jasmeet, for all the details. Avinash, what's your view on IRM Energy? Do you track this counter?
No, I think, this company post its IPO has been an underperformer, and I think, the markets have not liked the trajectory of, the growth which has been reported by the company, although the fact remains, that a lot of capex has been incurred. So I think, the markets are looking for this operating leverage to kick in and better than stronger growth numbers to actually get reflected in the numbers. So I think somebody who's holding on the stock, Varsha, can definitely hold on. I think FY27 should be significantly better because whatever capex has been done till now, I think we could expect some kind of stronger growth kind of traction, from this capex which has been incurred. So I think it's a hold. Fresh buying, I think I would suggest, once the Q1 numbers for FY27 are out, because as of now, the stock is definitely in a territory where the numbers which have come out till now have actually not excited investors. So we'll prefer a hold and wait for the Q1 numbers. We could possibly take a fresh review later.
Right. The next counter is a quite interesting one, Mahindra Logistics. Despite reporting a strong set of numbers, the stock is down today. If you look at the net profit that the company has reported in the fourth quarter, it's the highest that we have seen in many quarters. But what could be, is there any reason, or is there any disappointment that has come in the fourth quarter numbers? Let's get in Shivam to understand those details.
Well, yes, let's start with the brief introduction about the company. The company is integrated, involved in integrated logistics business, and it caters to diverse industries such as automotive, engineering goods, consumer goods, and pharmaceuticals. And if we talk about the quarter 4 FY26 results, the company has released it yesterday and has saw a strong growth in revenue by 14%. Their EBITDA margin stands at 6.27%, and EBITDA has also increased by 44.6%. The profit has seen a turnaround. The profitability has seen a turnaround and stands at 20.2 crores versus a loss of 6.8 crores previous year. If we talk about the valuations of the company against its peers, so Shadowfax Technology is trading at 5.25 times of price to book value. Blue Dart Express is at 5.92. VRL Logistics is at 3.31, and Mahindra Logistics is currently trading at 3.22 times the valuation on a price to book scale. So in valuation terms also the company is doing better. If we look at the segmental performance, the express business was up 25%, freight forwarding business has seen a revenue growth of 14%, mobility has seen an increase of 22%, and warehousing operations has maintained its scale of managing around 20 million square feet of space under management, and last mile delivery segment has seen a bit of consolidation. So despite a strong performance, the company's stock has fallen around 7%, and in fact it was at 52-week high when the market opened, and on 1 month basis the company has given a returns of 15.4%, and on YTD basis the company's stock is around 29.7% up.
Right. Well, thank you so much, Shivam, for all the details. Well, moving on, Gujarat Themis is in focus now as they've acquired 1,750 crore of portfolio from Sanofi. But what is this portfolio comprises of? Let's bring in Parth for more details.
That's right, Varsha. So Gujarat Themis is in focus today because they have acquired the anti-TB and anti-infective portfolio from Sanofi worth 1,740 crores. Now, this is a significant acquisition for Gujarat Themis because their own market cap is 4,000 crores only. So it's a very big acquisition for them. Now, this includes the brands, the inventories, and the marketing rights of these portfolio which they have acquired. However, no manufacturing assets or the employees have been transferred in this acquisition. So this will be completely asset light for the company with a focus on branded generics. If we have a look at the portfolio details which they have acquired around 13 branded generic products with a presence in 55 countries. In fact, in FY25, their portfolio revenue was around 62 million euros with a strong presence in Europe, Middle East and Africa. If you have a look at the rationale behind this acquisition, so this will give Gujarat Themis immediate entry into the regulated and the semi-regulated markets all across the world, in the continents also which we saw that were Europe, Africa and Middle East as well. It will also give them some forward integration capabilities which will help them convert their intermediates into finished formulations, along with an opportunity to improve the margins of the company. Along with that, it will also leverage their established capabilities across fermentation and API as well. Now, if you talk about the financial and the structural impact of this deal, then this will be funded via a mix of debt and equity and is expected to be earnings accretive post completion of the acquisition. And because, as we saw, this deal is asset light, it will limit their capex requirements and give them some potential for margin expansion going forward. So let's see how well the company is able to integrate this portfolio which they have acquired from Sanofi into their own portfolio.
Well, thank you, Parth, for all that extensive information on Gujarat Themis. Clearly, looking on the stock price, it's up nearly 15%. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. One teacher, a million destinies. NV Sir, live at NDTV Yuva. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better.
Hello, welcome. You're watching Ask Profit, the afternoon edition here at NDTV Profit. I'm Mahima Vachajani, and with me is Puneet Zaveri, and we're here to take all your stock-related questions. You can give us your stock-related question with the numbers that are flashing on your screen up there. Either WhatsApp us or go ahead and even call us. But with regards to where the markets go, I think the pressure is real. I think nobody wants to go in the weekend with their positions in the markets, and that's why we're seeing that pressure coming in. Now almost at 320 odd points downtick is what we're seeing on the Nifty 50, down below the 23,900 levels is what we're seeing. Even in terms of the bank Nifty, it's down by about 0.9 odd %. Let's try to pull up the heat map for Nifty 50 and see as to what's changed there since we last spoke. You have your counters like Infosys, HCL Tech, TCS, Tech Mahindra, all IT under pressure, all of them, down in that range of 4 to 6% each. Followed by something like Sun Pharma, SBI Life, HUL, Eternal also not doing well, down in that range of 2% each. But something that's holding up is Coal India, which is up 1%. Nestle slightly up by about 0.6 odd %. Nestle has continued the rally since its earnings by a bit today, of course, but overall I think it's gained over 10% in the last couple of sessions. Let's try to pull up the sectoral heat map as well to see as to how that's looking like. And Nifty IT looking miserable right now. It's down by about 5.4%. I think if this week's fall together should be around 10 odd % for the Nifty IT, followed by something like Nifty Media, which is seeing a downtick of 2%. Nifty Defense, Realty also seeing profit booking. Nifty Metal is the one which is losing the least ground. Nifty Auto is now also down by about 0.8 odd %. The advanced decline ratio quickly, because in the morning what we saw was that the broader markets were at least holding up a tad bit as compared to where the benchmarks go, but that's not the case. slight change there coming in. The gap has been widening, but we have around 222 odd, 2,206 odd declines instead of 400 odd advances. But Puneet, overall, I think the sentiment, I think, is that nobody wants to go into the weekend with their positions, right?
Well, most certainly, and there aren't too many triggers at this point of time either to give any kind of positive pivot. So you're seeing earnings getting reacted and rewarded, and I think the Nifty IT has just taken a steam out of the market at this point of time. Infosys was the last one majorly in that sense, giving us that perspective. Let's look at the 5-day chart for the Nifty IT also very quickly. Infosys down 7% now, so it's breached that 7% mark again. So has Coforge. So while you saw buying at the bottom end in March, outperforming the benchmarks, but that has all reversed at this point of time also as well. But continuing to give us some perspective also, one of the stocks that was in focus today was IKS. Now the company has actually made an acquisition of almost $565 million, and this is of TruBridge. Now the stock's not reflecting too much, but it's a key acquisition for the company at this point of time. For TruBridge specifically, this acquisition is expected to strengthen the access to rural as well as the community-based healthcare. Company is listed in the US, so the plan is to delist the company at this point of time. But let me welcome in Sachin K. Gupta, the founder and global CEO of IKS Health at this point of time. Mr. Gupta, thanks so much for joining in, and a very good afternoon to you. It's Puneet this side. Just the first question essentially, that how will this particular acquisition of TruBridge be complementary to your existing product profile of offering platform as a service in the US? And if you can give us some perspective of the addition of new clients that you might have with this said acquisition.
Hi, Puneet. Thank you for having me and appreciate being here. So yes, I think with this acquisition, there is two fundamental levers that we move. One is we enter a completely complementary market segment. If you remember, our traditional market segment has been the large physician group market in the market in the US. And so we've serviced about 150,000 physicians in the US across 600 or large groups, all in their outpatient settings. What this acquisition does is it gives us a very strong entree into the rural hospital market. Remember, 20% of America lives in rural settings. There's about 60 million patients across rural settings, and there's about 2,200 rural hospitals. And TruBridge has their electronic health record product, which we call the system of record, implemented across 700 rural hospitals in the 0 to 50 bed category. So that's a brand new market segment for us that we get entree into. The interesting thing about that market segment is, even though it's the hospital segment, nearly 60 to 70% of the care delivered in these rural hospitals is very similar to the outpatient care delivered in our traditional physician group market. So the type of work or the services being delivered by the caregivers, up to 60 to 70% is very similar, outpatient care, but the market segment is brand new, and that is what we're very excited about. The other thing, just in terms of what it does for our product portfolio, is that this will create a first of its kind company in the world that combines TruBridge's system of record, which has all of the longitudinal patient data for these rural setting patients, with our proprietary system of action that takes away all of these chore tasks from the healthcare providers and allows them to focus on their core of patient care. And it creates this in a truly integrated manner that allows this system to be truly cloud native, AI first. And why I say that is because we're now able to access the data in TruBridge's electronic health records and are able to create an AI training corpus that is longitudinal patient data, that is labeled, that is action aware, and where you link the clinical context with the actions taken and the outcomes developed. And on top of that, we will be building our own proprietary SLM, small language model, that will allow us to agentically and autonomously orchestrate all of these tasks that we are trying to take away from the providers so that they can focus on their core tasks. And we'll be able to orchestrate these tasks in the native workflow.
Got it. Well, Mr. Gupta, the one other key aspect, and point well taken, that some of the key numbers that you've given us, 2,200 rural hospitals is what we'll get access to, along with the electronic health record as mentioned. Now, just in terms of the margin profile, because you operate at a much better margin profile compared to TruBridge, how much of a percentage of revenue will that become? And I think the expectation is that Q2 FY27 you will see the completion. So maybe a medium term FY28 answer, how much would this be of revenue, and but the margin profile, how should investors look at it? Is there any way that you will be able to capture that so that the deterioration of margin profile doesn't happen? If you can give us some perspective.
So first of all, Puneet, we don't give guidance, but having said that, the deal will be EPS accretive at the time of close, because when we look at the $69 million of adjusted EBITDA that they have and the debt burden and the amortization of intangibles as well as depreciation, it's still EPS accretive right from the get-go in FY27. Second, really important to understand, IKS already has a track record where we had acquired Acuity in November 2023 that had taken our pro forma margins from the high 30s on a standalone basis to 24% pro forma. With this deal, we would have taken our margins from the early to mid 30s down to 26% pro forma. And with the same type of logic where we manifest our system of action along with our globalized delivery model into their EHR customer base for their RCM customers, we will be able to get our margins back over the next, call it 18 to 24 months, back into the early to mid 30s. So while I'm not giving a guidance, I feel very confident that we'll be able to bring our margins back to that traditional early to mid 30s EBITDA. And then the other thing we're doing also is we're putting a North Star goal for ourselves 4 years out, where in FY30, we're saying that our standalone EBITDA that was about 1,000 crores as of trailing 12 months as of December 31st, 2025, will be able to go towards about the 3,000 crore mark approximately for the fiscal year FY30, and also get us back to the lower debt levels that we start out with in December 2025.
Got that, Mr. Gupta. And just one final question, because of paucity of time, just in terms of what we are seeing as funding of this transaction. Now it's almost $565 million. There's also an existing debt within the company. So you mentioned in your presentation that almost a facility of $600 million will be taken. If you can just give us some perspective of the timeline of how do you want to pay that, because you've given an interest rate also that will be applicable on the SOFR rate plus a percentage. But that will go down, as you're saying, as the leverage gets paid down. So any kind of particular timeline that you have of this translation over the next 12 to 18 months?
Yeah, so we are basically saying it's a 5-year term loan, a $600 million facility. And like I said, in our True North goal, in FY30, we propose to get back to a situation where our net debt that would have started off when this deal closes at north of about 5,400 crores, nearly 5,500 crores, should be back down to about the 300 crore number, which is where it was on a standalone basis in December 2025. So our True North objective over the next 4 years is to go from 1,000 crore trailing 12-month EBITDA to 3,000 crore at the end of FY30, and net debt back to that 300 crore mark from the 5,500 odd crores that will go to at the time of close to this deal.
Well, Mr. Gupta, thanks so much for joining in, giving us that perspective. Of course, a larger chat warranted post your earnings, but thanks so much for joining us today.
Thank you for having me.
Well, that was the management of IKS giving us perspective of a key acquisition for the company as well as timeline of what is expected at this point of time with the said acquisition. But let me welcome in our guest for today to answer all your stock-related queries. Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal, as well as Nirav Asher, Head Equity Research at Latin Manala Securities. Nirav, let me come to you. It's been a while since we've spoken to you. Thanks so much for joining in. Any coverage that you have on IKS and what investors should do with this one?
Good afternoon and thank you for the invite. We do not have coverage on IKS as such, but we have done a few companies which are into this electronic health records related space. So I'd like to share a bit of observations which we have done. Now this particular acquisition which has been done, of course when you acquire a company, of course you will look at access to markets, brands or technology. So here there is going to be an access to the rural markets, and it's a costly acquisition by any count. Expected to be margin accretive in the near future. Right from the word go, but it's very important to understand one thing which we have noticed in the past, that in the US the regulatory environment is something which we need to be very wary about. We have to be very careful about, because there could be certain regulatory changes which could take place and which tend to impact the cash flows. So there could be a sudden capex requirement which could pop up. So I think these are some things which we need to be very, very cautious about. While at this point of time the things are looking quite positive, we have to monitor the developments as we move ahead.
So that's the view coming in on IKS. The next one that we have is from Rajkumar, who's asking about MRPL. Wants to know as to what levels can he watch out for on the charts. Ruchit, your view on MRPL?
Yeah, I have a very good afternoon. So I think the stock has been consolidating in a range since last 1.5 months, in which 170, 165 has become a good support base for the stock. So the near-term trend remains sideways, with 170, 175 being a support and resistance around 210.
Okay, all right. The next one that we have is from Sri Kumar, who's writing us from Hyderabad. Wants to know if this is the correct time to enter JB Chemicals from a 3 months perspective. Ruchit, I'll stick with you for this one. Would you recommend that?
Can buy at current levels with some room to add if we get any dip towards 1900. Post the recent up move, we have seen some correction, but overall it seems to be an uptrend only. So can be bought at current levels, and if it comes to lower levels to 1900, they add more positions over there.
Okay, all right. So that's the view on JB Chemicals. The next one that we have is on IT stocks. Our viewer, Kondal Rao, is asking this question, wants to know from a long-term perspective if this is the right time to enter into HCL Tech or something like an Infosys. Nirav, good to have you back. Your view on the IT space right now. Do you think after so much of correction, it makes sense to buy them?
Well, I think we've been so used to the linear growth curves which we have seen in the IT industry. I think it's been quite some time since we've seen any meaningful disruption, and this seems to be something which is impacting the sector as a whole, not only at the domestic level but even at the global level. So I think it's better to be cautious, wait and watch for at least for the next couple of quarters as things unfold. Before making any meaningful entry into the sector.
Right. The next one that we have is on E2E Networks. Our viewer Chandrasekhar from Bengaluru wants to know if this is the right time to enter from a slightly long-term perspective. Ruchit, do you think these are the right levels to make an entry into this one? It's down by about 3% as we speak.
The stock has seen some pullback move off late, and it's around its resistance of 2950 to 3000. But overall trend seems to have been changing because the kind of volumes that you have recently witnessed during the price up move is definitely positive. So if you have mid to long term perspective, then you can keep a buy and dip approach, and it decline towards the range of 2700 to 2600 can be used to buy.
Okay. The next one that we have is from Murli, who's writing us from Bengaluru, asking about SJS Enterprises. It's got 400 shares at the levels of 1714. Is that correct? Yes, 1714. And says that he's willing to hold this for the next 6 odd months. Can he continue to hold, add more, exit? What should be the strategy? Ruchit, on the charts?
Trend is sideways. We have not seen any trended phase since last 3 months. The good thing is that in this entire consolidation is happening above its 200 EMA support. So 1500 remains a very crucial support for the stock. So I won't advise to average at current levels, but just hold your existing positions, keeping a stop loss below 1500 for now.
Below 1500 for now is what Ruchit suggests. But the next question coming in now, it's on Jubilant Foodworks. Now, Nirav, would you recommend buying into this counter is what the question is coming in. Is that something that you're looking at? Because it's had a rough period, right, over the last few months. What would be your view?
Well, yes, the results have not been to the expectations, but I think the management is capable enough. The competitive headwinds are there, no doubt. There is a lot of competition. Input costs have been going up, but I still remain confident. It's a good time to enter with a medium to long-term perspective.
Right, Nirav as well as Ruchit, it's time for a rapid fire round. Try to keep your answers as short as possible. The first one that we have is on Tata Consumer. Our viewer from Telangana has bought 1176 at the levels of 1176. 500 shares is what he holds. Hold or sell from a long-term perspective. Nirav?
Hold.
Siju from Qatar is holding KPIT Tech at 683. So he's bought it post the correction. Nirav, he wants to hold it for around 3 years. Would that be your view?
Sell.
Patel Engineering bought at the levels of 40 rupees. Sitting on a loss. Can I wait for 1 more year? Venkatamaran wants to know. Ruchit, your view on the charts?
I recommend to exit.
PNB Housing bought at roughly around 480 rupees per share. Thomas is currently asking what he should do with his 100 shares here, Nirav.
Hold.
Okay, the next one that we have is on MTAR Tech. Should I wait for further downside or enter right now? Ruchit, on the charts?
Can I add some positions over here? Average out if it comes around 4,800. So keep some room to add more on more.
Orient Pro Solutions bought at 886 here, Ruchit, by our viewer Suman. He holds 24 shares. Should he continue to hold and can he buy more?
Can hold existing positions, won't advise to buy more.
Okay, the next one that we have is on Enviro Infra. Is this the right time to make an entry from a long-term perspective? Would you suggest that, Nirav?
Definitely yes.
Exide Industry is bought at 353 by Sunil from Pune. What he should do with this counter now, Ruchit?
Can hold existing position.
Okay, the next one that we have is on Titan. Our viewer wants to know if he can continue to hold this from a long-term perspective. It's not given quantity or price. But Nirav, your view on Titan? Hold, right?
Hold.
Okay.
Yes.
Got it. Well, before we continue with the rapid fire round, let's just quickly listen into what Sagar Adani, Executive Director at Adani Green Energy, actually had to say on the quarter gone by. Listen in.
Energy security is the defining priority for economies all over the world. India has made a strategic pivot in this direction, and that is evidenced in the scale and speed of the green electron production that has happened in the country. In FY26, the country witnessed the highest ever renewable energy share in electricity generation and also achieved a record non-fossil capacity addition of over 55 gigawatts. With this, India now has about 283 gigawatts of non-fossil capacity already installed, and the country is well on its path to achieve 500 gigawatts goal by 2030. At Adani Green Energy, we are proud to be leading the country's energy transition. Our robust operational and financial performance for the fiscal year 2026 demonstrates our unparalleled execution capabilities and sector leadership. Our energy sales has surged by an impressive 34% year on year, reaching 37.6 billion units. To put this into context, this is nearly the annual electricity consumption of many European countries. This growth was driven by significant greenfield capacity additions and strong operating performance at our plants. During the year, we added 5.1 gigawatts, a 35% year-on-year growth. That has led us to a cumulative 19.3 gigawatt operating portfolio. This is the highest greenfield annual capacity expansion globally by any company outside of China. With this, we have further consolidated our leadership position in India's renewable energy sector, putting us firmly on course to achieve the 50 gigawatts by 2030. Notably, our landmark Khavda project, the world's largest renewable energy installation, continues to make considerable progress with 9.4 gigawatts of solar, wind, and hybrid assets already operational, including group capacities. Within Khavda, we also added 1.4 gigawatt hours of battery storage capacity. This is one of the world's largest single location battery energy storage project. On the hydro pump storage projects, we are making noteworthy progress, and we aim to complete our maiden 500 megawatts project at Chitravati in Andhra Pradesh in this upcoming year. Our consistent efforts towards adoption of advanced technologies, digitization, and leveraging sophisticated data analytics for predictive maintenance has enabled us to deliver exceptional operating performance. Our industry-leading financial results further reflect our operational excellence and scale advantage. Revenue from power supply increased by 22% year-on-year to rupees 11,602 crores, while EBITDA grew by 23% to rupees 10,865 crores. We achieved an EBITDA margin of 91.2% this year. One of the highlights on the capital management side was the credit ratings that were assigned to Adani Green by the Japanese credit rating agency. We got an inaugural rating of BBB+ with a stable outlook, which is equivalent to India's sovereign credit rating. This demonstrates Adani Green Energy's ability to sustain its growth while maintaining fiscal discipline. Further, I take pride in sharing that Adani Green's 19.3 gigawatt operating portfolio will power more than 8.7 million homes and avoid about 36 million tons of CO2 emissions annually. The continued recognition of our ESG efforts in globally leading ESG rankings reaffirms our commitment to sustainable growth and in accelerating India's energy transition. We are committed to continuing with a similar level of greenfield capacity addition going forward and are constantly strengthening our organizational ecosystem and our partnership ecosystem to achieve the goal of 50 gigawatts by 2030.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Real was always her rebellion. Sanya Malhotra, live at NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer.
Good afternoon. You're watching India Market Close. Unfortunately, it's not looking like a very good afternoon. I mean, you're ending the week and the week's trade with pain all around. 23,900 has been lost, 1.5% down. I mean, in absolute terms, 1.5% down on the Nifty is not the worst thing in the world. You are 300 points down. But look at it for the last 3 days and the pain continues. Really, we'll pull up the Brent as well because that'll give you a reason of why this is happening.
This is for the full week.
For the full week at about 2% because you had 2 great days, but 3 days were terrible. Brent at 107. So this is telling you why the pain will continue because they're just statements coming through, Alex, and no clarity on what's really going to happen.
Yeah, absolutely. And ultimately, we've spoken to so many
absolute brilliant people today, right?
Yeah.
Through the course of the day. And some of the messages that are coming through is that we're fine for the next 2 to 3 weeks.
Yes, that's something Neelkant Mishra
That's
said.
something Neelkant Mishra said. But then the problems might just exacerbate after that on the supply chains. And I think this is the key number to watch. Crude oil prices above 107. Ridham Desai was talking about crude at close to 120. If that remains the case, then we are heading towards a problem. So it's not yet a problem. I think it's not such a pretty screen because of the 3 days of cuts, and we're actually lower than we were at the high point on Tuesday.
Yeah, you've lost about a
quite
percent
bit of
and a
ground.
half, no doubt about it. Let's pull up the Nifty heat map as well and just show you what's doing worse today. I mean, IT is getting punished. I just saw a note coming in from a market watcher who's talking about how now valuations on an Infosys are less than an NTPC and a power grid. So that's the extent of punishment. This is a whiplashing. Infosys 7%. HCL Tech was done with its round of punishment, but no, investors have gone back for more after Infosys' numbers, another 6% down. TCS also got whipped on day one. Again, 5% down. Tech Mahindra can say what it wants to, but investors are in no mood to put money in IT companies right now. Another 5% down. Sun Pharma in a world of its own pain generally. SBI Life. Now, after the finance minister has made statements clarifying on bank assurance, 3.5% cut on SBI Life as well. Hindustan Unilever, Eternal, Wipro, the whole host of them doing very badly. What's doing okay relatively? A Trent, a Coal India. Coal India, remember, is a proxy for a war play. You feel worried about the Strait of Hormuz and war in the Middle East, Coal India starts going up. Nestle is doing okay, though HUL is not. SBI, Eicher Motors, but overall it's a dismal scene. And just the India VIX tells you the story. If you just pull up the India VIX, again 5% up. The volatility index, the fear gauge as it's called, is about 5% up right now. So it's a rough afternoon.
It is a rough afternoon. I also want to pull up the contributors because ultimately you have a few heavyweights beyond the IT companies are also leading to this. And you look at ICICI Bank, Reliance Industries before the presentation of its Q4 numbers later today is losing about 1% and weighing heavy on the benchmark. Not too much in the way of contributors, just about 10 of those, and they're not doing too much to move the needle. Let's also take a look at the broader markets because ultimately you're seeing cuts across the board. We're at the low point, though climbing just a tad bit, 1% lower for the mid-cap index, 1% lower for the small-cap index through the week. The last 3 sessions, including today, where you've seen pressure for the frontline counters, the broader market's doing okay. That isn't the case today. You're seeing across the board cuts, and so therefore, from that perspective, pull up the advanced decline ratio. You saw a snap of that earlier, but we're pretty much at the widest point of the day with over 2,000 declines, just about 450 advances at this point.
So this is really the recap. Market is under pressure, down for the 3rd straight day, biggest intraday decline since April 13th. 3 days of fall have wiped off the gains you saw 5 days prior to that. What has led markets lower? Higher crude prices, uncertainty in the Middle East, weekend fears. Of course, there's an upcoming expiry and earnings aren't good at all. So you have to find some silver lining somewhere, and that's not really visible right now. Infosys, HDFC Bank, ICICI Bank, HCL Tech, TCS, all your heavyweights in the last 3 trading sessions have contributed 58% of the fall. It's the biggies that are getting pummeled. The Friday factor also plays out. We didn't see it last Friday. We are definitely seeing it this Friday. Traders usually don't want to carry long positions into a weekend where war escalation fears remain a big overhang. The Nifty support levels now at 23,800 have shifted lower. The Nifty Bank trading around its strong support levels of 55,800. A decisive closing below this for the Bank Nifty could move the index lower to 55,000. So keep that in mind. In fact, I'm going to go across to Kunal Shah, Senior Technical and Derivative Analyst, Mirae Asset, to ask for more on that. Chakri Lokpriya is also joining us today. He is CIO Equities at LGT Wealth. Welcome to both of you. Kunal, let me come to you first on index levels. How much more pain do you see on the Nifty?
Good afternoon, Tamanna. Good afternoon to everyone. See, I think overall, what we have seen the rally from the lowest level of 22,182 towards this mark of 24,600. This was the entire pullback what we had got into the markets. Now, the 22,600, 700 was an important hurdle for the markets. We took a resistance from there, and specifically Nifty, because of IT, has seen selling pressure. So I think this will still continue on the downside. Nifty is likely to fill up the gap, which was there around 23,550, 600 zone. So I'm expecting a dip towards there, and probably from there onwards, you might stabilize and get some pullback from those levels. So still from the current levels, you can see 300, 350 points fall still is left in on the Nifty index. For the Bank Nifty index in today's trading session, we have exactly taken support at the 20 DMA, which is at 55,700. Again, this acts as a make or break level for the Bank Nifty index as well. If we break that on Monday's trading session, then probably the fall will get deeper and we'll be testing even on the lower side, 54,500, 600, which is the earlier swing low. So for Bank Nifty, I think even if you're holding long, keep a strict stop loss of 55,700. If that is breached, then you can expect further sell-off in Bank Nifty.
You know, we have to talk, Kunal, and I'll come to you as well on this, Chakri. We have to talk about the index performance of the Nifty IT and the constituents therein, because it's pain across the board, even a Coforge losing ground, right? So you have Infosys, of course, but you have Coforge that's down 6%, you have Emphasis that's down 6%, Infi is down 7%. As a cohort, this is the weakest link today. The question is, how low can you go?
Yeah, I think definitely there are more levels which are left on the downside for the Nifty IT index. It was already trading in a bear trend where the on 1st of Jan 2026, that is where we had made the top for the index, and then we have continuously seen a low top, low bottom formation. So still more downside left. My sense is we can even go towards the mark of 26,000, 25,000 on the downside on the Nifty IT index, which is currently trading at 28,500. So even from the current levels, you can still have more 2,000, 3,000 points, which is left on the downside. So even if any pullback you get, since we are on the daily charts have entered into the oversold zone as well. So there could be some bounce, but utilize that as an exit opportunity. No need to catch a falling line. Still there is downside left in the Nifty IT index.
All right, and we'll come back to that in just a bit. The factors that are leading to this fall, because we pretty much had the frontline companies all post their numbers. Chakri, Infosys, what more can you say? There's one word that can encapsulate the mood today. And it's good reason why the sector as a whole is getting the battering that it is. But the question is it overdone?
You know, the one word for IT sector is uncertainty about their future. You know, the whole the revenue growth that they were losing due to AI, some of it was going to be replaced by the new IT initiatives in AI infrastructure. TCS has added about 7% now coming from AI of total revenue, which didn't exist a couple of years ago. But on the flip side, because of the war, the discretionary contracts in the traditional IT business have not been as robust as they should have been as in the estimates, and therefore estimates are likely to come down further. Now, against this backdrop, the overall revenue growth is now coming closer to below the GDP growth rate for India, and that's not a good place to be. And that uncertainty, I think, will continue for quite a bit longer.
See, we were speaking to Ridham Desai earlier today, and he was making a good point where you have to make a distinction between the stock market and earnings growth in a sense. Let me explain what he means by that. To say that if there is a universal theme that everyone agrees with, like for example, your energy transformation, it's a discovered theme. You may not necessarily make a lot of money. It will earn a lot in terms of revenue, and the companies will do well, but you may not make money in the stock market. Is the IT space a pocket where you could potentially make money? Because at this point, everybody seems to be writing it off.
The answer is yes, one can make money, but the issue is what is the final revenue growth? That number people have been grappling with. Terminal rates have come down dramatically to about 3-4%. That's clearly not where a growth sector like IT will be. It's now question. Then the IT services sector has to demonstrate two things. One, the pace of replacement of AI-related revenues need to grow faster. They're growing at about 20-30%, but they need to grow faster. Second, the rate of decline, about 2 to 4% in their traditional business, at least should be made up for higher volumes. So until we see evidence of that, I think the multiples are still higher than where they were in, let's say, 2019.
Okay, since we're speaking about tech stocks in such detail, let me go across to our analyst Jasmeet, who's been tracking the space so closely. Jasmeet, now all the results are out. What is that one common thread which has really spooked investors?
The one common trend is the overall demand commentary, which has been quite weak. If you look at the overall numbers, they have been in line with the estimates and they have been beat in terms of EBIT as well. But that commentary when it comes to the overall demand they see going ahead is something that's impacting the overall stock and we are fearing the investors as well. Now, if you look at the overall demand commentary given by HCL Tech, Wipro and Infosys, it was quite soft, and even the guidance which they have given for FY27 is into negative, and they have also reduced the guidance what they had given back in Q3. So what it means is from the Q3 to Q4, the commentary, the overall performance was good, but in the Q4 they saw pressure in the month of March, the delays which they have been mentioning, and that delay is expected to spill over in Q1 as well. While the second aspect is the overall AI deflation. While HCL Tech came out and reported the AI deflation of 2 to 3%, while the AI deflation, it also mentioned it might expand further if there are new tools. So that's the second thing that's worrying the street altogether. While in terms of deal win, it's great. Deal wins have been above the estimates, but again, the ramp up becomes a key question because deal wins has been great over last 3 quarters, but ramp up is still a question for the companies. While lastly, if you look at the overall valuation, they seem attractive, but the overall brokerages have turned bearish on the particular counters and they have cut the target price in this quarter as well. While Nifty IT is down about 10% in last 1 week, and all the IT constituents are in red today on the back of that overall fear that Q1 and Q2 might see the similar pressure. But generally, H1 is stronger for IT companies, so we might expect some pickup in H1. But again, until we have a clear information of the AI revenue, there's still a confusion, and that's why the overall series is in red.
Yeah, well put. Thanks so much, Jasmeet, for wrapping that up. Those are the reasons why the IT pack as a whole is under pressure. But let's talk about the stock of the day. And usually we try and pick stocks that are doing particularly well. Today, unfortunately, that isn't the case. And we're talking about UTI AMC. It has posted a loss because of, I think, treasury losses. But let me go across to my colleague Mahima because she's looked at the numbers very closely. Mahima, this is a stock that we identified before the start of trade today. It was going to be weak, but then 10% is quite the drop. What's not working?
Right. So, as you rightly mentioned, the profit have turned into losses because of the high treasury losses that have come in. And I think the major reason as to why the numbers have not looked good this quarter is because of the product mix shift towards passive fund. The third aspect is that overall equity-based AUM market share further has declined around 9 basis points on QOQ basis to that 2.8% mark. Plus, net flows in core equity schemes have remained negative, and I think that is putting pressure on the counter overall and probably trading at its day's low point right now as we speak. Mutual fund yields have also slipped around 0.6 basis points QOQ basis, and employee costs have remained elevated, and that's put pressure in terms of EBITDA as well as margins. In terms of Q4 numbers, overall total income saw a downtick of around 22%. Net losses at 67 crore versus that of a profit of 121 crore for this one. In terms of the operational performance of how these, all of these AMCs have done in Q4, UTI AMC was the one which was the weakest. HDFC AMC was largely in line. ICICI and Nippon was strong, and your Aditya Birla Sun Life was also largely in line. In terms of how valuations stack up, but before we take a look at that in terms of 12-month P, UTI AMC is the only one which is the cheapest amongst all right now, trading at 15 times 12 months P, HDFC at 36 times. The most expensive one is ICICI Pru at 41 times, followed by Nippon India at 35 times, and Aditya Birla Sun Life at 27 times. In terms of what the street is expecting and analysts are expecting is that 70% of 20 analysts have a buy rating on this one. A 12-month target price is 1151 with a return potential of 24%. What lies ahead? Well, market share losses shall persist in the near term is what the street is expecting. Performance of major equity schemes remain weak over the 3-year period, and offers overall the dividend yield is something that the street will be looking at in that range of 4 to 5%. So this is the overall view of what's not worked and what lies ahead for UTI AMC.
Okay, thank you for that, Mahima. I'm going to get a quick view from Kunal on UTI AMC, that HDFC AMC as well. Kunal?
I think for UTI AMC, again, the stock was already trading in a downtrend. We had seen a pullback into the stock, and again, we faced that rejection zone, which was around the mark of 1100. 1100 has been the hurdle for the stock, and we exactly reversed from those levels. So again, we'll test the new lows for the stock on the lower end. The immediate support is at 875, And once that is taken out, then probably we are heading even towards 820 on the downside.
Okay. What about on the fundamentals, Chakri? It's not been the best operating environment, but if March was any indicator, then retail flows continue to come through. Over 40,000 crore rupees being pumped into the mutual fund industry, and that's just active equity mutual funds. So what would you say about the top picks that you like in the space?
In the case of UTI, I guess, the fact that the fees from the lower fees from the passive funds is impacting the bottom line. And in an age where they're promoting passive funds across industry, that's going to impact industry fundamentals. So in fact, probably including HDFC, AMC and Nippon and others, as their mix of what you call passive funds increase, their multiples too are likely to come down. And given SEBI's limit on the various restrictions and how much you can charge, that puts a further cap on the upside. So I wouldn't really buy into some of the other names because their multiples are a bit too high.
Okay, let's go across for that segment, which we wait for. What's being heard on the street? Samit Sarkar joining in with more details in just a second from now. But before we get to that, some of the other buzzers today, Himadri Chemicals among them. Look at what's happening with that. So when there are good numbers, you're seeing the street definitely rewarding it. We're seeing the spike in Adani Energy, and that's quite a sharp one, which has come after the management's commentary and, of course, standard disclosures there. Just let me get a view from Kunal on both of these on charts, Himadri Chemicals and Adani Energy.
I think for HSCL, we have already seen a clean breakout that had come in once the stock surpassed that 497-500 zone, which was the hurdle. So there has been a one-way move. The next hurdle on the upside for the stock is at around 611, and that is where you will see some rejection around 605, 6010 zone. So overall, the move has been played out. Now probably dips could be a good buying opportunity, not at the current levels. And for Adani Energy Solutions, this has been a one-way move for the stock. 1400 has also been taken out on the upside. From 1100, the breakout zone was there, and from there we have seen a good rally on the upside. Now there's a gap area towards this mark of 1400, which has been filled in today's trading session. So this could extend the move towards the mark of 1420, 1430 on the upside.
Let me ask another couple of counters, right? You've got Cochin Shipyard, which is doing particularly well in trade today. It's up about 4.5%. And there's also RBL Bank that is up and about at a time when the rest of the banking pack, and particularly the private sector banks, are not doing particularly well. Kunal, how does it look on the charts?
I think for RBL Bank, it has been in a consolidation phase. We had already seen a breakout into the stock around 308, and now again we have exactly taken a support at 308 and bounced back sharply. So that is positive. And once we take out the high of 324 on the upside, you can expect a good move on the upside towards the 335, 340 on the higher end.
Got it. Okay. It is now time to go to Samit Sarkar for what he's hearing on the street, and it's an apt time, I think, to go to Samit because there's quite a bit of action at the index level and certainly a lot of counters getting sold into sharply. Samit, what are the individual counters that the brokerage houses are focusing on?
Well, firstly, a couple of names that dealers have highlighted, Colgate and Navin Fluorine. There are buy flows on the large HNI desk on both these names, and what dealers are specifically indicating is the fact that the Q4 numbers for both the companies are expected to be much better compared to what the street has been anticipating, and hence these buy flows even in such a weak market that we are seeing. For Varun Beverages, there are buy flows on DI desk, and dealers are indicating that delivery volumes could be on the higher side for this counter. Then there are a couple of names, Bliss GVS and Anupam Rasayan. Now, a big M&A activity is expected in the in these names. What dealers are indicating is that Anupam Rasayan might buy the promoter's stake in Bliss GVS. Now, this has been in talks for a while, but this could be announced anytime soon is what dealers have indicated. And lastly, a few names that have seen strong buying interest in the last 1 hour, Chola Finance, Tube Investment and Bandhan Bank. Dealers are indicating that there are strong buy flows in the last 1 hour on the institutional desk in all these three names. So keep an eye out for these names as well.
Varun Beverages is an interesting one. Thanks so much, Samit, for that. Particularly because we had an exclusive story that my colleague Ridhima broke just a short while back. And that has to do with one of the favorite beverages of someone I know very well. It's this canned soda, and it's getting costlier. Diet Coke is getting costlier. It could go up by as much as 10 rupees a can, and that's primarily because of the aluminium that is used in the can. And by the way, there is also a possibility that Varun Beverages could be contemplating a price increase. I want to very quickly go over to Chakri to check whether he would suggest entering Varun Beverages at this level.
Yeah, the stock has underperformed and summer's coming, and this is a staple, and therefore the valuations have come down. The growth rates are intact. They're into new geographical areas. So I think, yes, you can buy into the stock. They will face some margin pressure because of the raw material increases, but I think the volume should be fine.
Okay, all right. Summers is here where I'm at least, Chakri. It whacks me in the face every time I get out of the AC. But having said that, let's talk about another reflection of the sun, which is solar. And there is, of course, a significant update in the space. The US has imposed steep preliminary anti-dumping duties on solar cells and panels imported from India, Indonesia, and Laos. From our perspective, of course, it is the duties levied on Indian companies. What does this mean for the industry, and what are the companies that stand to get impacted? Varsha is joining in to tell you just that. Varsha?
Well, thank you so much for that. It's a negative impact on the Indian solar cells and panels manufacturing companies, as US has imposed duties on solar cells panels from India, Indonesia, and Laos. Now, the duty for India stands at around 123%. For Indonesia, it is 35%, and for Laos, it is almost 22%. Now, these three nations, if you see, accounted for 57% of the US imports in H1 FY25, and combined solar exports to US is at $4.5 billion US last year, and this equals to almost 2/3 of total US imports. And if you see this, India's solar exports is in 2024 was around $792 million, and which surged 9x compared to 2022. So that's the importance of Indian exports. Now, talking about the final decision will be taken on July 13th for India and Indonesia, and for Laos it will be on September 9. Now, why US is doing this? Of course, to protect domestic US solar manufacturers, as cheap imports were hurting local production. Now, which all companies will be impacted? Of course, Waaree Energies is the largest Indian solar module exporter to US and has major US exposure. 20% of revenue comes from US, though Waaree Energies spoke to NDTV Profit and they said that they will not see any impact because they do not buy cells made up in India. Other stock, Vikram Solar, if you see, US was a key opportunity market for this company. Export contributes almost 16% to the overall revenue. Premier Energies is also has a growing export focused player. So overall, a big negative for US solar cells. Indian solar cells and panel companies, and that's what is reflecting in the stock price, especially for Waaree Energies.
All right, let's listen in to what Waaree Energies had to say to NDTV Profit about this very aspect. Listen in.
We have never used an Indian-made solar cell. There is a duty or there is no duty on India, or whatever comes in the final findings. We use the solar cells from the countries where the duties are less, and we make a solar panels in India and then we export there, and we pay the duties of that country on that solar panel. There is a duty or there is no duty. We clear the customs based on their local regulations there. Another thing for Waaree Energies is that we have 2 manufacturing plants in United States. So, of course, there is no solar panel duty today and not also in this. But if it comes in future also, we have the local production, which will also help us as a company in altogether.
Okay, so that's what Waaree Energies is saying. To be fair, that's what they said in Feb when there was one round of duties. They've reiterated this stance time and again. But if you look at how some of those stocks are being seen by the street, it's not very convincing as far as investors are concerned. And you're seeing that knock come in because directionally, The US seems like it's trying to prohibit imports of these solar panels beyond a point. I just wonder, Chakri, how you look at this entire space, because look at an MV photovoltaic as well. They're now 6% down today. Why are you also taking a knock, of course?
This entire space has gone through a huge transformation in stance from when Biden was there to when Trump. Trump was pro-solar and now Trump is against, and he's imposing all these duties. So that is, and it's impacting worldwide, not just exports to the US, exports to the other countries also is likely to be a challenge for all companies. But given the de-emphasis, despite renewable energy being a fashionable thing, at least it was a fashionable thing. As far as Waaree, it's expanding its US factories in Arizona, Texas, and so some amount of earnings, maybe 20-30% is under transition risk for the next couple of years. That is impacting the stock. That 3 years later, once the factories are running in the US, it should be fine. But until then, you will have an earnings hit.
Okay. All right. Now, there was an event this morning where State Bank of India had a new branch opening in Pune, and it was graced, of course, by the Finance Minister and certain other members of the Financial Services Department of the Government of India, and some key statements were made, some of which have already had a stock impact. One of them was from the Finance Minister, who said that there could be a reshaping of the bank assurance channel of banks. She says that a review is underway on whether banks should be allowed just one exclusive insurance partner. Listen in.
These are things which the committee will be sitting and working under the IBA chairman, which is formed, which is part of IBA itself. There's no new committee. Don't ask me, oh, what's happened to that committee? There's no new committee. The IBA chairman with the IBA will be talking to banks to understand how best to go about it. What are the vulnerabilities? By keeping one, by keeping several, by having different vendors but not having some. So all these are going to be worked out.
It's not the only thing that Finance Minister said. Amidst the rising concern on Anthropic's AI model Mythos, the Finance Minister gave a clear statement that banks should work together to counter newer threats from these models. She also said in the upcoming weeks, banks will have a meeting to address this issue. Listen in.
So yesterday's meeting was in that context. So all the while what we've had, and therefore proved ourselves that we are careful and protective of our customers, may not be sufficient. They need to be there, they need to improve, they need to grow. But we need something new and something far more versatile to be able to counter the newer threats which are likely to come. On that, I had a meeting with all the banks. MeitY Minister himself was present with me. Secretary, Department of Financial Services, Mr. Nagaraju, was also there. So actively now, the banks have been told to work together. As Chairman IBA, Chairman of CMD State Bank of India will be leading that effort. And in the coming weeks, there will be a lot of interaction within the banks, understanding where more investments will have to be made, what kind of technologies can come in, how AI itself can be used for countering this AI-born challenge. Works are happening on that.
Okay. And there was also a statement about the progress being made in the IDBI stake sale process. Listen in.
IDBI disinvestment will go on. You knew it was publicly announced as to why it had to halt. We will still go on.
Okay. The bank assurance update is something that is having a bearing on the stock price. So pull up, we were speaking about SBI Life and it's a stock that is losing ground. You can also pull up HDFC Life while we're at it, but down as much as 3%. In fact, pull the longer term charts out and you will see that this has been a slide that is taking place for a while, because there is a buzz that there could be a challenge to that exclusive channel and selling of these entities or their policies. Chakri, what would the financial impact be if, for example, a State Bank of India is told that you cannot only offer policies of SBI Life?
No, clearly it is a big negative for not just SBI Life, but all bank insurance companies. It takes away the competitive advantage of having this phenomenal branch advantage through which cross-sell, upsell happens. And it also therefore brings down the margin as newer players, they have to, the same company, same SBI Life or HDFC Life has to market third-party products. It brings down the margins of the overall business. So clearly volumes will be hit. Volumes for the overall business won't be hit because it'll be replaced by a competitor, but the margins are likely to come down.
All right, we'll take a very short break here. Thank you so much, Kunal and Chakri, for joining in today on the show, where we have seen maybe a slight improvement in markets off the day's low, but nowhere near suggesting that we're not in a in a negative trend or a negative outlook. However, at least the Nifty above the 23,900 mark. We'll take a very short break. We're coming back with buy today, sell tomorrow ideas, as well as how you should prepare yourself ahead of the weekend when we don't really know how things will pan out. All of that coming up after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year.
All right, 29 minutes to go before markets close, and I don't know if you're going to end this with a TGIF feeling. Maybe yes, because you have 2 days of calm and no more selling to go. Because look at the last 3 trading days. It's wiped out the gains of the previous 5 sessions as well. And last week, this time, Alex, we were talking about how markets are maybe shrugging off the whole geopolitical situation. Perhaps if numbers in Q4, where you're not still baking in the impact of the Middle East war, were not so dismal, you would have seen a different picture. But really, right now, I don't even know if there's enough value buying opportunity.
To be fair, I think a lot of the sentiment has gotten impacted because of the IT space and the way that those numbers have panned out.
Yeah.
We're yet to see a few more numbers come through. And
Mid-cap IT, I don't know, you have Emphasis, maybe a bit of Forge.
But I think you have a few more. I would wait for HUL. I would wait for a few more in the manufacturing space to come through.
Yeah.
Axis Bank is tomorrow, for example.
Yes.
And to be fair, Shriram Finance. ICICI Bank and HDFC Bank weren't terrible numbers.
No, they were good.
They were actually good.
They were good. ICICI Bank was very good.
So I don't want to write off the season yet.
Yeah.
let's see how it pans out.
All right. The week is a bit of a washout. There's no doubt about that. Nilesh Jain, Head AVP Technical and Derivatives Research at Centrum Broking, joining us this afternoon. So is Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. I'm coming to you first, Sudeep, on why you think the sentiment has soured.
Well, I think very clearly the oil prices going up will dampen sentiments in India, because this is not good for Indian economy, Indian markets, Indian corporates, and the way the geopolitical situation is poised, obviously the oil prices will be where it is, and if the thing escalates even more, prices may go up even further, and this is definitely not good news for Indian economy. You're talking about Q4 results. I think there was very minimal impact of West Asia trouble in Q4. But Q1, where we are now, will have significant impact. There are prices which are moving up, multiple areas. There is a primary impact of oil and gas prices going up. There is secondary impact. There is tertiary impact. So I think all kind of impacts are there, which is what the market is staring at. Also, there is the news of monsoon not being good because of El Nino. That again doesn't augur well. So, multiple headwinds are looming large in front of the market. And, on top of that, IT results came, which were disappointing. So naturally, the market is in a, sulking mode.
Yeah. Were IT results the biggest disappointment for you?
Not really. In fact, I've been one of the, analysts or market voice, which have been talking about IT facing major headwinds. There has been talk of IT benefiting here and there, but I've been steadfast in my view that, you will probably see some P&L gain because of currency depreciation. But end of the day, I think AI is a game changer. AI is big. And the impact of AI is just being felt. I mean, if we just at the beginning of this impact getting translated into economics as far as Indian IT companies are concerned, and it's a long way to go. Yes, some of the IT companies will pivot and start trying to take benefit out of the AI, and we have seen that in Accenture results. I mean, of course, it's not listed in India, but Accenture results clearly showed that they have started using AI, benefiting out of this AI revolution. But I think Indian large IT companies need to do a lot more to be there, and it will take some time. I'm not saying these are bad companies. I'm not saying they will disappear. They're strong companies, strong management, good cash in balance sheet. So they will survive, but it will be a period of turbulence. Maybe it will take 1 year, 1.5, 2 years before they can come back really. And, we should start looking at them only then, not before that.
Okay, so if you want to wait that long, that's a different story. Shriram Finance, numbers on your screen. Let's pull up some of those numbers as well. Total income is up 9.4% for the quarter at 12,532 crores for Shriram Finance. Profits up 41%. That's the net profit number, up 41% at 3,021 crores versus 2,144 crores for Shriram Finance. Net interest income number also, let's quickly see that on your screen. Some of total income is up 9.4% at 12,532 crores. Net interest income, there you have it, 6,994 crores versus an estimate of 6,757 crores. So far seems to be a beat, but let us look at some of that fine print coming in, because the total income figure has also gone up. What we need to look at is what the AUM numbers have been, what disbursements have been. Has there been a healthy growth there?
Tamanna, even as you were speaking and pointing out that the numbers were better than expected, there was initially a very sharp spike on a sharp drop when the numbers came out, but that has completely retraced, and we've come back to more or less neutral territory. Pull up the intraday chart of Shriram Finance just to drive home that point, where almost all of the factors have come through. All of these line items have actually come through ahead of expectations. So NII is strong. NIM might just be better than expected, and the PAT number certainly is better than expected.
All right, what's the AUM? What's the disbursement? Will it have a healthy growth? We need to look at whether CV demand has stayed healthy. Has OPEX seen a rise? as borrowing costs have increased incrementally. So we're going to be looking at all of that figure. The AUM figure is slightly below estimates. There you have it. The AUM figure right on your screen right now, 3.02 lakh crores versus the estimate of 3.05 lakh crores. We'll get Shivam up in just a second to analyze those numbers more deeply for you. But just going to Sudeep very quickly on what he's expecting from Shriram Finance and how he's looking at it. Sudeep Bandyopadhyay with us. Sudeep, is Shriram Finance something that you're looking at closely?
We do look at it closely. It's definitely one of the best companies we have in this particular sector. Fantastic set of numbers, I would say. Let's wait for the NIM numbers, but beyond that, I think all the numbers which you have been flashing do look pretty good. They're either near estimate or better than estimate. So I have nothing to complain. It was expected. The banks and NBFC's results, by and large, have been good. Whether it's ICICI Bank, HDFC Bank, and now Shriram Finance. So the large institutions are coming with good results. Unfortunately, the provision announcement by Union Bank yesterday did spook the PSU banking space and created a little bit of confusion. But private sector banks and NBFCs are coming up with fantastic set of numbers.
Absolutely, you said it. In fact, I do want to go to Nilesh on Shriram Finance. Nilesh, in the run-up to the earnings, if there's one stock from the Nifty 50 that characterized high beta, it is this particular counter, because it was moving in a pretty wild manner. If you were to buy today, what are the key levels that you would keep in mind?
Well, very good afternoon to you, Alex. Good afternoon, everyone. Absolutely, you have rightly mentioned it has remained volatile, but at the same time, we have seen a very strong rebound from the lower levels. In fact, after today's move, it has surpassed its 50-day moving average that was placed around 1010, exactly trading tad above those levels. But apart from that, it is also trading above its 121-day moving average. So overall setup looks positive. It's a buy at current level. Very good recovery we have seen post numbers today. And we expect a follow-up move towards 1050 to 1100. So if I have to choose any one particular counter in NBFC space, that would be Shriram Finance followed by Chola Finance. So looks strong to me, and I won't be surprised if we see a new record high in this particular counter in the April series. So buy and decline kind of a structure, one can keep a stop loss at 974, that's today's low, and expecting a move towards 1050 to 1100.
We will just wait a second to get more details for you on Shriram Finance. But right now, spike in the stock. There's a final dividend of 6 rupees per share also coming in. So more details coming in. They've also approved a fundraise for FY27, which they will be doing via debt securities. And that's an interesting one. That they will be now raising more funds. If you do a comparison in terms of NBFCs right now, Sudeep, where does Shriram Finance rank for you?
Well, absolutely at the top. I think they have been doing pretty well. All the parameters they have managed pretty well. The business growth is back. That's the reason why probably they are going for fundraise. And it clearly shows that they are expecting good growth in the coming quarters and year as well. So definitely, even if you consider the asset quality, it's much better than peers also. So, if you have to really compare Bajaj, Chola, Shriram, and some of the gold loan companies, I would probably put Shriram at top.
Across to Shivam, who's joining in with the first cut really of the Shriram Finance numbers. He tracks it closely. Shivam, what are you seeing from Shriram Finance?
Well, yes, Shriram Finance has released their Q4 results, and the net interest income has stand at 6,990 odd crores, which has seen an increase of around 11% on YY basis. And if we talk about the PAT, that has also increased to 3,116 crore rupees, which is around 26% growth on YY basis. And then if we talk about the asset quality, that has also improved, and the net stage 3 asset stands at 2.33%. So overall, if we talk about the results, that the results are strong, and also there has been an improvement in the operating profit.
Okay, there's an improvement in the operating profit. The net interest margin picture also looks particularly good, because if I look at it for the fourth quarter, it stands at 8.61%, and that compares with 8.25% a year ago. And compared with the last quarter as well, there's a bit of an improvement. So they've defended it. 8.58% is what was reported in the third quarter. 8.61% is where it stands. And I'm actually pulling up the gross NPA numbers as well as we speak. And in the fourth quarter, the gross NPA ratio stands at 4.58%. It's marginally higher compared with the previous quarter, which stood at 4.54%. But the net NPA number, which is net of provisions, of course, stands at 2.33%, and it's an improvement compared with the previous quarter, which stands which stood at 2.38%. So it's interesting, Sudeep, and the last point that I will raise with you is that in a scenario where in the end of the fourth quarter, you've likely seen bond yields go up, and so from that perspective, for an NBFC, not the best thing. They've actually maintained or managed to keep their cost of borrowing lower, and they've managed to maintain their margins, if anything, improve their margins. Do you think that that's going to be the case heading into the fourth quarter as well, or do you think that there could be pressure on the margins because of what we've seen on the yield side?
Well, I think, it's extremely difficult, Alex, to talk about first quarter. I would guess the first quarter margins will be close to where they are. But if you look at FY27, I think there will be pressure on margins because the expectation is that interest rates will inch up. Inflation is already moving up. The question of RBI coming with further cuts probably doesn't arise any longer. If at all, we'll see some amount of interest rates going up in the economy. And you're absolutely right, bond rates are already going up. They have already talked about raising money through the debt securities. And probably they will try to get in the cost under control by raising money outside the banking system so that they can still manage costs. It will be an interesting thing to watch, but my gut feel is margins will be under a bit of a pressure. But overall profitability, I'm very confident because the loan growth has been strong, and the company is also expecting strong loan growth in FY27.
Okay. So let's look at so one set of numbers out. Shriram Finance we're focusing on. Let's also focus on another big set of numbers which will take place, and those results will be out after market closes later this evening. RIL Q4, all eyes on what RIL reports. Somit is joining in to tell us what to expect.
Well, not any fireworks are expected. It will be a muted set of numbers coming in from Reliance Industries. In a consolidated basis, if you look at, revenues are expected to be higher by around 6.5%. EBITDA is expected to increase by just 3%. Margins are expected to come down to around 16.7%, while net profit will also decline by around 9% on a sequential basis to close to 17,000 odd crore rupees. On a segmental basis, if you look at, sequentially, retail revenues are expected to be lower because GST cuts have happened, and Q3 has as a base quarter is quite strong compared to Q4. Retail EBITDA, but that could be higher by around 3%. O2C segment, that is the oil to chemical segment, there the numbers are expected to be largely flat, and that is a kind of a disappointment because Street was expecting the numbers could be better given the fact that gross refining margins were on the higher side. But there are reasons that that analysts believe that this number would be flat, and I'll come to that later. Oil and gas exploration EBITDA, that is expected to be lower by around 12.5%, which could be the biggest drop that the company would see in the last 16 quarters. On the telecom front, not many estimates are there given the fact that Reliance Jio is coming out with an IPO, but few estimates that indicate that Jio EBITDA is expected to be higher by 3%, largely led by marginally higher ARPU and an increase in the subscriber base. Now, the O2C segment, that is expected to be weaker because of higher freight cost, higher insurance premium, increased LPG output, and higher gas costs that we had seen in the fourth quarter. Apart from that, the fuel marketing business would also have suffered losses because of unchanged retail fuel prices, that is petrol and diesel. Oil and gas exploration EBITDA, that would be lower because of higher cost and lower output, while when it comes to the retail EBITDA, that would see a modest growth on a sequential basis. And Jio, as I mentioned, marginally higher ARPU and marginally higher customer base would aid the EBITDA number of around 3% growth on a sequential basis. But what are the key things to watch out for? The commentary coming in on crude sourcing strategy, what is the margins that they are looking at the refining business and the petrochemical business, how the growth is picking up in the retail side, any updates on the Jio IPO would be important to track from Reliance Industries earning.
All right. Thanks so much, Somit, for that. So that's certainly something to watch out for, and you'll find those updates here on NDTV Profit. But let's talk about a key story that has emerged. And this is something of a talking point that had already come about when the taxes on cigarettes had been raised. There was an expectation that volumes might get affected, demand might shift, and consumption patterns might also change. That has taken place. And Ridhima is joining in to tell you what has taken place so far. Ridhima, you've done checks with distributors, primarily in the Maharashtra region, but this should be reflective of everything that's taking place. What have you found out?
So cigarette volumes have indeed dropped in April after the tax hike. This is what the distributors have told us. And the majority of this volume decline has happened in the king size cigarettes. The king size cigarette prices were increased from rupees 20 to now 25 to 28. This was after the excise duty on the cigarettes was hiked by 30 to 40% effective February 1st, 2026. Now in Maharashtra, over 20% volume has declined for the king size segment cigarettes. King size cigarettes for the ITC, the brands which come under that is the Classics and Gold Flake Kings, and for Godfrey Phillips, it's Marlboro. Now, the prices have increased, the overall volumes have also gone down as per the distributors, and the customers have already started down trading. They have been going from king size cigarettes to the regular cigarettes, and the volume has also reduced, and the stock price. Now, basically, if you understand that why the premium segment has been is important for the company, so around 30% of the revenue for ITC comes from the king size segments, and over 40% of the revenue for this king size segments comes from Godfrey Phillips. We reached out to ITC and they refused to comment, and even Godfrey, we are awaiting their responses from Godfrey Phillips. Now, what's also important is that analysts say that this will have a bearing on the margins by 800 basis points in Q1 FY27, and the final impact will depend on the volume decline and also the product mix.
Got it. Okay.
Okay, so one thing I just want to say, if less people are smoking cigarettes or people are smoking less cigarettes, it's not necessarily a bad thing. I don't know what impact it's going to have. Just going to go across to Sudeep Bandyopadhyay on the entire FMCG pack, not just ITC. We have one story on ITC, but how are you looking at HUL, Nestle, etc.? Because that seems to be at least one island of relative safety right now in a sea of red.
You're absolutely right. I think the Nestle numbers were pretty good. And what is most interesting, Tamanna, I find is that they have been talking about urban consumption picking up once again, and the numbers demonstrate that, which is excellent news for the entire FMCG industry as a whole. Also, I would say, the business update with Godrej Consumer provided also was pretty interesting. Domestic business has shown resilience, and international business for Godrej Consumer did show a lot of signs of improvement. So overall, I think we have been positive on FMCG, and we continue to maintain our view. We'll have to wait and watch for Hindustan Unilever numbers. I think that will be very interesting to note. And of course, numbers of Dabur, Marico. We'll probably get a sense of rural consumption pickup or otherwise also once we see these numbers. But having said that, I think we are heading into first quarter. We are into first quarter, and there are lots of pulls and pressures. One is because cost escalation because of this ongoing war and petrol prices going up, and second is the looming a threat of subpar monsoon because of El Nino. We'll have to wait and watch and see how things move. But having said that, I think I would still say on the balance, this is a good sector to remain
What's
invested.
your top pick, Sudeep? What's your top pick? Top FMCG pick?
Well, it has been Dabur for some time, and I maintain that.
Okay, Dabur it is. Let's talk about some results that have come through. Adani Energy has delivered a solid Q4 with steady profit growth, improving returns, and a sharp ramp-up in transmission and smart metering. Varsha joining in with more details.
Well, absolutely. A strong growth of numbers that the company has seen. Total income, if you see, is up 15%. Operational revenue is up almost 7%. And net profit, if you see, stands around 723 crore. Now, if you see, the sales from transmission and distribution increased 7%, which was driven mainly by new transmission assets coming on stream and increasing contribution from the smart meters. Talking about power demand in Mumbai's distribution area, if you see, saw a rise in demand by early onset of summer, resulting in volume increase of around 4% year-on-year. While income from trading business also increased by 4% year-on-year, and revenue from service concession arrangement was increased 28% year-on-year due to higher capex and rising contribution from smart metering business, resulting 16.8% year-on-year rise in consolidated revenue. They also won South Column, which takes to the cumulative order book of around 718 billion, and also commissioned 5 transmission projects in FY26. And the capex in FY26, if you see, increased 1.24 times year-on-year. Let's also talk about what Cantor has to say on Adani Energy Solutions. They maintain overweight with target price of rupees 1,198. They say that company reported solid print in Q4 FY26. Execution beats. Transmission remained the core earning driver according to the brokerage. Well, and transmission and metering also leads scale up. They expect a positive reaction in the shares, and from a cash flow perspective, FY26 reflects a business in a high investment phase with improving operating strength. So overall, a strong set of numbers that the company has seen.
Okay. And of course, standard disclaimers there. You're watching this report on NDTV, which is a subsidiary of AMG Media Networks Limited and Adani Group company. All right, a few other stocks that are going to be in focus right as we close off. Nilesh, anything that is on your radar before we open on Monday? Does Axis feature there? Axis, RIL, both will report now after markets close.
Well, Tamanna, I have one buy, one sell recommendation. Looking at the market volatility, it is better to have a balanced portfolio. So first of all, Navin Fluorine is a buy. We have seen a very good rebound. So we expect a follow-up on the upside to continue towards 6,600 to 6,800. So these are the two targets on the upside. Keeping a stop loss below 6,320. Navin Fluorine is a buy at current level. And apart from that, one sell recommendation, that's from Realty Pack. If you see, Realty Pack as a whole has given a breakdown and looks weak from a short-term perspective. And Lodha is a sell. We have seen a short build-up of position in this particular counter. So we are expecting a move on the lower side towards 820 to 800. Keeping a stop loss above 855, Lodha is a sell.
All right. Since we're talking about previews, let me go across to Shivam. We're looking at IndusInd Bank, Shivam, as well as Axis.
Well, yes, IndusInd Bank is about to report its Q4 earnings, and in terms of net interest income, it is expected that we will see a higher double-digit growth due to lower base, and the net interest margin will also see a decline on quarter-on-quarter basis, and this will be due to the lower net interest income on quarter-on-quarter basis. If we talk about the operational expenses and return on asset that are expected to remain flat, an improvement in MFI book is also expected. And if we talk about
Okay.
All right. Thanks so much for that, Shivam. So clearly these two banks that you need to watch out for in trade today, or rather heading into tomorrow, and we'll bring you live updates as they come through. Axis Bank and IndusInd Bank. And of course, different scale, but Axis Bank is something to watch out for as well, because you saw the numbers coming through from ICICI Bank as well as HDFC Bank. For ICICI Bank in particular, it was the loan growth that was watched very closely. For Axis Bank, it's likely to be a better than street or better than industry growth that you see with Axis Bank. And more than anything else, you're going to have to watch for the provision numbers, for the asset quality numbers, and whether or not the NIM, the net interest margin, has been defended. All things that you will catch first on NDTV Profit, but that is tomorrow. For now, let's take a look at the equity markets as we're closing out. And 1% down for the Nifty 50. In fact, it would make sense actually today to look at the week as a whole. So why don't we pull up the weekly chart for the Nifty 50, it was looking particularly good in the first half of the week, but we're ending up with cuts of close to 1%, and you know why. You've actually seen a pretty sharp fall over the course of the last 3 sessions for the Nifty 50. Pull up the broader markets as well, because through the week, you've actually seen a better performance for the broader markets. I'm talking about the weekly chart for the mid-cap index and then the weekly chart for the small cap index as well. There you go. So you see gains still, despite the fall that we've seen today for the mid-cap index. I think that would be the case for the small cap index as well. So 1% for the small cap index. That just goes to show that there is a little bit of strength in the broader markets that has come through. The selling has been focused in a few pockets at the large cap end.
You know, the conversations we've been having through the week as well, Alex, there have been stocks since the start of the war, if I look at an 8 weeks period, that have seen a 30 to 40% bounce from its lows. So money was there to be made. The question is if there is another opportunity being presented right now, and if there is enough guts, I would say, to go in for it. Because even as we're closing off on the Nifty, and you pull up the Nifty heat map, the big bleeding red is really from IT, and some of these private banks also taking a hit as a result of maybe the overall sentiment. But Infosys, HCL Tech, TCS, Tech Mahindra, all of them in bad shape. I want to also pull up a Shriram Finance before we close markets in the next couple of minutes. They've just reported. Let's pull up the intraday. Let's look at RIL. Let's look at Axis. Let's look at IndusInd. All of these are key ones that will report. Shriram Finance actually a big tick up there. Reliance about 1% down ahead of its numbers. It's expected to be a bit of a muted quarter. Axis Bank also about 0.5% down right now, and IndusInd is the other one that we should look at. That's 1.5% down in the red. The sectoral heat map will give you an idea of where all the action has been, and actually it's in action. So whole red, a full red screen is what you're going to see in another 2 seconds as you come back and markets close. It's not a fun Friday at all. Nifty IT really can't be the only culprit. Can't just be a 5% knock on Nifty IT. Can you pull up the Nifty IT for the week? I think it's going to be a bad one. But everything across the board is hurting.
It's a forgettable Friday.
Yeah, I think people will hope they can forget it, because the Nifty IT has taken a 9% knock this week. I mean, if anyone has any fears, they were all confirmed this week. That's the problem. All the fears were confirmed about AI, deflation of earnings, etc. It's like one of those nightmares coming true.
And if you pull up the 3-month chart, if you can do that for the Nifty IT, the sad part is that people did buy the dip initially, and you will see that, right? So this is what I'm talking about. The small dip that you see, the small uptick, and that got sold into. So we're pretty much
5% down in 3 months. I mean, this is value destruction that we're seeing on the Nifty IT. We'll just wrap up with top losers and gainers very quickly before we get to a very special show for you up ahead. Top losers: UTI Asset numbers, Infosys numbers, Cyient numbers, Delta Corp profit booking, because they were doing well yesterday after the numbers came through. Persistent, again, IT plus the IT pack effect plus numbers. HCL Tech, once again, maybe numbers.
And here IDBI Bank, the statements that the finance minister made, clearly having a bearing. Adani Energy reacting to the numbers. Cochin Shipyard has been buzzing all day, and then a couple of others as well. Ratamani is doing okay, and Gujarat Alkali. But I think more than anything else, it's a weak breath to end the week. And I wonder whether the frontline counters that report post-market hours have a bearing on how we start. I think more than anything else, it's going to be crude prices and any statements that come through on the geopolitical front.
Absolutely, but all of that will be available to you on NDTV Profit. For now, that's all the time we have. Thank you so much for watching, but stay tuned. All the action on the other side. I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. One teacher, a million destinies. MV Sir, live at NDTV Yuva. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Hello. No offense to anyone and no pressure.
No offense to anyone and no pressure. That's the best way to start off a town hall with Ridham Desai, because frankly, interviewing him creates some bit of pressure simply because he's so good with numbers that I tend to fall back every time about how do I ask the next question which can put you in a spot, and I have failed invariably. But I'm going to start off, Ridham, by asking you what a lot of people on social media told me, that Ridham Desai mostly will sound constructive on India. Now, is this the right time to be constructive on India, considering that the AI trade is still alive and kicking? We have a conflict in place as well, and there is a macro shock.
Chalo, this is going to be a long answer, so you'll have to be very patient with me. Okay?
Perfect.
So, pehla na, see, I used to read a lot. Okay? And I think that's the most wasteful use of time. Okay? I'll tell you why. So, there was only one book to be written on the planet, in the planet's history, and that was written 5,100 odd years ago. It wasn't written, actually recited, the Bhagavad Gita. Okay, 5,100 years have passed, billions of people have come and gone, hardly anybody's life changed. Most people have read the Gita in some form or the other. People don't read the entire Gita, but they have read the relevant portions. So it doesn't look like books do anything to you. Reading stuff doesn't change your life. Only experience does. So then why waste time reading, right? Which is a good, and I've read so many books, and then I try to see, which book, and I don't do self-help. Those are the books I certainly avoid. I do history, I do geography, I do science, physics I love. I've also read books on chemistry and a few books on investing. But imagine, all that we know about investing is contained in books. And yet, people struggle to be good investors. So if books were working, everybody should be a good investor, correct? However, having said this and put this into place, there are some things that come out of books that stick in your head and help you when you need them the most. So one of the things I've read, and the funny part of it, I can't remember which book I read this in. But obviously this is an investing book. And I can't remember who wrote this. But the line was that the point of maximum return is at the point of maximum uncertainty. So you have to make a call. Are you in an uncertain environment? So the most uncertain I have felt in life was in March 2020. I didn't feel uncertain during the GFC crisis, global financial crisis. I didn't feel uncertain in 2013 or when the tech bubble burst. Those were plain vanilla things. We knew that will come out of it. It was a question of time and how much prices will go down. But in 2020, I felt like I may not even live to see, the next 3 months. And yeah, tragically, my father did pass away. This thought had crossed my mind, and I was sitting there at home and saying, this has to be the point of maximum uncertainty of my life, and therefore it has to be the point of maximum return. And so personally, I started buying stocks. And by the way, things fell 20% after I bought them. And then I bought more. And then they fell another 20. And then ultimately the market troughed. And then ultimately I recovered everything, and we know what happened. So this also feels like a point of great uncertainty. Not maximum uncertainty, but great uncertainty. We've been through wars before, and usually markets come out good from wars because good things happen after wars end. A lot of good things will happen in India after this war ends. We will pivot on energy, we will pivot on fertilizers, we will pivot on defense, we'll become a beneficiary of data centers, and I can go on and on. So this looks like the best time to buy, at least in the last 6 years, since COVID. And now that doesn't mean that the markets can't fall further. They may. But we can't really catch the bottom, as they say, tops and bottoms are for fools. So one shouldn't be in that business. Now, hats off to Indian retail, because that's what they did in March. So, none of my institutional customers are watching this show. It's retail. They don't even need this advice because they're already there. They're buying this thing. And I know a lot of people think that they are foolish to do it. And only time will tell that they are not foolish, because when you buy risky assets during uncertain times, the prospective result is usually good.
Perfect.
So that's one. Now you ask the question on AI. So usme I have a very simple proposition. Okay, where is the next Neeraj Shah coming from? Neeraj Shah came. Neeraj Shah is one of, if not the best anchor in this country, one of the best anchors, and then I'll struggle to name a few others. So I will say the best anchor in financial news. We have some good anchors in non-financial news, but in financial news, you are the best. Where did you come from? Right? You didn't drop from the sky. You started your career as a junior journalist, learned the tricks of the trade, learned the ropes, interacted with people. It took a lot of work, right? And that is the problem with AI. So the threat of AI, as I'm told, is that it will wipe out the need for having junior people. The stuff that junior people do is no longer required. Well, then if you do that, where the hell is the next Neeraj Shah coming from? So I think the world will learn this in the coming years. So the knee-jerk reaction is, let's hire fewer junior people and we'll cut costs and AI will do this. And then 2 or 3 years later, there'll be a middle management crisis across firms in the world because you will not have enough. And now, when I talk to somebody at one particular firm, that firm will say, but we'll hire from the other firm. But if the other firm is also doing the same, and then the rest of them are all doing the same thing, where are you going to get the next pool of talent? And by the way, you cannot even tell me that I'll hire 2-3 people, because Neeraj comes from hundreds of people that got hired when he stepped out of college.
Sure, perfect.
Right? And so it comes like at a rate of 1%, 0.1%. So there is a very low probability, and therefore you cannot get it out of a small sample. You need large sample, you need population size sample to be able to get these stars out of it. So I think AI is a risk in the near term, but I don't see it as a risk in the long term. Come back to the AI question, because this was just a introductory answer. There are a lot of other things that I think are relevant regarding AI.
Okay, and we are going to come to that. In fact, there's a viewer query too, which we'll take later on. And I'm sure a lot of my colleagues have some questions too, but I have one follow-up, Rhythm. What can AI / the macro shock of higher oil prices do to India in the near to the medium term? Because one is that what AI does to talent, but two is that India doesn't have necessarily an AI play. Will AI be a commodity service, and therefore does India not need to fear too much, or does India need to fear too much?
So there are two parts to this. So firstly is the impact of AI, and the second is the lack of an AI trade. So that's a stock market question. The first one is a macro question. I'll take the macro question first. I think India is one of the biggest beneficiaries on the planet from AI. Reason is AI benefits those with the lowest productivity the most. And India's productivity arguably is low across systems. I'll give you one example. We have 22 million cases outstanding in our courts, from the Supreme Court all the way down to the lowest court. The largest cohort of cases in India come from, it's a surprise, traffic violations. 500 rupees ka fine laga, the fellow turns up in the court challenging that. Magistrates are busy hearing traffic violation cases, and serious stuff is held up. It's now going into AI. So challan goes there, photo goes there, police statement, appellant's case, everything, and AI is delivering judgments. This is going to unshackle our court systems. And one of the biggest macro risks to India's long-term story is lack of judiciary capacity.
That's true.
Which is, we have a pristine contract law, but its enforceability is a question mark. So if I have a contract dispute and I go to court, it can take any length of time to get it resolved. And that will prevent foreign businesses from setting up serious stuff in India. So we have to resolve that. And one of the ways to resolve it, because judges don't get produced at any faster pace, is to embed AI into our processes, and that has already started. Last year was the first year since we became a democracy that the outstanding cases in the Supreme Court fell, because the Supreme Court of India is also putting AI into its process.
You're saying that happened courtesy AI. Okay.
Well, I'm not saying that, but AI is contributing. So when productivity is low, AI is a big boon, and it's going to help. It is going to help us in our factories, it's going to help us in our desktops, it's going to help us lift productivity, which actually enhances growth. Because growth is a function of, so how does macro growth come? It comes from two things. It comes from the growth in your workforce, multiplied the change in the productivity of that workforce. Now the workforce growth in India is already set, because that's the fruit of what we have done over the last 30-40 years. So the demographic will decide where your growth in workforce is. So that you cannot change. In fact, as Elon Musk says, that climate change will get resolved eventually, but the decline in fertility rate, humanity has no solution to it and has no way to reverse that. So that is not a concern for India. It's a concern for many other countries on the planet. And there's only that much you can lift productivity. So their growth is in a declining phase. India has that. And now if you can lift productivity, our growth, so AI will take our growth higher. Now, of course, there are near-term risk factors. The biggest risk factor arises from the fact that there's pressure from Wall Street to demonstrate on American firms to demonstrate that you are putting AI into your business. Now, the simple metric that is used, which is very amateurish, but that's how the street behaves in the short run, is how many people did you fire last quarter?
Yeah.
Because if you fire people, then it means you're putting AI. Now, that doesn't mean anything, but that's how the street is concluding, and it will in the short run continue to behave in that fashion. Now, a lot of American firms have a lot of people in India doing low-end work that can be automated. So the instinct will be, let's get rid of these people. So there is a possibility that growth in that section of industry, which is largely in coding, may stall and may turn negative. And that could happen. And that's a 4 to 6 quarter transition pain. Out of that will emerge the fact, And Jensen Huang talks about the 5-layered cake that AI is. At the top of that, so at the bottom is energy, then you have the data centers, then you have the chips, that is the chips, and then in the infrastructure, the LLMs and the applications. India is going to be at the forefront of building the applications. How are you going to monetize all this AI? It's not going to come out of subscriptions that the current LLMs are charging. That's not going to take them much further. It will only come when people build real-life applications on these AI. And those real-life applications will be built in India by Indian techies. Okay. So
much
the
like
opportunity for our IT services industries is very large. But there is a transition pain, which of course the market is already put into the share prices. So I dare say that, the market has turned a tad too pessimistic, but that's okay. That happens from time to time. I think as you go forward into 27, 28, this AI opportunity will start reflecting in their earnings. Very similar to what happened when the world moved from enterprise to cloud 15 years ago.
Got it.
There was a transition period.
Okay. Well, with that as an opener, guys, anybody a question? Sure. I mean, whoever. Mahima. Yeah, maybe.
Yeah. So first of all, pleasure having you here, sir. I think my first question is from a perspective that we've seen markets consolidating, right? And which is valid also, which was needed also. But according to you, from a long-term perspective, what could be the 2 to 3 triggers that will push the market forward? And if not triggers, some policy changes in place which will bring back FIs into India?
See, the only thing in the long run that the market cares about is growth in earnings and return on capital. Okay, so let me just give you 4 strong macro drivers to India's long-term performance, which I reckon that no other country, with the possible exception of the US, enjoy. So the first is we have a young population and therefore growth in workforce, which, as I explained, is key to driving overall growth. The second is we have a very good balance between saving and consumption. Our saving rate is about 20%, consumption is 80%. It's a perfect balance. If you look at the 2 extremes in the world, in China, the saving rate is a lot higher, and in America, it's a lot lower, in fact, negative. Okay, so there are 2 extremes. These are not going to end well. We are in that balance. Why? Because there's respect for property in this country. So people are very secure about the assets they own. They are not afraid that the government will come and confiscate, which to some extent they may be in China. And in the US, of course, people want to spend their future because it's become a consumerist society, which we are not yet there. The third is that we don't have excess capacity anywhere. In fact, I would say that we have shortage of capacity everywhere. So we've seen how Mumbai has built out in the last 10 years, and we have to do 5x of that. There are very few countries on the planet where you have to do such capacity building at scale that India needs to do in almost every area, whether it's defense, fertilizers, as we are learning from this war, that it's not enough what you have done, or it's in the field of energy or infrastructure or basic stuff. We have capacity building everywhere. So that ensures a very high investment rate. Earnings come from investment rate. And finally, the most important thing in the stock market is respect for capital. Our entrepreneurs are still very frugal about the way they spend. In fact, I would say a touch too frugal. And nobody out here in this room or outside this room will invest unless 15% return on capital nahi mila to. So that respect for capital ensures that share prices actually do well, which is what India has done on a 30-year time frame. This is one of the best performing stock markets in the world in dollar terms, which one cannot say about China, which is a much faster growing economy, but it's not such a good performing stock market because the respect for capital is not as intense as it is in India. The US enjoys similar type of dynamic. So the long-term outlook, I think, is pretty good for the stock markets because this all will ensure that we deliver earnings growth and return on equity.
Okay, my producer tells me we have about 9 minutes left, so we're going to make it a bit of a rapid fire between all the questions, but you didn't answer the second part of a question. Yeah. When do FPIs come back?
No, I didn't answer the second part of your question either, which is a very important one. I'm surprised we're running out of time already. Yeah. Okay, so I'll do this quickly. So you asked about the AI trade. So that has hurt India massively in the last 12 months. So our market started losing performance because growth slowed down. The government and the RBI both pivoted on policy last year, and the effect of that is now visible. As you can see, most companies are reporting very good numbers. So the reflation trade is very much on. But the lack of the AI trade hurts. And you just look at, say, the memory companies in in Korea. Their earnings are bursting at the seams, and they are doubling profits, tripling profits. That cannot be said about India. So the relative story is still not as strong, but I think we'll get there. So my understanding is that as you progress further in this cycle, some of those things will unwind. But AI is here to stay. To the best of my knowledge, I don't think it is going to go away. And those who characterize this as a bubble need to just examine this a little bit more closely. FPIs, I think the technical point is that if domestic investors are going to put 40,000 crores in a single month, somebody has to sell, right? Because they already got the bid out there. And because corporate issuances are not happening, FPIs are selling. So that's the technical point, because you can't get a trade in the market unless somebody's selling, if somebody's buying. The fundamental reasons were threefold. One is India's valuations were too rich going back in September 24. That's unwound now. Growth had slowed down. That's unwound now. And India did not have an AI trade. That has still not gone away. So at the margin, I think FPI interest in dumping India is waning. The interest to buy, I think, will be a function of how this relative world around India moves.
Okay, that's a good answer. Okay, Puneet.
Hi, sir. You speak about earnings quite a bit, but also on a deeper philosophy level, you mentioned that you look at a lot of things. So investment philosophy, how do you look at it for a lot of investors who came during COVID, post-COVID, seeing their first kind of seeing the first kind of difficult time in the last 18 months, and with that combining what we've seen in the smaller and the mid-cap companies, they've run up. Do you think that your conversations with those companies give you enough confidence to show that they're still resilient and it was just the valuation that had run up at that time?
So, I'm going to borrow from Charlie Munger. 1994 Berkshire Hathaway AGM. Somebody stood up and asked Warren Buffett, how do I become the next Warren Buffett? So Warren Buffett, asked Charlie, can you please respond to this? Because it is not appropriate for me to talk about this. So Charlie said, listen, you can't be Warren Buffett, as hard as you may try. The best thing you can do is stack your money into an index fund on a regular basis, and the results will be good. 32 years later, he was absolutely prescient about it. The results have been good. And I think that's what people should do. Picking stocks, getting into businesses, trying to understand that, trying to understand what's happening to comparative dynamics, trying to figure out valuation, this is a full-time job. 99.5% of the people don't have the, in fact, I would say 99.99% of people don't have the time. They have a day job to do. And this is not like, on the weekend I will go into one of these many applications that are available and figure out and look at a company and, apply some basic rules and figure that I've got a 10-bagger. It's not so simple. So I think most people should default to buying mutual funds and leave the experts to take care of their money, and the results, I think, will be good. Okay, now to answer your question, I think companies are feeling okay right now. Of course, they're feeling a little bit worried about the war not ending, because it is putting some pressure on costs in places, and then of course some trade channels also have got disrupted. But domestic demand, I think, is fine. Exports have been a little weak. So those who are relying more on exports are struggling a bit. But hopefully this is going to fade away sooner than we think.
So you've got a reputation as a perma bull, and you can't have a bull case scenario without having contemplated the worst possible scenario. So my question to you at this juncture is, sitting in April of 2026 with an uncertain geopolitical conflict, with a significant bearing on India with regard to energy, what is the bear case as we stand?
So this is a function of the time frame. and I would resist the temptation to give a 6-month outlook on this. It doesn't matter. Equities don't work on a 6-month time frame. If you want returns on a daily basis, then you buy fixed deposits. If you are willing to take the risk and you are willing to have that duration, then you buy equities, and 5 to 10 years. So this will pass. This is not such a big thing. It's not going to cause the world to end. It will be gone. We'll forget about this and we'll move on. So that's my first overarching point. The bear case is, of course, that the war accelerates and oil goes to $130, and then I think it will create a real pain for India. At the moment, it's not creating so much pain. India can absorb this quite easily. The intensity of oil to GDP, as I have said many times in the last few years, has halved in India. So we're not as exposed as we were in, say, 2008 when oil went to $140, or in 2000, or of course 1991 when oil prices doubled in a single month, and our BOP crisis emerged. So we're nowhere close to all those things. Our balance sheet is very robust. Energy prices, of course, will hurt a little bit, but nothing to really derail India's growth story.
Real was always her rebellion. Sania Malhotra, live at NDTV Yuva.
From the factory floors of Guangdong to the policy corridors in Beijing, what is going to be China's next political, economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means.
Benchmarks end over 1% lower, recording first weekly loss in 2 weeks. IT index leads the fall as weak Q4 reports disappointed Dalal Street. Broader markets end over 1% lower too. Oil prices surge for the 5th consecutive day. Crude Brent hovering over $107 per barrel. The rise comes amid stalled negotiations between the US and Iran. After banks flagged concerns on Anthropic's AI model Mythos, Finance Minister Nirmala Sitharaman said that banks must adopt a versatile approach to counter newer threats from AI models. India advances trade talks with the US. Market access non-tariff measures addressed during the talks in Washington, D.C. Solar stocks slide as US slaps steep preliminary anti-dumping duties on solar cells and panels imported from India, Indonesia and Laos. Reliance Industries is expected to report a muted Q4 numbers, with revenue growth likely to remain steady but profit may drop. Ahead of the Q4 results, RIL stock down over 1%. Vodafone Idea says AGR reassessment outcome awaited. Company has made all required submissions. Excise duty hike burns a hole in cigarette volumes. Sales slide 20% in April as prices rise. Meanwhile, Diet Coke may get costlier by 10 rupees as West Asia crisis triggers aluminium can shortage. Meta plans 10% workforce, about 8,000 roles at risk amid AI spending drive. Huge layoff there. After rift with AAP, Raghav Chadha jumps ship, quits Aam Aadmi Party and joins BJP. Raghav Chadha hits out at AAP and says it's no more an honest party and he joins the ruling party. Hello and welcome. You've tuned in to Profit 360. I'm Nisha Poddar and we'll get you all the important details in the next half an hour, all the news that you need to know. First, starting with the markets. Well, markets recorded their first weekly loss in last 2 weeks as risk-off approach really prevailed on the Lal Street. Benchmark sunk over 1% at closing bell and broader markets mirrored that fall, continuing the US-Iran standoff. Now, weak IT earnings as well as consistent FII outflows have further dampened the investor confidence. While all sectors ended in the green, remember, Nifty IT is the one which drowned in trade, was the biggest laggard. The IT index is in fact down more than 38% from all-time high levels. In fact, my colleague Jasmeet is standing by with all the market action for the day and the week. Jasmeet, tell us.
Well, thank you for that. As rightly said, Nifty IT saw an extended pressure today in trade, and over the week, Nifty IT has stumbled over 10-odd%. If you look at the all-time high figure, as rightly said, Nifty IT is down about 38-odd%. Now, in terms of the key markets, Nifty 50 ends in red in today's trade, down about 1-odd%. If you look at over the week, Nifty 50 ends in red again over the week and snaps its 2 weeks of gaining streak. If you look at the top losers of Nifty 50, we have stocks like HCL Tech and Infosys, where they have lost nearly 12-odd% during the week. Now, in terms of the broader market, they have outperformed the benchmark in terms of the overall weekly performance, while the Nifty Midcap 150 snapped its 2 week of gaining streak and ends in red, down about 0.7-odd%. Now, in case of top losers in Nifty Midcap 150, we have stocks, again the IT stocks like Persistent and Coforge, where they have lost nearly 12.5% during the week. Now, in terms of the small cap 250, it ends flat in the week, while it ends in green after the 3 weeks of consecutive performance. Now, in terms of the overall performance, we have stocks like FirstSource and Ola Electric, where the top losers in Nifty Small Cap 250, both down about 12-odd%. Now, in terms of overall sectors end on a mixed note in the particular week, while Nifty FMCG becomes a top gaining sector, gains about 2% in this week, while Nestle is a top weekly gainer on the back of that strong earnings that it saw. Now, in terms of Nifty IT, it emerges as a top losing sector for the week, while we did note that overall Q4 was a lot weaker for the company than expectation, though the numbers were in line, but the overall guidance commentary was flattish, which led to the overall downfall of Nifty IT. Now, in terms of top losers, all Nifty IT sector constituents end in red during the week, barring the Oracle Financial Services, while HCL Tech leads the fall in Nifty IT, falls about 16% in this week. In terms of the overall snaps and the trade, we do note that Nifty IT snaps its 5 week of gaining streak, while Nifty Pharma and Nifty FMCG ends in green for the 3rd week in a row. In terms of Nifty Reality, Nifty Metals and Nifty Oil and Gas, they snap the 3 weeks of gaining streak and ends in red in this week. While lastly, Nifty Financial Services, Nifty Bank and Nifty PSU Bank snapped their 2 weeks of gaining streak and even they end in red.
All right, Jasmeet, thanks so much for giving us the entire overview of the markets. Now, at the NDTV Profit Town Hall, well, Rhythm Desai highlighted that India's fundamentals really remain strong. Labor costs are significantly lower than China, and tax rates are more competitive than a decade ago. And the country already leads in global services exports. He also said that the current oil prices aren't really hurting much, but a spike to $130 per barrel could create serious pressure for the economy. On markets, Desai advises patience. Let's listen in to a portion of that chat.
We've been through wars before, and usually markets come out good from wars because good things happen after wars end. And a lot of good things will happen in India after this war ends. We will pivot on energy, we will pivot on fertilizers, we will pivot on defense, we'll become a beneficiary of data centers, and I can go on and on. So this looks like the best time to buy, at least in the last 6 years, since COVID. Right. And now that doesn't mean that the markets can't fall further. They may. But, we can't really catch the bottom, as they say, tops and bottoms are for fools. So one shouldn't be in that business. Now, hats off to Indian retail, because that's what they did in March. So, none of my institutional customers are watching this show. It's retail. They don't even need this advice because they're already there. They're buying this thing. And I know a lot of people think that they are foolish to do it. And only time will tell that they are not foolish.
Now, India's medium-term outlook is looking stronger compared to its global peers. In an exclusive conversation with Neelkant Mishra, who's, remember, the chief economist at Axis Bank, well, the expert predicted that even if the Strait of Hormuz had to open tomorrow, India will relatively take lesser time to recover. Listen in to part of that conversation.
We are still in that territory that if the Strait was to open up next week or 2 weeks from now, the economy will have its turbulence, but things will settle down and markets are forward-looking. So there will be losses in the first quarter, there may be losses in the second quarter, but because there is expectation and it is likely that recovery will happen very smoothly thereafter, there is no permanent damage done, and which is why I think the markets have been quite benign.
All right, that was Neelkant Mishra. Now let's take a look at crude oil prices. Well, they rose on concerns of a renewed military escalation in the Middle East. Now, Brent crude futures, they've risen 1.8% to $107 per barrel, while US WTI futures have surged past $97. For the week, Brent is up 18% and WTI 15%. This is the second largest weekly gain since the war began. Lack of progress, remember, in reopening Strait of Hormuz has really kept the oil prices on the edge. Now, the rupee, it also really continued to weaken to close at 94 rupees 26 paise against the US dollar. So there has been a consistent depreciation in rupee over the last few trading sessions. All right, moving on to the war and what's happening there. Well, stalled negotiations and Hormuz closure has really kept the world on tenterhooks, with both Tehran as well as Washington refusing to come to the table, even as the ceasefire stays. Now, on the diplomatic front, US President Donald Trump indicated that he is not rushing into an agreement with Tehran, saying he is focused on securing a durable long-term deal rather than a quick resolution. He also confirmed that the Israel-Lebanon ceasefire will be extended by 3 weeks. And after talks at the White House, this is what the outcome is. Listen in to what he told the reporters earlier.
I gave them a break, and remember this, I want to make the best deal. I could make a deal right now. Do you know that if I left right now, we had a tremendous success. It would take them 20 years to rebuild, but I don't want to do that. I want to have it everlasting. I want to have it where they never have a chance to get it. I mean, the way you asked that question, yeah, I did say it. I thought it would take 4 to 6 weeks, and I was right, because at the end of 6 weeks, at the end of 4 weeks, their military was decimated. So are you saying? But now what I'm doing, I can't tell you that. I don't want to put that kind of a timetable on it, but it'll go pretty quickly, and we'll have the Strait opened up. Now, right now, we have it closed. We have total control of the Strait.
Now, India-US trade talks are also progressing steadily, with both the sides holding constructive discussions on an interim agreement and the broader bilateral trade pact. Now, the key areas like market access, digital trade and investment were on the table, with both the sides agreeing to stay engaged and maintain momentum. Rishabh Bhatnagar, my colleague, joins in with all the details on the developments there. Rishabh.
Absolutely. The Indian side was in the US from April 20th to 22nd. This was for finally an in-person round of negotiations after a lot of virtual discussions and, of course, a lot of stoppage that came in between both the sides. We have a statement that has come in from the Commerce Ministry now, and what they've said is that this team was, of course, in the US for discussions on the interim agreement and also the broader BTA that is under discussion between both sides. There were talks on multiple areas such as market access, non-tariff measures, technical barriers to trades, customs, digital trade. All of these were touched upon in the 3-day talks that were led by India's chief negotiator Darpan Jain. What the statement also says is that the meetings were conducted in a constructive and positive spirit, and the forward-looking discussions have enabled progress on key matters. So there has been some sort of progress that has been made made for an interim agreement to actually be actualized in the short term. What both sides have said that they will agree to remain in touch to maintain this momentum. So as you see, the momentum was somewhat stalled, but now again talks are picking up pace, and what we hope for is a quicker sort of actualization of the interim agreement, the framework for which was already agreed upon earlier this year. So that's what we're looking forward to now.
All right, thanks Rishabh for getting us all those details on the trade negotiations there. Now, as US sanctions waiver really expires on Sunday, government sources say that the situation around India's operations at Iran's Chabahar port remains fluid, with the authorities evaluating all the available options. Without an extension, continuing operations could really expose India and its entities to the sanction risks. Now, officials note that Iran continues to run the port while sanctions remain in force. So this is going to be an important development to be watched out for. All right, moving on then, amid growing concerns over Anthropic's AI model Mythos, Finance Minister Nirmala Sitharaman has made it clear that banks must collaborate to tackle the emerging AI-driven risks. Speaking on the sidelines of an SBI event in Pune, the Finance Minister also indicated that a meeting amongst the banks is likely in the coming weeks to address these challenges. Listen in.
So yesterday's meeting was in that context. So all the while what we've had, and therefore proved ourselves that we are careful and protective of our customers, may not be sufficient. They need to be there, they need to improve, they need to grow. But we need something new and something far more versatile to be able to counter the newer threats which are likely to come. On that, I had a meeting with all the banks. MeitY Minister himself was present with me. Secretary, Department of Financial Services, Mr. Nagaraju, was also there. So actively now the banks have been told to work together. As Chairman IBA, Chairman of CMD State Bank of India will be leading that effort. And in the coming weeks, there will be a lot of interaction within the banks, understanding where more investments will have to be made, what kind of technologies can come in, how AI itself can be used for countering this AI-born challenge. Works are happening on that.
Right, concerns around Mythos is a big concern for the banking sector. Now, another big statement from the Finance Minister, well, on the IDBI stake sale, and had an impact on the stock price as well. So, which she said will continue. In fact, shares rose over 8% after Finance Minister reaffirmed the stake sale in IDBI Bank. Let's listen in.
IDBI disinvestment will go on. You knew it was publicly announced as to why it had to halt. We will still go on.
All right, on that note, let's take it across to my colleague Piyush for the key takeaways coming in from Finance Minister's commentary on Mythos threat and others. Piyush.
We are at Pune's Khardi, where SBI has launched its local head office for the Pune circle. Here the Finance Minister addressed a press conference, and here are the big takeaways from that presser. The first one being that the threat posed by Mythos, which is a new AI model developed by Anthropic, banks are studying, banks, government and the regulator is studying the risk associated with this particular AI model, and the MEITY is also in engagement with various authorities and governments globally to understand the risks that are associated with Mythos. Number two, the Finance Minister said that banks have done well in terms of cyber security risk. They have put in safeguards, but as times grow and AI becomes more advanced, they need to be more versatile in terms of countering these threats. Banks are working together on Mythos, and IBA is actually leading this whole consultation on how to counter this challenge. On the bank assurance, the FM specified that there is a committee which is studying whether banks can have exclusive insurance partners for distributing policies. The FM also said that the IDBI Bank's disinvestment process is on, and the high-level committee on banking will review this going ahead. The FM said as of now there is nothing on the PSU Bank consolidation front, but the high-level banking committee, which will be formed soon, will also look at these matters. These are the key takeaways from today's presser. We will get back to you with more updates.
Right, Piyush Shukla reporting there from SBI Pune. In another important corporate discussion on NDTV Profit, well, Vodafone Idea, its CEO Abhijit Kishore had said that the company is awaiting clarity on the AGR issue. In fact, speaking to us at the Digicom Summit 2026 in New Delhi, where the CEO expressed gratitude to the Supreme Court for taking up a comprehensive reassessment of the AGR dues. And according to him, the reassessment process is currently underway and that the company has already submitted all the required documents. Let's listen.
Firstly, I want to talk about, of course, the AGR dues issue. I know there's not much you can share with us, but in terms of the reassessment outcome, when it's likely, if you have any inputs on that?
No, I think first of all, I would really be thankful to the Honorable Supreme Court and the Government of India for making a very, very decisive, conclusive, holistic reassessment for the AGR. As you are aware, the reassessment exercise is on. And we are all waiting for the outcome. Whatever was asked of us, has been submitted, and we all wait for the outcome. That's what I can share at this point in time. And as and when we get to hear from the government and the Department of Telecommunication, we'll come back to you.
All right, now let's focus on the big earnings that's coming up today. Reliance Industries is likely to post a muted Q4 numbers with the revenue growth seen holding steady, but the profitability is expected to remain under pressure for this large upstream oil and gas giant. Somit, my colleague, is here with all the details of what's expected from RIL results today. Somit.
Well, not any fireworks are expected. It will be a muted set of numbers coming in from Reliance Industries. In a consolidated basis, if you look at, revenues are expected to be higher by around 6.5%. EBITDA is expected to increase by just 3%. Margins are expected to come down to around 16.7%, while net profit will also decline by around 9% on a sequential basis to close to 17,000 odd crore rupees. On a segmental basis, if you look at, sequentially, retail revenues are expected to be lower because GST cuts have happened and Q3 has as a base quarter is quite strong compared to Q4. Retail EBITDA, but that could be higher by around 3%. O2C segment, that is the oil to chemical segment, there the numbers are expected to be largely flat, and that is a kind of a disappointment because Street was expecting the numbers could be better given the fact that gross refining margins were on the highest side. But there are reasons that that analysts believe that this number would be flat, and I'll come to that later. Oil and gas exploration EBITDA, that is expected to be lower by around 12.5%, which could be the biggest drop that the company would see in the last 16 quarters. On the telecom front, not many estimates are there given the fact that Reliance Jio is coming out with an IPO, but few estimates that indicate that Jio EBITDA is expected to be higher by 3%, largely led by marginally higher ARPU and an increase in the subscriber base. Now, the O2C segment, that is expected to be weaker because of higher freight cost, higher insurance premium, increased LPG output, and higher gas costs that we had seen in the fourth quarter. Apart from that, the fuel marketing business would also have suffered losses because of unchanged retail fuel prices, that is petrol and diesel. Oil and gas exploration EBITDA, that would be lower because of higher cost and lower output, while when it comes to the retail EBITDA, that would see a modest growth on a sequential basis. And Jio, as I mentioned, marginally higher ARPU and marginally higher customer base would aid the EBITDA number of around 3% growth on a sequential basis. But what are the key things to watch out for? The commentary coming in on crude sourcing strategy, what is the margins that they are looking at the refining business and the petrochemical business, how the growth is picking up in the retail side. Any updates on the Jio IPO would be important to track from Reliance Industries earning.
All right. Thank you so much, Somit, for giving us that heads up. Now, the US has imposed steep preliminary anti-dumping duties on solar cells and panels imported from India, Indonesia, as well as Laos. Now, what does this really mean for the industry and which companies are set to be impacted? Well, Varsha joins in with all the details and the research. Varsha.
US has imposed duties on solar cells panels from India, Indonesia and Laos. Now the duty for India stands at around 123%, for Indonesia it is 35% and for Laos it is almost 22%. Now these three nations, if you see, accounted for 57% of the US imports in H1 FY25 and combined solar exports to US is at $4.5 billion last year, and this equals to almost thirds of total US imports. And if you see this, India's solar exports is in 2024 was around $792 million, and which surged 9x compared to 2022. So that's the importance of Indian exports. Now talking about the final decision is will be taken on July 13th for India and Indonesia, and for Laos it will be on September 9. Now why US is doing this? Of course, to protect domestic US solar manufacturers, as cheap imports were hurting local production. Now, which all companies will be impacted? Of course, Waaree Energies is the largest Indian solar module exporter to US and has major US exposure. 20% of revenue comes from US, though Waaree Energies spoke to NDTV Profit and they said that they will not see any impact because they do not buy cells made up in India. Other stock, Vikram Solar, if you see, US was a key opportunity market for this company. Export contributes almost 16% to the overall revenue. Premier Energies is also has a growing export focused player. So overall, a big negative for US solar cells. Indian solar cells and panel companies, and that's what is reflecting in the stock price, especially for Waaree Energies.
All right, thanks Varsha for that. Of course, a big story in the marketplace were the solar energy stocks. Now let's move on to some consumption and how our household budget could be pinched by some of the consumption companies really becoming pricier. Diet Coke is getting costlier. Distributor checks have suggested that prices could rise by up to 10 rupees amid a supply constraint and also higher input costs due to war. Ridhima is here with the details. Ridhima.
So Diet Coke could get even more expensive. As per the distributors, a ₹10 hike could happen on the Diet Coke in the coming time, and companies are already considering a price hike. The prices could go from ₹40 to ₹50 for the Diet Coke of 300 ml can. The main reason why this price is increasing is the aluminum can shortage. This was reported 4 to 5 days back, where there was a supply crunch for Diet Cokes in the big metro cities. Now, 5% of the revenue for Coca-Cola India comes from the Diet Cokes, which is a small percent with high margins, as this product is very popular among the Gen Z and the urban consumers. And as per the company sources as well, this category is rapidly growing in the past 2 years. Now, the main reasons behind this price increase is firstly indeed the aluminum can shortage which has happened, and India doesn't have enough manufacturing units for cans, so we are heavily import dependent on aluminum cans. And the regulatory bearing which has come on the aluminium cans, because of which now it comes under quality control order for standardization reasons. Now BIS certification is very necessary for aluminium cans starting April 2025, due to which there have been delays in the production and the imports as well. The bearing could be seen on the companies like Varun Beverages, which could also see a price increase. This is as per the distributor information. Now when that happens and by how much, that is something we need to wait and watch.
All right, but Ridhima, stay on because as we get into the weekend, our Diet Coke is expensive and the cigarettes also getting expensive. Since the tax hike really announced earlier this year, cigarette sales have taken a sharp hit, with volumes dropping as much as 20% in April alone. And Ridhima gets us all the exclusive details on the impact of the tax incidence on price hike and the price hike leading to lower volumes. Ridhima.
So cigarette volumes have declined in April as per the distributors after the tax hike, and majority of this volume decline comes from the king size segment of cigarettes. King size segment price that increased from rupees 20 to rupees 25 and 28. This was after the excise duty on the cigarettes was hiked by 30 to 40% effective February 1st, 2026. In Maharashtra, over 20% of the volume dip has happened in the king size segment. So this king size cigarettes include ITC brands like Classic and Goldflick Kings, and for Godfrey Phillips it's the Marlboro brand. And overall volumes have also declined by 20% as per the dealers, and the customers have already started down trading, going from king size cigarettes to regular and from regular to deluxe. But the smoker base hasn't really changed. NDTV Profit did its dealer checks in Maharashtra region. The stocks in focus include ITC and Godfrey Phillips. Now, why is this premium segment so important? So the king size segment decline has been the most by the tune of 20%, and this is a very high margin product for the cigarette companies. Around 30% of the revenue for ITC comes from this king size segment, and even for Godfrey, over 30% comes from this segment. Now, we reached out to ITC, they refused to comment on this. We're still awaiting responses from Godfrey Phillips. Now, the analysts say that this volume decline will have a bearing on the margins to the tune of 800 basis points in Q1 FY27. Now, remember that the margins for ITC, which come from the cigarette segment, is about 70%, which makes it important. And the final impact will depend on the volume decline and also the product mix.
All right, thank you so much, Ridhima, for all those exclusive details. Now, in a major political development, senior leader, including Raghav Chaddha, as well as even Ashok Mittal and Sandeep Pathak, have stepped down from the Aam Aadmi Party, signaling a deepening crisis within the Aam Aadmi Party. And Raghav Chaddha, founding member of Aam Aadmi Party, alleged that the party has now become corrupt and compromised. Let's listen in to his remarks.
जिस आम आदमी पार्टी को मैंने अपने खून और पसीने से सींचा और अपनी जवानी के 15 साल दिए, वो आम आदमी पार्टी आज पूरी तरीके से अपने सिद्धांतों से, अपने मूल्यों से, अपने कोर मॉरल और वैल्यूज से भटक चुकी है.
All right, with that, that's a wrap on this edition of Profit 360. Keep it with NDTV Profit. Thanks so much.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Conventional was never her color. Chitrangada Singh, live on NDTV Yuva. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where I get to the hottest companies where you can create alpha or save your capital. But let's give you some hints before you understand which company I'm talking about. This is a pharma company which is incorporated in 1999. Also, last time this company came in KYC 5 months ago as well, when it was newly launched. It had an IPO. Stock was listed on October the 16th, 2025. But it seems D Street has given a strong thumbs up to the stock. The stock is up 90% from its IPO price, and recently the stock has been buzzing because it has entered India's CNS formulation market. CNS means Central Nervous System. But which company this is and why everybody is talking about it in the pharma space, and the company in focus is Rubicon Research. This is the company which we like to talk about and understand what the growth strategy is. But it's at an interesting pivot level also when it comes to its business model, and we'll try to understand that. The first question for this company is its entry into this big formulation market and what's the synergy, because they have acquired a company called Arena Life Sciences. It will be very much interesting to understand more details about it. What's the operationalization timeline for the Pithampur plant? That is very much important as company starts believing much more on its own rather than contract manufacturing, and this is where the question comes, because that model also needs to be sorted for this company, and of course investors will be looking at that for the next 2 to 3 quarters. The uptick in the specialty product share in the gross profit, how does this go out, and the specialty segment, what are the margin outlook for these key products, and of course we'll understand the key product launch pipelines and the product lines. What should someone track for this company for FY27? But of course, when we talk about the geopolitical issues, concerns come in raw material, packaging, that is where the concern comes. But on the other hand, 98% of dollar billing also comes. And the inventories, they are on the higher levels. Will they remain elevated in the fourth quarter? That's the key question to be asked, because they are getting a lot of higher orders as well, the new orders which we speak about. And joining us would be Parag Sancheti. He's the CEO at Rubicon Research, where he'll give us the entire details and the questions for the company. But let's get into more details about this company and see what has happened, since the last time the company came to KYC, and now we are doing a little bit more detailed coverage on that. Company, as we know, listed on 16th October 2025. It's an R&D-led pharma manufacturing company with a focus coming on the regulated markets. Now, if you go into details, there are 4 dosage forms where the company is focusing on: oral solids, oral liquids, nasal sprays, and topicals. And seeing the condition of my cough, I think I might be needing nasal sprays as well. But let's also talk about the company's inspection facilities, the R&D facilities which is there. And one each is there. One is in India, another one is in Canada. So these are important facilities to look at. There are 3 US FDA approved facilities in Ambernath, Satara, Pithampur. Pithampur is in, of course, you could say Madhya Pradesh, and the other places in Maharashtra. The R&D expenses is pretty high, and that's a good sign if you're tracking a company like this. 11% of the operating revenue. Generally, the industry range is 5 to 6%. Now they are entering into India's CNS formulations market, and if you get into the details about it, this is a strong acquisition which the company has put in. This is of course the factors coming in at play. The pricing still continues to remain stable as per the Q3 numbers. Remember, the company has not come out with its Q4 numbers, so we'll try to understand, or at least try to get a flavor of where the trends are lying. Also, apart from that, the commercialization rate continues to be on the stronger side, especially for the US markets. It's 90% plus. I'll get you an important detail on those operational front. And also, let's look at the other key factors, and this is the number which I'm talking about, and that's the growth strategy looking like. But let's get into a little bit more details about it. And there's a larger reliance on the outsourced manufacturing, and that is why they want that commissioning or the commercialization of the Pithampur plant to start fast. So of course, we'll ask about the timelines, and this is where we come in. That's what company has given. So this is a very important trigger point for the company. It changes the business model a little bit. The key operational data, look at these numbers. 83 active approved products are there. And if you look at the second operational data, that's the number I'm talking about, 92.77% of the commercialization rate. Let's pull up the third operational parameter, and that also is showing a good momentum. But the product concentration, that has been going down. That is something to look at for as well. But how the company is passing the D Street test, stronger returns post the IPO, and they have done well. Second important reason, as per my analysis, is better return ratios as compared to the global peers which we have done. That means there is a good strength in the long-term basis, and 98% of business is via dollar billing. And remember, dollar has been appreciating, so it augurs well for this company. Street is bullish on the new product line forays as well. So as of now, since IPO, the company has passed its D-Street test. But now what happens, that's also very much important. But to judge that, we need to get our ratings back to judge this company. In a KYC, the important numbers we track is, of course, the income statement, balance sheet, and the cash flows. But apart from that, also the return ratios is something which we track. And now the company has a history, so we'll have shareholding analysis. Street cred, kitne paisa banaya, kitna nahi banaya. Valuations, we'll try to see how things are panning out over the next 3 odd years, and the outlook itself, the short term, medium term, long term, all of this outlook, we'll get it for you. But without delay, let's start the first rating, and that is the income statement. And let's see what changes have happened. Largely the numbers have been growing. Just look at the top line numbers, they have been increasing very properly. And of course the bottom line numbers also, there is some kind of a good trend coming in. Just look at the EBITDA number, the net profit has also jumped in. This was a loss making entity in FY23, and see the growth coming in. But you must be wondering, this is just FY23, 24, 25. But if you look at the Q3 numbers also, they were really strong. The revenue, you could just show the PAT, EBITDA, all of them doing well as well. That means net the strength is very strong, and like we could just show the margins picture also to give us the entire picture of how the business is moving around. And this is where the magic happens, and the company is continuously growing, and it's around 23% of this margins. Is this a sustainable growth going ahead, or is there a more chance to touch that 25% mark? That's the question to be asked. But net income statement is really strong, so I'm going to give this a thumbs up when it comes to the margin trajectory and the income statement. Let's look at the balance sheet and see what has happened. Remember, company has come out with its IPO proceeds have been there to reduce the debt also. Largely most of the business happens via working capital. That's the debt financing which happens, and we see a decent cash balance is also there, around 151 crores, and we can see that the overall D ratio has been maintained for a company which is actually in its growth perspective as well. So net right now, let's give it a neutral rating for balance sheet and wait for a couple of more years to judge the company properly. But post its IPO, the company has managed its balance sheet ratios quite nicely. So we have spoken about income statement, we have spoken about balance sheet. Let's also talk about the cash flow segment, what it actually means. And let's just get in the cash flow numbers. Remember, the cash flow numbers have improved a lot. In the third quarter, there was a good 35 crore inflows coming in, and the way the turnaround has happened. So from FY24, which seems like an inflection year, things have been moving, and you see the overall strategy numbers have been really strong. And if you could just see the numbers, remember this is the cash flow. There's just an error on that top. It's not the balance sheet, it's the cash flow. That is where we see the good momentum coming in. Now, yes, we can see that. So it's a strong thumbs up when it comes to the cash flows. Let's also talk about the return ratios. The last time in KYC also, the company had a great numbers coming up, and now the company is actually backing it up. From 21% in FY24, the growth is coming in at 30%. And then we see at 34%, look at that 9-month FY26, and that is where we see the good return ratios is coming in. So will this continue going ahead, or will it taper off? That's the big question to be asked for Rubicon Research. But overall, as of now, it's a strong thumbs up as well. Apart from return ratios, the shareholding, last time we just had the October shareholding, but now we are understanding largely it's unchanged. Promoter having a 60% stake, FI is unchanged, DI is a slight increase in it. We need to give it more time to judge the company, but net nothing much happening here to highlight. So I'm going to give this a neutral rating to shareholding segment. But let's talk about street cred, and the company has done well. Why I say that is because from its IPO price, the stock is up almost 90%. And remember, last 5 to 6 months, there was so much stress, especially in the small cap, mid cap. Of course, recovery was there. And year to date basis, also the stock is up 35%. So जिन्होंने IPO में पैसा लगाया या IPO के बाद भी पैसा लगाया, दोनों को पैसा बना. So net, it's a strong thumbs up as well. But let's talk about valuations, how things pan out. And I've taken the ratios, expectations. Currently, it's a bit expensive, so entering in the stock might not be a good idea. But overall, if the earnings do well, at a FY28, it's trading at 35 times of P. So that's something to look out for as well. For long-term basis, definitely the stock looks good. That's what the analysts and the traders say. But short-term, do look at the valuations. It's still on the higher side. So right now, I'm going to give this a neutral rating. So we spoke about valuations and all the other 6 parameters, but the last parameter, but which it is certainly not the least, is the outlook parameter. They have entered India's central nervous system formulations market. That's a pretty big market. And also the benefit is coming in from the appreciation, the dollar appreciation, because they're billing 98% of them happens in that. Remember, pharma as a defense is also good. A defensive play is also good because of the volatility in the current times. Raw material packaging costs might be higher in the fourth quarter, but maybe that can be offset from dollar realizations and the new launches in the generics, especially in the nasal sprays. That is something which you'll be watching out for. And the operationalization timelines of Pithampur plant, this is very much important to show the entire perspective. So net right now, short term, there might be a little bit hiccups, but long term, the story is good. So outlook, I'm going to give this a neutral rating. But overall ratings, what's the total number looking like? And from last time, I feel it's a very significant improvement we have seen in the company in KYC. And that is why we get you these stories and we revise these stories back only for you. And see, look at that, 3 thumbs up coming in for income statement, cash flow and return ratio. And interestingly, because of the run up in the stock, the valuations are neutral right now. I wouldn't say it's very welcoming, but the outlook and the overall street get still remains decent. So overall, let's see the entire rating parameter of how much the moment happens, and it's around 6 out of 8 I have given, and this is largely on the higher side of the average ratings which I give for KYC. Very interesting. And let's also talk about the management, what this management is all about. We have Parag Sancheti, he's a CEO at Rubicon Research, and a little bit of details about him as well. Interestingly, he's been CEO in the company since May 2019, but associated for the last 13 years. Interesting trivia about him is also where he has worked and leadership roles. Of course, Avishkar Venture Management Services there, but something which I liked on his strategic background is the Tata Strategic Management Group. Hi Parag, it's always a pleasure to chat with you. An interesting announcement came in last week also. That's where my interest came in the company. And of course, this is you are returning back to KYC also, and this time it's much better performance and much better discoveries coming to the markets, and a lot of stakeholders are actually watching your company right now. We want to understand about this new entry into the CNS. Correct me if I'm wrong, it is Central Nervous System formulation market, and Arena Life Science acquisition which is at play. Explain us this acquisition, explain us what are the incremental benefits which can start coming in for the company, and how will you be funding this?
Hey, thanks Sharad for having me on the show. I think I did the first TV interview with you, and again happy to be back on the same show. The acquisition we've done is part of our global playbook to be a prominent player in the CNS, or the central nervous system market, which includes neurology, neuropsychiatry, neurodegenerative, pediatric neurology. So it's a very broad segment. So we are looking at participating in this space, and which has been our stated vision of becoming a therapeutics company globally. And that's where the acquisition fits in, because India is a very growing market. The diagnosis on the CNS side has been increasing tremendously. And what we want to do is, as we are developing innovative pipeline products, not only for US, but we want to get these products to India and other markets where we can be recognized as a global leader in the CNS space.
Right, Parag, but we want some numbers, what kind of incremental benefit you can actually get from this. Is there anything on the pipeline? Is there any number or a range which can be, aiding the company going ahead?
No, Sharad, I can't guide you on a specific number, but I'll just give you a philosophy or acquisition, right? If you've seen over the last 4 or 5 years, whenever we have done an acquisition, we've done it for capability. The numbers of Arena Life Sciences is already stated. The 9 months number around 57 crores is already, which has been part of our public release. What we are going to use Arena Life Sciences, more importantly, is to use this platform. They have a reach to 4,000 prescribers. They are fairly strong in UP, Madhya Pradesh, Maharashtra, some southern states. We will be using this reach to 4,000 doctors to actually give the products which we have developing for other parts of the world to take them to India, because we think these needs of or these innovative products will find a lot of value in India, and also patients will benefit with these therapies which are not currently available.
Right. Parag, let's understand a little bit about your model also. There is contract manufacturing, there is something which you are also doing, and everybody is looking at the timelines for your Pithampur plant. Now, the Pithampur plant timeline is first quarter FY27. Just wanted to understand, this is the exact time which the completion of the commercial operation will start. And secondly, I just want to understand one more thing, is how does your business model change now? Contract manufacturing ज़्यादा रहेगा या आपके खुद जो बनाएंगे वो ज़्यादा रहेंगे? What's the entire thing? That's the one big query coming in from the investors.
Yeah. So I'll just clarify, Sharat. I think we are not in the contract manufacturing business. All R&D we do it for majority of that is we are doing for our own products. Only in some special cases where we see strategic value, we do co-development or some kind of contract manufacturing for companies. But you should be looking at Rubicon as a company which develops and sells its own products across the world. So I think that's one thing I would like to clarify. If you look at the business, from 2015 to now, our revenues have grown 32x, primarily driven by three things: our product portfolio, the choices we make in terms of what products we want to do, the science and the quality behind that, and third is great execution. So these are the three things. Coming now to the Pithampur piece, I think can't share anything specific because currently we are under the silent period. But as what we had stated in our previous investor call or results announcement, we are on track as per the guidance we've given in the past.
Right, that's an interesting take. But Parag, just wanted to understand, in the third quarter you had mentioned, very interestingly that the gross margins, they were under pressure. And I was just reading your third quarter. I'm not asking anything more. That pressure will continue in the next 2 quarters, 2 to 3 quarters. That was the statement coming in. Why is that pressure coming in the gross margins?
So I think I'll just speak on that because it's what we had disclosed even previously. Just clarifying that is the fact that we've been experiencing very, very high demand for our products, and if we had planned that there would be a certain amount of demand, I think the demand has been even larger than that. So we've had to do outsourcing of manufacturing to ensure we don't we satisfy our customers, all patient needs are met. So when we outsource, obviously the margins get compressed a little. But as we mentioned in the last call, in the long run, the idea is to get the in-house manufacturing. So that will be sorted. But having said, though the gross margins came a bit lower, our EBITDA margins were still intact.
Gross margins might be lower, but the EBITDA margins, they have been intact. And that's true. The numbers also I've seen. And of course, I cannot talk about the numbers. You're in silent period. But definitely when the fourth quarter numbers come out, I'll be asking you the question, is this sustainable or not? But there's a very high ROC number which your business is giving. But could you share a little bit about, not the exact word, but at least any product launch pipeline for FY27, anything, which areas you might see a good positive corporate development coming in? You do not have to be very precise, but just give us a flavor of it.
So we've been, if you've typically seen, Sharat, we've been launching around anywhere between 12 to 15 products in the year. As we, from a pipeline perspective, we are always very, very, we don't give any specific product names from a competitive reason and not misleading the investors, because the business of pharmaceutical formulations is a complex one and we don't want to mislead anyone. But I can only tell you, seeing a past record, you can just see the kind of business we are seeing for our existing products where, we've seen good demand. I think even coming ahead, the products we try to choose, or we do products where we see there is there's some angle or some unmet patient need which we are solving for. If you look at our last time's numbers, are almost 32% was coming from specialty products, the gross profit. And specialty, just to define for the broader viewers, I think are products where we have one or less than one competitor in that product. So, a significant part of our gross profit, even last quarter, was coming from specialty products.
And this is expected to sustain going ahead, especially for the specialty products, the ratio which is there, or it's very dynamic? I'm just asking on a business perspective model.
Now you can see, so I don't want to give any forward-looking statement, but Sharad, you can see a previous track record, and that has been there in our DRHP and also in the last 2 quarters, it has sustained.
Okay, so it's pretty much interesting to talk about it, but geopolitical impact is something which we need to address, because of course देखें तो दवाई के दाम बढ़ गए हैं, raw material हो, packaging cost हो, and it of course hits the pharma players also. Of course there is an offsetting angle because of your dollar billings. Just wanted to understand the ground reality. The costs have gone up and this impact might spill in the first quarter also.
So again, I'll not link it to numbers. I'll just give you a general macro feel what is happening right now. Generally, as a company which is focused on the US markets, we do have adequate supply chain, because you can't. We at least have 3 to 4 months inventory, and for even some products might be even longer than that. But what happens is, with the war situation, I think there are 2 or 3 things to watch out for. The whole trade angle, right? The freight movement and all that gets impacted, and it's already got impacted severely. Second, when you look at the pharmaceutical sector, the starting material is for solvents, for lab chemicals, is crude oil. Now, if you look at crude oil and you've seen the prices, that's a stated fact. It is definitely impacting the broader pharmaceutical market. And we feel that as we even if peace prevails, I think at least for the next 6 to 8 months, the supply chain will not come back to the normalcy which it was running before the war. Having said that, obviously we have a lot of mitigation plans which have already we have worked out or in play. But yeah, there'll be definitely impact either on availability or on the pricing, which will be there.
Exactly, and of course you spoke about a stable pricing in the third quarter, and of course we cannot discuss the pricing trends right now. One side, there is a supply chain impact coming in the industry for 6 to 8 months, and that's a very honest view coming in from an industry player like yours. But just wanted to understand about the inventory levels. They were very high on the third quarter itself, and you had mentioned and that these levels might be on the higher side as well. So what's the update on that? Is the same thing in Q3 which you had spoken about?
Yeah, so not commenting on the specific number, but I would just say that this is one of the reasons, right? Because our markets are United States. There is a certain time to take the products from India to US. We've already seen post-COVID, the shipping has not been the most efficient one. We have had experienced a lot of, so we have kind of, built a decent amount of stock for products in the United States for our products. As we know, that's again publicly disclosed, we have our own distribution and logistics company there, which allows us to actually
pretty much interesting.
Hold a lot more inventory as compared to other companies who actually outsource that. So obviously those all factors help us in the long run of doing the business, and
Parag,
mitigating the
exactly. Parag, one interesting thing about your company I noticed, I was studying it during your IPO also, was your R&D cost as compared to your operating revenue. It's almost double of this player. To understand the cycle of this, how does this work? It's in your philosophy of Rubicon Research that R&D is very much important. Now, what is the cycle for it, when the benefits can start coming in 2 years, 3 years? Any numbers for it? It's very technical, so I want you to make it very easy for my audience.
Yeah. So, and again, this is thanks for bringing out. I think, again, that was a part of our presentation, which we disclosed in the last quarter. And we've talked about R&D productivity. Again, going a little stepping back on our philosophy, Rubicon has developed or is one of India's only company we developed from R&D to commercialization. All the other companies either developed as API companies or India domestic formulations companies and then have gone into the US. But Rubicon is unique because our strength and our DNA has been always science, chemistry, quality. These are the 3 parameters which we have actually worked on. So for us, all this growth, which we have seen 32x growth in revenues over the last 12 years, has been purely driven by research and development and the execution of the product portfolio we have chosen. So I think we've put a chart in our last time presentation. I don't right now have handy, but I can just explain you how the logic works. Is whatever R&D which I spend today, or I've spent over the last, say, 1.5 to 2 years, only comes to play after, say, roughly around 24 to 30 months. And when we have seen this ratio, so if you take that $1 of R&D spent to the multiplier on the revenue, say after an average 3 years, we've seen that that number has moved up from 3x to 5.5x for Rubicon from the past data. If you look at the last data, again, this is publicly available. And so that increase in productivity has been a tremendous, what you're seeing in the
Parag,
return
you
ratio.
explained us a very important mathematical formula to judge your company, and I will be using that in the future when I analyze your company. But Parag, it's always a pleasure to talk with you. Thank you very much. And from the last time's KYC till now, there has been a good improvement in the company, and that is where the alpha we get for all of our audience. It's always a pleasure to talk with you, Parag.
Thanks, thanks.
So that's the management of Rubicon Research. Earlier KYC ratings were on the lower side. Now it's on the higher side. Company has passed the D-Street's first test. But of course, a lot of things are there for the company to prove going ahead. But for interesting stories like this, stay tuned to NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. One teacher, a million destinies.
One of the most powerful concepts when you're working towards a long-term objective or a goal is incremental change. Take, for example, running a marathon. If you've decided one fine day that you want to run one, you don't wake up in the morning, put on a bib and set out running. You will start, depending on your level of fitness, with a 3-kilometer run, then possibly move to a 5K, then a 10K, and then someday you'll feel confident enough to say, I'm going to run a half marathon today. And chances are that in your journey working towards that full marathon, you will hit a plateau, but then you will eventually move past that. How does all of that relate to money?
Some of you would have guessed it already. It is the SIP. But actually, I want to talk about the genesis of the SIP, which is dollar cost averaging. And it's a very, very old concept. So we'll talk about the efficacy of it. We'll talk about the history of it. We'll talk about the arguments for and against in today's context, because a lot more people today are talking about the fact that SIPs have not done too much over the course of the last 1.5 years. This is MoneyWise on NDTV Profit. My name is Alex Matthew, and my guest today is Sahil Kapoor, Head of Products and Market Strategist at DSP Mutual Fund. Sahil, thanks so much for taking the time.
Thank you, Alex. Thank you.
So, I must say that the reason I wanted to speak to you is because of certain data that you put out, certain information that you put out on your own handle, and you keep talking about this. What I love about it is that you have the data to back up the statements that you're making. So let's start with dollar cost averaging.
Sure.
And I was surprised to find that it was in the early part of the 20th century that this came about.
Absolutely.